Okay, break a leg.
All right. Good morning, everybody. Good morning, Neil. Thanks for saying hi. Good morning. I'm sorry, good afternoon, Carvalho. It's good to see you. I'm excited about this session too. We'll go ahead and get started. I do have to do a few things in terms of kind of getting everything ready today. So let's kind of get on to the business of starting today's session. Today's demonstration is designed to instruct you on using MetaStock and accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as an investment advice or the solicitation to buy a security. That being said, my goal today is I hope you learned something. I hope you come away with a few things. So maybe if it helps your trading just a little bit, it's going to be worth the time that you spend here. So thank you for being here. As you come in, make sure to say hello. It helps a great deal. If you're watching us on YouTube, make sure to like and subscribe. And I would also strongly recommend that at some point today, you take a little bit of time. I would do it right away. Take a little time and click on the linked message at the top to register for the event, because that way you'll be eligible to win prizes, which we're going to be giving away again all day today. So if you haven't done that, register. I'm going to pull a fresh list once we get going here, and you could win a prize. So I do want to say thank you. I've been talking about Stocks and Commodities magazine and how good of a magazine that they are, how great of a partner they are, how supportive they've been since we started doing these events for 14 years. You can find out more about the Stocks and Commodities magazine at traders.com, and you should. You can get a magazine every month that has all kinds of really good technical analysis articles. You can learn a little bit all the time, and I think you should always be improving. And that's a good way too. I also want to recommend that if you haven't already, join the Traders Forum. We have a bunch of people that have joined as a result of the conference. If you join the Traders Forum, you get invited to chat with other market traders. They're talking about stocks they're interested in right now. You can learn about the markets. It's designed to be a community of traders helping traders. We're off to a start, aren't we? You can go to thetradersforum.com. You can sign up for free, and I'd love to see you there. So do it. We are, of course, MetaStock. MetaStock's been rated the best software in its price category. It's been rated that for 32 years in a row. We will talk about the special offer we have at MetaStock. I appreciate everybody that's already taken the time to kind of sign up for the extended trial where you buy a month and get the second and third month for free. I hope you do that. I think it's going to be beneficial for you. It's beneficial for me. As I said, we'll talk more about it today. For the first time ever, our first guest today is Roman Bogomazov, and I'm sure I said that perfectly. It's Roman's first time at the MetaStock Traders Conference. He comes highly recommended by actually Rob Booker. He's going to do a great job there. He's going to talk about the foundational knowledge of the Wyckoff method. He's been he has taught for more than 10 years as a professor at the Golden Gate University. And he's been working as a principal instructor at the wyckoffanalytics.com. So without further ado, let's go ahead and get it started. Roman, I can see you already. Good. Yes. I want to say hello to Neil, Carvalho, Gary, Paul. Welcome from London, Iqbal. Good to see you again. I think that Maverick, good morning as always. All right, I've said hello to everybody that said hi to us. Roman, let's go ahead and get you started. I'm going to go ahead and stop sharing my screen. All you have to do is click on the button at the bottom that says share and just pick the right screen. That's all you have to do.
All right. Here we go. Let's share this screen. Okay. And okay, can you see my screen now?
I can see your web. Yes, I can. Yeah, I can. What I'm going to do is I'm going to turn off my camera. I'll be here if you need me.
Jeffrey. Did you give me the function of the pen?
You should be able to. Well, we can see where your pointer is, and if you load it into the desktop version of GoToWebinar, under the tools there is a pen. As long as you're the
I see
presenter.
it. Yeah. Okay.
Right on.
Okay. Got it.
All right, I'm here if you need me. It's your turn. Let's go.
All right, great. Well, thank you. First of all, really would like to thank Jeffrey for getting me here. He was prepping me up for like the month. So just really glad that I'm working with him and just had an opportunity to work with MetaStock team and just the company. Really enjoying the experience. So thank you, MetaStock, for having me here. Also, want to say that I love stocks and commodities. Any chance you have, guys, to read anything from them, it's great because they invite a lot of great people. And also want to mention Rob Booker, who is the responsible guy for my appearance here. So thank you, Rob, and he was the speaker on the day number one. Today, I'm not going to be talking about indicators. This is not what we do. I teach and I trade Wyckoff method and also chart reading. Those are two different things for me. So for that type of skill development, you only need three things: price, volume, and time. Sometimes you could derive the sentiment from the price data at the extremes, but that's kind of secondary. So with that, why don't we just right away jump into the chart and I'll show you what I do. Along the presentation, I will be introducing some of the principles that we use, whether in the chart reading or in the Wyckoff methodology. And I do have the chat on YouTube. I see some MetaStock comments here, but I wonder if I could see some comments from people. So if there are any questions, I could answer. Okay, great. So let me double check. Okay.
Roman, to see the comments from the participants, there's a little question mark at the top right, and you click on that, and it'll show you the questions.
Okay. Sorry about this, guys. I do use GoToWebinar, but this is some kind of new version that I'm not familiar with. So I apologize for that. But once I settle in, okay, let's look at this. Still. Okay. Uh-huh. All right.
Roman, if you prefer, we can monitor the questions and just, and when you ask, we'll tell you if anybody has any questions.
That would be wonderful. Yeah, just actually, yeah, I see the chat. I see the questions now.
Okay, good.
Here we are. Awesome. All right, guys, let's dive into this, right? So April low for the whole move up. We're still up. We have not broken the structure. The main line of defense is this. There is a lot of supply that came in at this point, and this is where looking at Nasdaq E-minis. This is usually what I intraday trade. I just do a lot of intraday trading recently. So you see a lot of supply coming in. This is one of the points where the opposing force, as we say, let's say like in chart reading or in Wyckoff methodology, is showing up. Now, the tendency here by the traders is to immediately take a short position. And this is slightly incorrect. You might have a limited trade here, which is we would call a change of behavior type of trade. What is a change of behavior? Something different, right? So looking at these two spreads, look at the size of the spreads, right? Look at the volume signature. Where is the last time we had that type of volume signature? Somewhere in this area right here. What kind of spreads to the downside did we have at that point? This. This is more, like aggressive type of spreads. This is more limited. So with that, when you see something like this, and you're thinking supply, so I need to sell, at least mentally, psychologically, try to go to a different decision. Try to ask yourself, should I be trimming here at this point, right? So trim is a great option at this point. And then the question becomes, but how much? How much are you going to trim? So the answer to this question, we usually go to the background. What's behind you immediately? Well, you have a very strong demand is coming in. You have an immediate strong response to this. This was probably my favorite day to trade. This was the money maker. Oh my gosh. If you were in front of the news, oh, what a trade. Beauty. Then we have a test. And look at the construction of the test. Look at the spacing here. So this is just a 50% retracement. And obviously, you could use all of the tools that MetaStock has. I mean, I'm looking on both sides, like it's just like, wow, so much. So you could do your fibs here. Usually, the preference for the test is to go to, obviously, to stay high as possible. We would prefer a test in the upper part of that spread, right? But even if it comes to 1/2, that's totally fine. Then the next thing that we would be thinking about here, about the background, how do we go through the levels, right? So we see that the capitulation act, the stopping action, the selling climax, however you want to call it, on the increasing spread, on the increasing volume signature, with the gaps, going into the exhaustion right here into this bar, and then having this type of response, contracting in supply signature, going to the bar that is the lowest among all of the down bars into 1/2 of the test. Perfect setup. So this is kind of like a fundamental setup that you always should be thinking about in your trading. This is bread and butter setup. Demand is improving, supply is deteriorating disproportionately to what the reaction was before. And the way how the price behaves after that, right? So we have spread that is not aggressive to the upside, but it's very consistent. Volume signature is increasing. We have a gap, sign of strength. Supply is coming in at the correct place. Reaction is small. The response to that is the expanding spread into the resistance. We're testing at the higher level. Supply comes in again, higher test, attempt to go, test on the structure here, and then we go into the gap and look out of the gap how we go. Again, spread is increasing. The extension of the gap is above the level and extending almost 100% of the body. So all of those are elements of strength that we see from our chart reading skills. Now, there are quite a few concepts here, Wyckoff concepts. One of the most fundamental Wyckoff concept is the concept of effort versus result. If I would take only one concept from Wyckoff methodology, that would be it, because it basically gives us an understanding on the relationship between supply and demand, and supply and how the price moves to the downside, and demand and how the price moves to the upside. It states if the effort to the result should correspond. If there is some divergence between effort and the result, then most likely we're going to have a counter move. So for instance, a bar like this, I just want to make sure that I see that. Okay, it's right here. So we have a volume spike right here. Usually when volume is increasing, we say that there is a presence of the opposing force. In this case, after a move up, the opposing force is supply. So supply is increasing. Why would supply increase at this point? Well, looking at the previous price action at the same level, we see how we have a gap here. So there was a lot of selling coming in into the final capitulation act right here. It's natural that at the same level of selling, sellers are going to come back and supply is going to increase. As supply increases, we do have a reaction. The reaction is hidden in the bar itself. The price goes down, comes to the previous levels, testing this bar right here, and then we just go up immediately. So think about this concept of effort to the downside increased. Yet, what is the result? And this is the fundamental question as well. In chart reading and in Wyckoff methodology, what is the result? Did it damage anything? Did it break the structure? And as we could see, nothing was broken, right? So we're testing this bar on this structure right here. We're dipping below and then immediately closing up. So here is your example of the effort versus result. As I said, this is extremely strong. Everything on the top of that is just testing. So test, next test, we have at the higher level. Again, we see how we are able to overcome and extend in the impulse of the buy-in. The buy-in now is not that strong, but it doesn't matter. Demand is so much stronger than supply that this trend is extremely stable. So as we come into the point of interest, we were discussing this area right here. What do we see? All right, well, we see that all of the reactions are somewhat limited. Supply is diminishing, it's exhausted. Demand is dominant but exhausting as well. So a reaction that is going to be, let's say, on the improvement of selling should be considered a point of a stepping stone action, a pause in an uptrend. At least once after this type of strength and this type of the reaction, you're going to go up. At least once you're going to continue the uptrend. So with that, very high probability that we're going to continue. And again, effort versus result. Spread is increasing, reaction is increasing, but volume is increasing as well. This is again the largest volume spike, since probably this area right here. So a lot of effort to push the price down, but nothing happens. And we go into the reaction right into the impulse, previous impulse. All of this is just exhaustion of this. Change of behavior. And now we're just kind of dancing in this trading range, right? So we have our three tests. Again, principles behind effort versus result. But now this is suggestive of something, right? So looking, let's say also another concept here from Wyckoff, looking at the character of the reaction. So in these two cases, we have trading ranges, right? Both have elements of strength. The change of behavior is pretty limited. The next test is going to the higher high. So we most definitely have that strength. Look at the final test in phase C here and look at this phase C. So we see how this area right here by the character is starting to deteriorate more than this structure right here. So supply is improving. And here is another mental mistake that I see in our trainees. We have a training program, so I spend a lot of time with our trainees, either intraday or swing trainees. Those are, the people who are trying to attain the professional retail type of status where they trade for a living. So that's very exciting for me to be always with that group. So whenever we see something like this, character of supply starts to improve. What does it mean? It means that we're close. If supply starts to influence the price this way, then we are close. But Again, demand is still dominant over supply. So with that, you have to see how the next leg is going to unfold. What's going to be that character of the demand and supply? What kind of extension we're going to have here? What kind of result we are reaching? What kind of testing we're going to have? And what we saw after out of that formation is still strength. I mean, definitely it's not like this, but the uptrends as the downtrends unfold in a specific way. There is like a diffusion of innovation model describes it the best. The early adapters, the big financial people are going to all come in here. On the way down, they don't wait. The value is already there. A lot of the early adopters, hedge funds, mutual funds, pension funds, insurance companies are going to be coming in on the emergence of the trend. And then everything else is kind of like late participation, or maybe like mid to late participation. Early participants are taking profit here. You know, they have enough profitability here to start thinking about, you know, scaling down. And that's what institutions do. You know, they're going to take profits on the way up. You could see it here as well. All of this, you know, spikes of volatility are associated with some kind of taking the profits event, selling some of the positions. All right, this was a very interesting bar. Again, look at the volume signature on par with this. And looking now at the spread, look at this bar and look at this bar, very similar. Now, look at the follow through on this bar right here, right? So it's an up bar, closes barely above the previous close. This one is better, right? So that suggests that we're still probably going to go up. But now, if we would be comparing also the changes of behavior or how the price behaved, let's say in the areas of the reactions, you could see that this area right here is where supply improved the most. So now this becomes a warning, a very true warning. On this improvement by supply, you're probably going to go into some kind of exhaustion move at the end of it. So what do we see after that supply coming in and having that type of improvement? We go up, but it takes time to get out. Look at how quickly we're taking off here, 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 and here. This takes time. Again, ability of the supply to influence the character of the price or the result of the price. We also have the evidence of the supply in these bars right here. Relative to everything, let's say here, we have almost like that volume regime change. So what is it? It's the supply that comes in, demand there as well. So we go through the principle of absorption. And I'll talk about this in a second. But it's heavy on supply. So therefore, supply is increasing and that depletes demand. So both forces are kind of getting into the exhaustion phase. Even though we have here the gap, but look at the two up bars at the top. The bars are compressed. We have an ease of movement bar and we have a low, I wouldn't say like no demand. Oh, look at this. It's actually this, right? So maybe a contract change here. So this is a no demand and then an ease of movement bar again. So quite a few concepts here. Let's just dissect this a little bit. Absorption, what does that mean? It means that if the opposing force is coming in, increasing its presence, the dominant force comes in and also increases its presence as well. Through this action, the dominant force absorbs the opposing force, and whatever left from the dominant force. So let's say like before the absorption, the dominant force was like at 100%. After the absorption, let's say the dominant force is at 50%. this is still dominance. This is still demand over supply. And that's why uptrends continue, because of this pockets of absorption where supply comes in and demand is capable of absorbing supply, and that pushes the price up even if the volume is going down. That's an ease of movement concept as well. All right. Any questions? Okay, I don't see any technical questions. And let me know, guys, like if you're with me, if you have any questions. So that's why, I started my presentation with this line right here, right? So this is the most important line. There are a lot of testing around it, and very important testing that have like that volume profile that is, all spiky, right? So that's not by coincidence. So the key is kind of like protecting this line and this area right here. And, as we came in here, I'm just going to give you a little bit of what I see currently, and then we'll go to the intraday. This bar right here, obviously very strong bar. I would prefer the volume to be, rather slightly higher. This suggests some kind of ease of movement here. I mean, looking at this bar, let's say like on the previous attempt to go up, right? The first green bar is not as strong, but both of them do not overcome the high. On the S&P, we have, like a more definitive close above the previous day high. So that's more strength right there. We also see some buying on the way down. Volume is increasing. And here's that concept of effort versus result. And we're definitely, if we were to compare this to this, different legs, as we come to this point, the response to the upside is better. I want to show you what I did on this day. So coming into on the daily, on a higher time frame, into this level, as we come, what are we gonna have here? Like in terms of like a pure statistical logic right here. Well, every time we off the top we would come, we would have some kind of response to the upside, right? So here we have it again. So my thinking was on that day is that most definitely we're gonna rally. And I was thinking, where could we rally? Well, probably somewhere here, like into this level, or the level of the break. The level of the break was probably after this type of strength is not that type of attractive. I wanted to see a continuation, an ability of the price to overcome almost immediately. So something like this, where we have consecutive updates, right? But instead, what do we see? On the next day, and let me, how do I do that? How do I, okay. I'm gonna increase the size here a little bit. Yeah, perfect. Okay. Look at this bar compared to this one. Volume drops, so there is less effort by the demand. And then the result drops, right? So the spread in itself is about times 2.5 less. The body is times 3 less. And this is minus maybe like 30%. So immediately demand shuts down. This is not what we should have when we are wanting to see the price to go freely up, right? Without, a big effort. And then immediately we have a down bar, and then again, diminishing demand. So with that, the expectation was that now we're going to have some kind of test. So we're going to have something like this, something like this, something like this. So, and on that test, the expectation was that we're most definitely going to increase the spread. We're going to be better than this for sure, but in this area, probably more like this bar. So that suggested bias down. And obviously there are some global things here, like for instance, we see an attempt to upthrust. So this is a local upthrust to this, but it didn't go here. It didn't touch this. So in itself, it's a structural weakness. And in itself here, you still have that slope to the downside. So you are preconditioned here to have a high probability event to the downside with the bias down, with the spread increasing, with the potential volume increasing, and having some kind of trending day. And those are the best for the intraday traders. You know, like you always want to be each day in the trending day. You don't want anything else. On the 30 minutes, so multiple time frame analysis, and I'm sure with such a amazing lineup of speakers, and I saw somebody was talking about multiple time frames. This is one of the um, most difficult skills for students and the trainees to build up the repetition in. And there is only one thing to do, and it's just like reps. You know, like you have to repeat this process multiple times. If you are on that intraday time frame and you need to go to a higher time frame and see everything. I love 30 minutes. We usually in training use 30 minutes for the intraday. Just basically for me, very simplistically, like to that point on that day right here, what is the dominant force here? I'm still seeing lower highs and lower lows. That's how simple it could be, right? So then I would go and I would look at the structure of the move down. So I see some kind of structure here. Here is the first break. Here is the second break. Here is my zone where I would be expecting first extension of the next impulse, test, test, test on the improved demand, impulse again. So, and I'm kind of observing the impulses, right? So this is very important for me. So here's my next level. So now I kind of see the levels. I could trade from level 1 to level 2. I could trade from level 2 to level 3. And by that, I literally mean travel from one level to another, trade from one level to another. When you start seeing the structure and all of the levels, you kind of see the systematic way of how institution using, you know, like specific levels of values of being overbought and oversold. The mean reversion trade is built into this as well. And then you could start seeing, you know, like let's say the character with which the price moves, looking, let's say, at this first initial impulse and this impulse. What would you say? Is supply strong? I'd say like it's improving. It takes only one bar now to travel such a big distance. We kind of like seeing that the spread is increasing, so supply is most definitely improving, suggesting a continuation at this point. Now, as we break the next level here, we see that the extension starts to limit itself, right? Supply is diminishing, and we're seeing how the spread is also starts to diminish as well. So the character deteriorates. We now understand that we're probably in some kind of exhaustion phase. Still, supply is also extremely weak, not being able to touch higher levels of the breakdown of the impulse. We have further deterioration, shortening of the thrust, and then we have a much more favorable area right here where look at the supply in the pre-market, and then during, this is still pre-market. So US session opens up here. Lots of strength localized change of behavior, suggesting that we could retest. Where to? Well, again, to me, I'm just like the simplicity of it. This is the level. So if I'm coming in on this day, let's say like I'm intraday trading or I'm swing trading, my entries are going to be all long, number one, because I know that I have my levels that would suggest that at least I have a trade up to this point. So this is my target number one. And then this area right here would be my target number two. Now, target number two reached on the day after. So I might, coming in on the next day, I might be thinking like, yeah, there is still a target ahead. But on this particular day, long, I'm usually on 3 minutes for the points of entry, unless the volatility is high, like on the Fed day or something like that. And then I would be looking for the dominant force trades. I would not be thinking about any of the counter trades. There is a mental trap about that counter trading trade, and I would urge you, for those of you who are like seriously trading, like, and you encounter this type of question, like, what type of trader I am I like a dominant force trader? Am I a counter? Am I both? How does that influence me mentally? How do my, let's say, like, what are the stats between my trending and the counter trades? And like, there is a lot of information there that, like, I personally like to look at. And there is always like adjustments that I'm making. Sometimes I observe that I'm doing a lot of counter trends, and psychologically there is a reason why we do that. So the key is just to notice, adjust, and stay with the trend, because like on a day like this, what is the trend? To the upside. So you're taking this. Anything like here in between is just not worth it. You're gonna be distracted. You're not gonna be focused. So the key is just to be with the trend. So again, coming into this day right here, expectation that the spread is going to increase on the daily, that we're going to retest at least this level right here, because this was an impulse right here. This was the test. This is an attempt to test, and this is the change of behavior locally into the lower high. And so agenda here for that day was to be short on the buys, to be actually holding your trending trades longer. So the duration of your trades should increase. Your targets also should increase, just because it's a trending day. And again, like, the biggest target was this zone right here and the beginning of this impulse. So with that, let's look how the day unfolded. Okay, so this is the 3 minutes chart. And again, usually I'm here, kind of like, this is my process: daily 30, then 3, and this is what we do in training as well. Into the localized climactic run, there is no continuation, spread is increasing, no demand, supply is still dominant, even though not as strong before the open, first initial bar of the open. One of the most important vibrational bars for the US session, the open. There is a discounting mechanism that starts to work between sellers and buyers immediately. All of the orders are being balanced out. And from the supply and the demand point of view, there is a battle. Who's going to win? And you want to see the winner of the battle after some kind of depletion of one force. So in this case, this bar right here, the inside bar, small spread, there is no body, it's all compressed. It comes after an attempt to go up on the open, immediately negated by the lower volume signature supply, which suggests ease to the downside. Then we see another attempt to go up, and the price just is being compressed into the larger supply tail from the high to the close. So that's an element of the supply. And then after that, demand contracts completely. So this is a beautiful no demand bar. No demand bar is something that suggests exhaustion by demand. And one of the things that you still have to ask yourself, what is the background? Bearish. So we want to enter on this bar or on the next bar that should be representing some kind of ease of movement. If you take the volume here and here, and if you want to understand ease of movement a little bit better, come to our classes. We're going to start the new semester on April 20th. So you could go to our website and sign up for the Wyckoff trading course, part 1. This is the flagship course. And you know, this is where I spend a lot of time working with students. We go for 15 weeks, and the next semester starts on April 20th. So come in, you know, like I will be happy to work with you. You see what I'm doing or what, you know, our coaches, instructors are doing, and we have a body of coaches that, you know, are doing a lot of work. So this was the point of entry, actual point of entry. As the price goes down, you could assess, let's say, the character of the impulse itself. You could see what kind of extension below the break, below the level we have. You could observe some, you know, exhaustion characteristics where supply starts to exhaust and demand is coming in. As demand comes in, we don't have any significant damage. Our levels are going to be somewhere here. This is what we're testing. This bar looks like it overcomes the previous bar, but it's not an aggressive down bar by much. There is a lot of demand in it. So 2 bars of demand, the price kind of stays here. So weakness. Then again, supply tries to go down. Volume is still increasing. There is some demand is coming in on this bar right here. Demand should improve. The spread improves, but still, we're not overcoming the level. And then immediately after that, look into this area of the demand. Volume is going down, spread is compressing, lots of tails. That's the element of the demand coming in, and it produces, that's an element of the supply coming in, and it produces that compressed look with a lot of tails because it influenced the price like this. So now lowest volume, lowest bar, something akin to what we had here. But this was just at the open, so volatility is higher. This is slightly away from the open, so volatility starts to drop. This is a perfect second entry into the ease of movement again. So these entries are just kind of the same. So now, once I'm kind of loaded here, I'm just watching how the price interacts with the levels. So we see that the impulse here is most definitely extremely strong, good extension. There is no like big stopping behind some demand coming in. There is less demand now that comes in. So this is also a good sign. So we have the depletion of demand through the whole downtrend here. This is still down. This is still extending. Demand is coming in. It's actually deteriorating here relative to this. Also not big reactions to the upside every time we have some kind of bar that extends lower. Right here. This is probably the first improvement that we see by the demand right here on this bar. And Actually, this was my first initial trim. My exit was right here. So why am I operating, let's say, like on these bars? I'm seeing on the same volume signature as this bar right here, some kind of elements of improvement, right? So the spread is improving on the same volume signature, or the volume is increasing, and relative to the price movement, the spread increases in line with the increase of the volume. So again, it's that synchronicity between effort and the result. And I'm thinking here that as demand is coming in, and we see a lot of elements of the demand even in this signature here. So like when I look at the volume profile for the session, I could see where they are already starting to buy on the way down. This, more compressed look bars with the spreads, let's say like small or limited extension by the impulse bars, it's most definitely demand coming in. And it's big institutional demand because they don't care. They have, some kind of conviction that the price is going to go up from here, and they're wrong about that, on this particular day. And but that slows down the supply. That slows down the downtrend. That kind of shows us the exhaustion characteristics. All right, so here I'm out of the position and I'm done for the day. I mean, there are quite a lot of discussions that I have with the traders on what are like the best practices for being profitable and consistent. One of them is an emotional capacity to make the good profitable day and just to walk away and be happy about that. Why? Because if you would feel that need to stay for the rest of the session and still keep trading, you might have some losses here in this area. This is all chop. I mean, it's still somewhat readable. You could see how throughout the trading range, we have, let's say, like a change of behavior. This is the suggestion for the trading range. So basically, with these 4 bars, you're confirming that you are now in the trading range. Demand is diminishing. So with that, and also like the result of it is also pretty limited. It didn't go to this level or to this level, right? So it went to the first level where supply showed up again. Yeah, less so. And again, suggesting some kind of confirmation that we have a trading range environment right now. So now you know that majority of the time you're going to be spending in this structure. Can you trade it? Yes, you can, but why would you? I mean, like, go enjoy life, do something else. I mean, like, I have plenty of things to do, so I just shut down for the day, and this is it. The uh, top traders that I have talked to, and usually when conversation goes into like trading execution through your mental state, um, they describe this like made money for the day and I'm done as like this emotional neutrality to the event, ability to distance yourself from all of the work that you've done prior with the markets and during the session. And this is just a very high level of thinking in trading, from that perspective. All right. Let me just finish here. But let's say like maybe like we took a break, we went on a walk, and then we come back somewhere here in this area, right? So what do we see? Do we still have some kind of trade available to us? This is not the trade that I was thinking about or I took. This is just something that I saw afterwards. Well, as I said, most definitely we are in the trading range structure. As we look through the phases of it, right? So we see the stopping action behind the climactic action. And please note, there is no climactic volume signature here. In a lot of cases, this is just deterioration by selling into exhaustion of this whole move. So supply is exhausted but still dominant. That's how I would describe it. So with that, you are expecting some kind of, continuation here that's going to have some limited result, not like this. So you're expecting the character and the result to deteriorate after that type of long duration increase trading range. Within the trading range, you could see how supply deteriorates as well, right? So you see this supply is extremely low. That continues even as the price goes down. Suddenly, demand is coming in, these two spikes, and then supply depletes. Supply depletes. So demand comes in, supply depletes. What does it mean? We're going to have some kind of rally. Where to? To the level. So that's what I'm saying. In the trading range, there are definitely opportunities if you're versed enough, skilled enough to see that, and you could most definitely have high probability trade, which is a limited counter trade. Again, I think it's styles. If you like it, if that's your preference, fine. But I would want you to obviously see the dominant force. This is where the money is. So with that, we see how demand improves. This is one of the best rallies here. And then after that, look at this rally, look at this rally, and look how demand signature is just dropping again at the level. And you have supply coming in, supply coming in. So with that, now you know that the next trade is going to be to the downside. And you're at the level where you have an appropriate point of entry. Your next level is this. This is your trade. If you see improvement by selling here over this, and preferably over this, you could most definitely think that we're going to go to the lower low. And we see that demand is extremely anemic here, very weak. It's not the same as it was right here or here or here. So with that confirms that we're going to go into the lower low. And the inability to break immediately suggests that selling is exhausting, and we see how selling is not the same as this, but it also shows that demand is still, relatively weak, suggesting that we're going to locally break this structure right here. All right. Well, Jeffrey, I think that's it. If there are any questions, I don't see any questions.
We have, let's see.
I mesmerized people with
Can you
all
hear
of
me?
this, I think. Yes, I can.
Oh, okay, good. We do have a couple questions. Maverick wanted to know what is the best way to pronounce your last name, and I think he doesn't trust the way I pronounced it. That's all I'm reading from that.
Unimportant to the presentation, my last name pronounced is Bogomazov.
Okay. We also wanted you to show your link again. It was rather long, and we didn't get a chance to put it in the chat for everybody.
Yes, right here, I believe this is the information. I don't know if you could see this slide here.
We can see it, yeah.
Yeah, Wyckoff Trading Course, Part
Yeah.
1. And thank you again, Jeffrey and MetaStock, for the opportunity to just kind of show up, talk about the stuff that I love so much. I'm very much into the charts. As you guys could see, I spend like 10, 12, 8 hours per day with my students just going through a lot of charts. And this is where we start in Wyckoff Trading Course.
Part. I'm just typing this into the chat, so just let me make sure I get it all the way in here.
Yeah, and
okay, I'm going to check the link too before I put it over there.
If you guys have any questions about the material, check out the curriculum. We go into the depth of the chart reading and Wyckoff methodology. Also, on the higher level of our education and training, we have a lot of trading tactics, that obviously always goes into like the mental execution as well. But if I could finish my presentation, Jeffrey, with like one statement, and that is there are quite a lot of students that come to me.
Hey, Fausto, we can see you. There we go. Go ahead. Sorry.
Yeah. So one last thought, Jeffrey. A lot of students come to me and they show me my trades. In the last couple of years, with our training program, I looked at more than 20,000 trades. I analyzed more than 20,000 trades of different people, including my trades as well. And I see a lot of the tendency to put the blame, and this is a very strong word from me, put the blame on, I would say emotionally withdraw into the idea that my mental landscape or my mental state does not allow me to execute this trade the way how it's supposed to be. I would absolutely, just on my experience with all of these traders and all of the trades that I've seen and analyzed, think first technicals, because in majority of the cases that we found, like over 80%, people don't see something technically. That creates anxiety, goes to frustration, changes the mental state, your execution goes down. So just kind of take it, but for what it is. It is not your mental state 80% of the times. It's some kind of blind spot in the technical inability to see the chart clearly and to execute without the emotions, because it's the clarity of seeing the chart that's what creates that mental state, and you are confidently executing your strategy.
Right on.
Jeffrey, that was my last thought for the day.
Out of YouTube, Mozzie for Mayor said, I came for Roman. I love the depth in which he speaks on Wyckoff, and I've been following for quite a while in my young trading career.
Well, thank you so much.
Thank you, Mozzie, for the kind words. Roman, great job. Appreciate your coming in and spending some time with us. I'll go ahead and turn on my camera, and I will excuse you. Thanks for coming.
Okay, great. Well, thank you so much, Jeffrey. Again, thank you, MetaStock. Thank you, everybody who was at this presentation. Yeah, I'm just was happy to be here. Thank you, Jeffrey.
Right on. Thanks a lot. Go ahead and do this. Okay, I'm going to share my screen real quick. All right, well, let's get back into the presentation here. As we move on to the next speaker, which you're going to love, I want to say thank you to Stocks and Commodities Magazine. We already said thanks to Stocks and Commodities. We've said it a lot. I would recommend that you have a subscription to Stocks and Commodities Magazine. It's about, I think, $90 a year. I think that's the going rate of it. Not sure. But you can find out at traders.com. When you subscribe, they will send you a magazine every month as part of that. But in addition to that, I appreciate all the support that they've done. Welcome back, Fausto. We are, of course, MetaStock. If you want to get in on any of the offers that we have today for MetaStock, including the buy one, get two free, you can go to metastock.com/promo. I'd love to hear from you. If you have any questions, you can give us a call, 800-882-3040. You can also type them in the chat. We're avidly watching the chats. And I don't think we've missed any questions today. Go me. You can also call us at 800-882-3040. This gentleman that you're looking at, probably below me, is a gentleman by the name of Fausto Pugliese. And boy, do I have stories I can tell you about him. I like to kind of, there's a couple in particular. One, I know that he was on a cruise one time, and he was named the most handsome man on the cruise. Two, right before his wife had a baby, he did a webinar with us, so he has some of the best work ethic, but maybe not survival skills of anyone I know. Three, he does a great job of talking about level 3, which is what he's going to cover today. And 4, I understand he won't be covering his secret marinara sauce recipe. How did I do, Fausto?
You did well. I have to disagree. I do share my marinara sauce, and it is on my Fausto Home Living channel. So if you guys want to watch it, you can watch the short, you can watch the long version. Actually, I had one of the students of mine just ask me, he says, Fausto, can I get your meatball recipe? And I said, I'm just letting you know, it takes about 2 days to do it. But yeah, it's out there. I like to share, and I always like to give back to everyone, Jeff, because it is very important. Listen, God's been good to me. He's been treating us well. Mark's been doing well. And, you always want to give back. So that's why I love being here.
I think on our May session, so the next conference that we do in May, we should have you come talk about level 3, but then we'll do a special lunch session where you make some marinara for us.
I will. Well, it's called, we call it sauce. Depends on where you are, but we like to call it the sauce.
The sauce, okay.
The sauce.
You can just hit the share button, and I don't even have to tell you. I don't have to do anything. Just hit the share button right below.
Yeah, it looks like they changed the whole software, right? Looks pretty good.
Yeah, they wanted it to look more like Zoom, I think, but it's been working really well. I'm not going to say we haven't had any problems. That's just been fate.
I was a little lost. I was confused really quick, but it looks like we're okay right now. I was like, I was trying to get in there. I couldn't get in, but I'm glad everyone's here. But yeah, I'm ready to start whenever you guys are.
I can see you. I can hear you. I'm going to get out of the way. Your turn. Go. All
right. I'm off. All right. Well, welcome everybody. My name is Fausto. Like Jeff just told you, love coming here at MetaStock. Known him for, it's got to be over 25 years. Amazing how long you've been doing this. And like he said, I'm going to talk about level 3 and level 4 quotes. What basically I'm going to talk about is what's called the right of the chart. Now, there's a lot of people teach you what happens in the past, but what's nice about the past is not always indicative of the future. So I know a lot of us here, like what the topic is just explained to you, we're going to talk about entries and exits. We're going to talk about the risk factor. I'm also going to show you some stocks that we traded today. Today's been actually a really, really good day in the market. And I'm going to show you some of those moves and so on. Now, before we go move forward, like always, a little risk disclaimer. Just please don't go out there and risk what you can't afford to lose. There is very high risk in trading, so be very, very careful. And there's no guarantees that you're going to make money doing this. All right. So once again, thanks a lot, Jeff, from MetaStock and team. Love always being here. And I know you guys are going to learn a lot. Just please be ready, because what I'm about to show you is going to make you probably a 50% better trader in the next 40 minutes. All right. Now, what we're going to do is at the end of the presentation, I'm going to invite all of you to come to my professional trading floor. I started the first one about over 30 plus years ago. I am also going to give you a copy of my book for free, or you can pay me $50 on Amazon, whatever you prefer. I'd rather give it to you for free. And then I'm also going to show you how to get this data where you could use it on the MetaStock platform. So you'll be able to do both, and it's not my software. It's not something I invented. I'm going to show you how to get it directly from the exchange. Back then, the days, you had to pay millions of dollars to have a seat on the exchange. They eliminate it. Now they give it away for everybody. All right. So now the question is, how are you doing right now in the market? Are you making money? Are you losing money? Are you breaking even? I mean, you got to always be honest with yourself. And, and what are you really doing wrong? So that's why we're here, because I was here 35 years ago. I was a failure, went out there, thought I knew what I was doing when it came to trading. And then I just realized that I didn't know what I was doing because I didn't have the right tools. So fortunately, living in New York, was trained by some of the best traders in the world. I am one of the original So's bandits. If anyone reads any of the old books, I started about 30 years ago. I mean, they called us, I'm actually called the original day traders, but they called us So's bandits back there because the market makers didn't really like us too much. But so if you read any of the old books, you'll know a lot about them. Now there's over millions of us around the world, so it's great. So how I got started, before I teach you about the trading part about it, let me just tell you a little bit about myself, and then you'll understand why you need to understand this. So that's a big article that was written on Forbes, a bunch of kids tormenting Wall Street. I was one of those kids that were tormenting Wall Street. What is great about this photo, I always like to show, is look at that 15-inch monitor. Look what we're looking at. No charts, no news, no nothing. It's just numbers. Basically, those numbers are the orders. Okay, I'm going to show you how to be what's called a tape reader. Basically how to read the tape, how to read the orders. And I'm going to keep it very, very beginnerish. All right. Now, I've done a lot of presentations. If you follow me on Instagram, TikTok, YouTube, whatever you prefer, X, I've got some great shorts out there. I do a lot of work for Nasdaq by teaching you some of the software I'm going to talk about today, and been on all the financial stations around the world. I've also been a 12-time champion at the Money Show. I went up against every school in the industry, and I beat every single one of them. But the thing is this, I'm not here to put feathers in my cap. I tell everyone I'm not here to brag, because being great at what I do doesn't make me a great teacher. Okay. So we're not here to tell you what to buy and sell. I'm here to teach you how to buy and sell. So before we do that, I just want to take a moment, just a second here, to give everybody access to my book. It's a color book. It's a fast read. There's my email address right there. So if everybody could just take a second out of your time and just email me, open up your inbox and just write Fausto. I always like to do this to everybody. Let me bring this up over here. And just type in my name, Fausto. But there it is right there, Fausto. And then just write book. All right, and just hit send. Oh, and by the way, I don't know who you are. I always like to call people by the first and last name. So if you can, write me your first and last name. All right. I think there you go. I just sent it to myself. And then hopefully when you're done today, everyone is going to get a copy of that book. All right. So, and I'd love to give you feedback about it. All right. Now, as you guys are taking care of that, let's talk about trading. Okay. How are you really doing? Are you making money? Are you losing money? Are you starting to retire? Are you working right now? Trading is a part-time job. It's not a full-time job. Just letting you know. Being a trader is not about hitting home runs. It's about hitting base hits. And that's what I'm about to show you. So basically, I want to go over some of the things that are going on in the market, show you what we look at, and be focused on what's happening. Now, we could see that, the S&P and the Dow, they're moving up really good lately. We did have this little correction that did come up. It did get a little choppy in the beginning of this month, okay? But there was some really, really good buys. I mean, really, really good buys. And, but with those good buys, you got to, know how to risk management. Risk management is one of the biggest failures of the industry. So how do you follow risk management? You got to follow the money. You got to follow the orders. Oh, just really quick. Antonio, Michael Ross, Nito. I just got Steve. I just got your email regarding about the book. Thank you very much. I'm going to send it to you once I'm done. Once I'm done with today's, when I'm done with the presentation. All right. So what I want to show you is before I go into the software of what you need to trade in today's markets, let me bring up the execution system. Let me bring up some trading really quick right here. All right. So we got a couple of positions that are opened right now. The one that we traded this morning, I still own it right now. I have about 2,000 shares of it. Did you guys see RXT this morning? Did anybody see the stock RXT? Just give me a yes or no in the chat. I don't know if you guys could chat in there. Just give me a big yes, if you got it. All right. So you could see this stock no. Got a bunch of no's. All right. That's okay. All right. But there's a lot of stocks that are moving in the market. Okay. So this stock started right around 8:30, ran from a 45 cents, ran to $1. And then when the market opened up here at 9:30 at $1.10, it ran all the way up to close to $1.50. Okay. Now it's starting to trend down. I'm actually going to sell it. Let me take my profit in here. Market. I'm just going to take my $418 profit. I could have sold it sooner, but I want to kind of show you a little bit. Now the question is, where did you find the stock, Fausto? Why are you able to find it? Why is everybody telling me to trade, NVIDIA? Even though NVIDIA is doing well today, but it's $189. Why not trade silver? Silver is doing great today, but why trade at $70? Why can't I trade something with less risk with more reward? Well, right here, and you get this also on the MetaStock platform, is our big percentage gainers and losers. If you notice, this stock right here is up 210%. It's the biggest percentage gainer of the market. Not only that, but there are a lot of other stocks that are moving this morning. You had SNSE. This one was up 200%. MLEC. This was another really good one. It was a $140 stock at the beginning of the year. It dropped all the way down to $4. It's up over 52% right now. There are a lot of stocks in here in the gainers that we like to trade, and there's a lot of them in the losers. Now, if anyone here follows me on YouTube, go to my YouTube channel. I just started a new series called Beginner Traders. So I show you how to go through that. I want to go through the detail because I'm very short for time here. I want to get into the fun part of it, which is how do we know they're going to go up and how they go down. But definitely subscribe to follow us on Cyber Trading U on any one of those channels. Okay. So, but I'm going to come back to this, and I want to show somebody just one last thing. This is actually our trading floor. All right. And here on this trading floor, this is where I'm going to invite all of you guys to come in. And right now we have close to a lot of people in class right now. It's about almost 200 people in there. We got between 200 to 300 in the morning. We got over 1,000 traders. You're all going to be invited. These are all the traders around the world. Okay. And this is what we do here. Okay. These are all the, these are basically the trading floor. And, you know, these are basically, we're talking about stocks. We're talking about this is moving, why this is going up and going down. We're giving stock ideas. We're showing, like, here's the resistance levels of a stock right here, which is the Nasdaq stock that we're in. There's a lot of stocks that we're showing. I'm just showing a couple of images here. This is a stock that was started run up right here. There's another big stock right here. Which one is this one? This is Apple. Okay. We're showing Apple, how Apple's got a big resistance. I'm going to show you all this stuff. So please be ready, because I'm going to invite all of you guys to come into this room. And the big thing is, we don't tell you what to buy. We teach you how to buy and sell. All right. So let me put this away really quick. Let's go. Let's hop over here in the PowerPoint again, because the goal is, you know, you don't want to go into a room and not know what's going on. It's like somebody wants to join the gym and doesn't know how to use the weights, you know? So I want to start off with just the basics of how to read the market. Now, does anybody here have level 2 quotes? Just give me a yes or no in the chat. Yes or no. David, Gary, Isaac, I got your, I'm going to get all the books out to you. Thank you very much for sharing that. All right. Now, does anyone here have level 2 quotes? Because if you do, it's been outdated since the 90s. Okay. So let me explain to you what it is, and let me show you the big advantage versus one versus the other. Let me start drawing. I could draw here. Oops. Yeah, I can. All right. Perfect. I'm trying to get used to this software right here. Hold on a second. There we go. All right. So, oh, this is green. I don't like green. Let me change the color. Maybe red. There we go. And how do I erase? I'm just learning how to use this thing right now. Okay. So these are the buyers and these are the sellers. Okay. Now, this is the exchanges like the New York Stock Exchange, the Nasdaq Exchange, the CBOE, all of them. And this is what the stock is trading at that exchange, and this is how many shares, okay? Now, what you're seeing in level 2, you're seeing what that stock is trading at that exchange. Now, this is the problem with that. Let me see if I can erase all. Oh, okay, get used to this. All right, now, the problem is that you can't see all the buyers and sellers, right? You don't know who's there. Remember, you are the ants on the floor. You're just trying to get the crumbs. Keep that in mind. There are traders that are trading millions and millions of shares. They have limit orders. You're going up against algorithms, high frequency trades, dark pools, institutions, the big brokerage houses. you could see everything that they do in today's technology. All right. Now, how do we go about doing that? Well, this is how it works. Level 2 will only show you what that stock is trading at the best price and at the best price at the bid and ask, the buying and sell. Now, when we implement something called level 3, this is where you get to see all the orders out there at every single price. And when we get to level 4, we're going to put it on a heat map. Now, the big thing is, I'm going to show you everyone where to get it. So when you're on the MetaStock platform, you could actually see it on both systems. Okay. So, but I'm going to get ready because I'm going to give you that email where you're going to watch a quick little video on it, when you have time, and you're going to see how powerful this is. Now, remember, question to all of you. And if you can't answer this question, you should not be trading. And how I know this, because I live here in New York. I took a job as a market maker, and when my boss asked me this question, this is how he fired about 90% of the people in the audience looking for a job. How do stocks go up and down in the market? Can everyone answer that question? How do they go up and down? It's a very simple question. Okay. Let me get the chat up and running. There we go. All right. If you could just put buy and sell. Okay, B&S. So I know you guys are paying attention. Greg, I hear from you. Everyone else, go out there. Just put B&S. So I know that you're paying attention. Because if you're not, if you can't answer that, thank you very much, Greg. Everybody else? Good. All right. So that's how stocks go up, right? Now what I want to do is show you one of Wall Street's biggest secrets. I'm going to show you exactly how to follow the big money. Okay, how to follow the big orders. This is called the right side of the chart. You see, when you look at a chart, you're focusing on what happened in the past. Well, now I'm going to show you if those orders were out there in the past, those support and resistance levels. Now I'm going to show you if they're in the future. Now, I like to call this Nasdaq level 3. It's called Nasdaq Book Viewer, but I like to call it level 3 quotes. All right. So let's look at this example right here. We're looking at Robinhood. Okay. Now, if you notice here on Robinhood, the stock stopped right around here, right? Which is right around $75. It went down and then finally went all the way back up and just kept going up higher. Now, why did the stock stop at 75? Why didn't it stop at 73? Why did it go to 70? Why? What made 75 so special? Okay. Well, when you look at the right side of the chart, what makes a support level are buyers. So we're going to go here and go to the exchange, and we're going to work our way down, and we're going to notice right here, there's a big buyer of 145,000 shares, and there are 66 orders around the entire world that equal that 145,000. Now, you might be asking yourself, how do I know that's a lot of shares? How do I know that's a big buyer compared to every price level? When you work your way down, look at every other price. You got 35 shares at 75.40, 90 shares, 25 shares, 700 shares. So you're talking about maybe 100 to 200 times more orders at that specific price than in any price out there in the market. Once again, how do stocks go up and go down? Buyers and sellers. How do stocks go up? What makes a support level? Buyers. Now, for the opposite, how do stocks make a resistance levels? Sellers. Sellers make resistance levels. Okay, that's what works. See, everyone does the opposite. They're like, "Where's the resistance? Where?" That's okay, but the resistance in the past is not always indicative of the future. So the only way we know we're coming up to a real resistance levels like this one, when it hit 82, is we got to look at the sell column and we got to see where the biggest order is. And that biggest order is right here at $82 for 91,000 shares. Listen, how many of you guys go out there and as soon as you buy a stock, the damn thing goes down? How many of you guys, when you sell a stock, it goes up and you feel like someone is watching you? Okay, I felt the same thing before I got trained. And you know what it was? Nobody's watching you. You're just not watching them. You got to remember there's program trading that kicks in. They don't care about you. They don't care about your 200 shares or one share, whatever you're trading. Okay. These people have orders to fill. Okay. They have a client that wants out. They can't say, oh, I can't do that because Greg Lewis might want to sell 100 shares. I can't go out there and buy 90,000 shares. You know, I don't know. He might see that. They don't care about you, Greg. They don't care about you, Mike and Bill and Mary and David and who else you know, everyone that's kind of registered right here, getting my book. I'm just going down the list right here. Reply back. Nate, GT, Mark, all of you guys, Steve. They don't care about you. They care about their client. They need to get out. They got to get out. Okay. Listen, if you have anyone here own a house, okay, do you discriminate? You got to sell. You got to sell. Right? You got an offer. You got an offer. You can't say, well, I can't really put an offer out there because I don't want everybody to know what I want to really sell it for. You want to sell it. You don't care. Wall Street is exactly the same. Now, how do I know that? Well, if you listened to me earlier, like I told you, I live here in New York. I live in one of the most prominent towns in New York where some of the biggest traders live. You're not going to beat them. Okay. One of them lives across the street from me. But I can tell you this, you could join them. Okay. I am your connection to Wall Street. How do I know that? Because I was a market maker. I was a trader. That's what I used to do. And the technology has been around for over 50 years. You know, it's like AI. People are saying, oh, what's going on with AI? I never heard it before. This thing is amazing. 2 years it's been around, right? 2-3 years maybe. AI has been around for 50 years. It's just now it's starting to take over now. But this technology has been around longer than that. All right, let's go over a couple of more examples because I want to kind of show you a little bit more because when I invite you to the trading floor, you are going to see this all the time. Let's look at, well, it's the opposite what we're using today for technology, but let's use Zoom, right? Here's the stock. Zoom is a public company, and you see the stock, it's, you know, after 3 days, went from 95, just kept going down, it's down to 98. Now, how many of you have been to a stock like, my God, what do I do? Do I hold it? Do I sell it? My God, I'm losing money. What do I do? Well, there's only one thing that's going to save you is where everybody else is buying it. I mean, what really do you think makes you know more than the big buyers out there? So forget about the left. Let's look at the right of the chart. Go to the right of the chart. Okay. And I'm looking for buyers because the stock is going down, right? What is going to prevent it from going down? You might be looking for support. I'm looking for buyers. Now, when I work my way down that list, you could see here that there's a lot of buyers, but the real big one is right here. 129,000 shares at $88.50. Now, look at all the buyers out there, 300, 100, 260, 100. This is everyone around the entire world. And by the way, I forgot to mention Nasdaq, the stock Zoom, they probably do about 50% of the total volume around the entire world. So you're looking at everyone in the entire world that's trading Zoom on that exchange. So you can just keep in, I don't know if you guys could imagine this, but you have a seat on the exchange. You couldn't get this, you know, unless you bought it, you know, several years ago. This technology is there for you taking. All right. Now, getting back to the big buyer, what do you think is going to happen when we get close to $88.50? You think it's going to go up or you think it's going to go down? What could possibly happen? All right. Is that your answer? Look at the chart. Went from 95, went all the way down to 85.50 at 12 o'clock, regardless of the time, because it just took, that's how long it took to get there. Finally got down there at 12 o'clock at 88.50, and the stock bounces back to 92. Okay. How is that even possible? Well, it's very possible because there's a big ass buyer out there. Now you got to ask yourself a question. How much smarter and better trading decisions would you have made by knowing where those big buyers and sellers are? How many of you here would have probably sold the stock at 85.50 and see the stock go back to 92 and be like, what am I doing wrong? I just rode down the stock almost $10 okay? And as soon as I sell, I take a big loss and the damn thing goes up. It's because you're not watching the orders. That's the problem. Now, just keep in mind, this is basic trading 101. Buyers make support, sellers make up resistance. It's as simple as that. Let's look at another example here. Let's look at General Motors, okay? Stock has been having a very good move. And by the way, the technology I'm telling you about, you can apply this towards swing trading. You could apply it towards investing. You could even do this on cryptocurrency. You could do this on options. You could do this on everything, okay? Because those orders that are out there for your viewing. Everything is public, okay? Now, getting back to GM on General Motors on a swing trade. Stock's been doing great since May. It's been at 45, goes to 50, 60, 70, 80. What is everybody's biggest concern? I don't want to lose my profit. I made a lot of money. I don't want to sell it too soon, but I definitely don't want to sell it too late. What is only thing that going to help answer that question for you? You got to know where the big sellers are. With that said, we're going to go to the exchange. We're going to work our way down there, and we're going to look, and we're going to see where are most of the orders looking to be sold. And as you work your way down on the sell column, you'll notice right here, out of all those 500 shares, 600 shares, 300 shares at every price level, you're about almost close to the really biggest seller right there at $82. Now, without looking at a chart, an indicator, or anything, boom, there's your order right there. So let's go out there and look and see what we feel and see what happens. Oh, what do you know? Market opened up right around 30 minutes later, got right to that 82, and boom, down to 79. Now, what do? Do you hold on to it? Like, oh my God, why didn't I sell it? You know, why is it going down? It's going down because that 91,000 share sellers out there. Now, some of you are probably going to be asking me questions like, oh, how do I know that's real? How do I know he's spoofing, all that? Well, I'll cover that when you come to the trading floor, okay? When I invite you all come into the room. But I could just tell you this. I can personally guarantee you this. That is a real order, okay? Because there is no brokerage firm and the exchange is not going to let you put an order out there unless you got the money to back it up. Now, they could change their mind, okay? That could happen. But I don't know if all those orders are in cahoots with each other. That would be really pretty clever. And that would probably be a nice little investigation for the SEC. So you could sit there and, you know, analyze it all you want, okay? By the time you figure it out, you just lost all that money, okay? So, but don't worry about it. We'll cover that later when you come into the trading room. Now, here at Cyber Trade University, I came up with a word called iceberg orders. Iceberg orders are big block orders. So if you hear anybody mentioning it about iceberg orders, they were probably a previous students of Cyber Trading University or one of my instructors. Okay, so more and more people are starting to talk about it. People are starting to realize the importance of it. So if you want to know where it generated from, you're looking at the person who invented it. Okay, and the reason why I call it an iceberg order is because if you look at an iceberg, it's not what's on top of the water, it's what's on the bottom of the water. And we all know what happened to the Titanic. That's how I came up with the word. I saw the Titanic, and you know, obviously, you're in an iceberg. You know, it's not. You know, you think you're far away from it. You know, you think, oh, I got the technology. You know, I see it. You're looking at level 1 quotes right there, my friend. You didn't have the right radar, whatever, because you're being cheap. You know what? Didn't work out too well for the Titanic. All right. So let's talk about one more example. What happens if a stock breaks the support levels? Okay, so listen, we see stock break support resistance levels all the time, right? It happens all the time. And you don't want to get caught into it, all right? So let's talk about Netflix. So we've been trading Netflix in our trading floor, okay? I actually own it right now, okay? I'll be happy to show you why and everything else in the next few moments. We have some time, but Netflix, you know, they're having some big issues. They just did a 10-for-1 stock split. It's now in a range where a lot of us can purchase it. But the thing is this, it went down from like the 130s down to these 80s. It kept dropping and dropping. So some of you be like, wow, you know what? I always wanted to buy Netflix, but I never could afford it. And now I could afford it. It keeps going down, you know? So what do? Well, the only thing that's going to help you is you got to see where the big block orders are. And if you notice here, we got two big orders, okay? You got a big order here, and you got a big order here, okay? And those orders ain't small, okay? You got 48,000, which doesn't sound like a lot, but there are 1,400 people that make up that 48,000 shares. The one underneath, the 72,000, there are 2,300 orders that make up that. So like I said, unless they're all in cahoots with each other, which I don't know how they are going to do that. I've been doing this for 35 years. I never knew how they connected. But if I did, I guarantee I'll read it up in the paper. But those are all real orders, and those are real big support levels, okay? So what do? Some of you might be like, okay, maybe this is the buying opportunity. A lot of big orders. Fausto just told me that if you see a lot of big orders, that is support levels, and you're correct. But there's always a but, right? Stocks can break support levels. It could happen. Listen, it could happen. All right. There's no guarantee that it won't happen. So looking at the chart, you'll start seeing like, okay, you could see it here. Fausto told me it's going down, and you know, it's 11 o'clock. It did go up, got close to 82, came back down again. It's back at right around that number again. It's doing probably a double bottom. I know these people talk about these bottom bombs, heads and shoulders and teacups and handles and all that crap. Listen, forget about that. Okay, what you got to focus on is this. The big buyer on the bid. We're at support levels. In theory, it should bounce at this price level. Okay, but what could possibly go wrong? Well, what went wrong is this. It traded, and finally it broke it. What happened was, as consolidation happened, somebody kept selling and selling and selling. And eventually, if somebody sold all 48,000 shares to that one person, there's no more buyers out there. And that's why the stock went from $83 down to $80. And yes, that can happen. Didn't happen immediately, because he had to chip that guy away little by little. But eventually, when everyone sold a piece and a piece and a piece and a piece, and there was no more left in the pie, guess what? That's why the stock dropped. So you got to be careful. You got to be careful of those orders, because like I told you, we see stocks break support and resistance levels all the time, and you want to wonder how that happens. That's how it happens. Okay. Now, did I lose anybody yet? Did I lose anyone? I know I got a lot of people interested in the book. Wait till I tell you where to get this. Get ready, guys. Get your emails out ready, because wait till I tell you where to get, you know, the access to the exchange. Because when you're done today, you're gonna go right there, and you're gonna freak out. It's really gonna show you everything that you knew existed, but never knew how to get the access. Okay, it's like a unicorn. I heard of them, but I never seen one. Well, guess what? Now you're going to see one. Right? Always like to use that metaphor. Now, this is what you need to do. Okay, so I'm going to give you guys a present. Okay, I want you to email me if you're seriously interested and want to know how and get access to the exchange. Open up your inbox right now. By the way, here's all these emails. I see you guys just emailed me book. Okay, just email me again. All right. And Fausto, and just write Nasdaq book, and just write me your name. Okay. And what I'm going to do is I'm going to email everybody where to get this through the exchange. Let me hit send. Send it to myself. All right. So basically what I'm going to do is this. I'm going to give you two videos. Very important. You got to watch them, because I will not send you directly to the Nasdaq website yet, because if you go there, you're going to buy it and you're not going to, okay, the defaults are wrong and you're not going to know where to look, and you might pay a lot of money for something you don't need. So I got 2 5-minute videos I want to give you. I'm going to show you how to set the defaults and how to read it. Okay. And then, and I love to hear your feedback. Okay. I love it because the more you talk to me, the more I can help you. Listen, the exchanges were very good to me. Okay. I do really well for myself. Okay. But I always feel, that you got to give back. And you know what? There are way too many people that are losing money in the market. It is literally a 90% failure rate. Think about it. 90% of the people that trade the market have absolutely no chance of making money, not including they lose the money they put in. Not only you lost the time of going out there, learning how to trade, but now not only that, you lost money doing it. All right. So please email me, let me know everything. Great. I see you guys registering. Anton, Mark, Steve, Kevin. I see you guys hitting Nasdaq book. Beautiful. Great. And like I told you, give me a feedback, because if you have any issues, please let me know. All right. All right. So as you guys are doing that, I want to cover one last thing before but on top of that is to come and see this live in the market. I want to talk about level 4. Okay. Now, I'm just going to briefly go over it because I don't really have that much time. But what I like to do is I want to see, and I want to test all of you. I want to see how educated I made you within 30 minutes. So if anyone has any stocks that you want to, talk about, let's go out there and let's see where the orders are. Okay. Let's have some fun. So what basically level 4 is basically you're getting the same thing on level 3, but you're getting to see it on a heat map. Now you're getting to see how long he's been out there. Did he get executed? So it kind of makes your eyes a little bit more adjusted to it. All right. It's a little bit more advanced. If you're a chart reader, I think it'll make sense to you. But it's a software. It's not more of just a tool that works off the orders. That's it. So let's go out there and let's have some fun, right? Let's go bring some trades. All right. So let's see what's going on in the market. All right. So we got a couple of stocks out here, and we're going to keep an eye on. Let's see what we got going on here. Okay. So here's Coinbase. All right. So Coin, let's bring up Coin, and you could see Coin right here. Actually, let me see what's my trading room. What are they trading in there? I'm just out of curiosity. What are they looking at? They're looking at IBRX. This stock went from 6 up to 460. And Rich is one of our instructors. RXT. Oh, that one's got a big iceberg order. Yeah, let's check out that one's. Oh, that one already got filled. What was that? 150. Yeah. We'll come back and look at a different one. Let's go. Let's look at this one. It's a little bit easier. Coin. Okay, Coinbase. So Coinbase, you could see, took a very, very big hit, monster hit. Stock went from 400 all the way down to 140. Devastating for some of us who ever owned the stock. Now, if you notice, it hit 140 and the stock went up. Now, why did that stock go up, everyone? What made that stock go up around the 140? Anybody know? Why 140? Not that it's a support level. Must have been buyers out there, right? So I'm going to bring up level 4 over here. And you'll see, let me bring this up and draw my crayons. Here, it's not a big buyer, but you see that line? This is 930. This is program trading. Orders showed up right here. See all the orders here showed up? Okay. So 140's there, 150's here. The stock is trading right now 169. You see this big order right here? That order is, you got about 20,000 shares out there. So you notice how it hit there and never went higher? That's 175. If it broke 175, then the next biggest seller is right here at 200. Okay. Now let me just bring up the chart here and show you what we're talking about. Bring a little bit higher so you guys can see a little bit better. There we go. So if I draw my trend lines, There's that buyer at 140. Here is 175 right there. And 200 is a big seller right there. So when I bring this back over here, I'm going to show you what we got over here. So you can see the orders. Now, for some of you, you might look at this and be like, well, I really don't see the resistance up until maybe 210, okay, all the way up here. But the thing is, that's not what's telling me here. What's telling me here is sellers before that. And some of you be like, well, I really don't see that 175. How did you find 175? Well, he's there, okay? You might not see it in a chart, but he's there. So that's basically where that happens. Now, let me bring up another one, which is a really good one here. Apple. Let's bring up Apple. All right. So let me bring up my. Does anyone here follow me on YouTube? Okay, so I'm going to bring up my YouTube channel. Hold on. Here's my YouTube channel, Cyber Trading University. I'm just going to click on it. So if anyone here wants to subscribe to it, here's my, just go out there and, oops, it's hidden. All right. So we'll give it to you later, but you just go to cybertradinguniversity.com and just hit subscribe. I just want to show you short really quick. So I did a lot of videos here. I do videos like maybe once or twice a week. I like doing shorts. And you could see, here's the one I want to show you right here. This is the one I just did yesterday on Apple. Now, let me just play it really quick.
Don't know if you heard, but Apple's latest frenzy isn't about the iPhone. This time, it's about AI, a tool called OpenClaw. It's a personal AI agent that has users scrambling for hardware to run this new software, which is in high demand. Now, Apple's compact Mac Mini is selling out, especially the $1,000 model. The surge is fueling buying frenzy for the Apple device, and it's leaving it in short supply. Now, today, I want to break down this AI wave that's influencing the Apple stock, how key support levels are holding, and whether it's a buying opportunity. Now, let's jump into the chart and see what's next for Apple. Now, you can see Apple has been having a nice little run lately, but it hasn't really been going anywhere. And this is a price line I want you to look at. Look what happened to the price here at 280 and how it's dropped all the way down to 255. That 255 was a really big support level for a long time. Once the market opened up, you see this big green candle, big buyers showed up, stock went up to this big iceberg order, tested it, and then finally it broke it. Once it broke that resistance level of that big iceberg order, which was roughly around, I don't know, 30, 40,000 shares, that's when we thought, boom, this is a good buying opportunity. You see how Apple started right around here, around 255, and shot all the way to a price of 266. Orders all over the place. You see all these iceberg orders, and they just kept getting executed, just kept going up. So that was the sign that we're looking for. When you have good news like that, and you see over the course of the day, and you see big orders like that getting executed, that's what caused the stock to make a big run, and that's why we day trade. So stick around, like us, friend us, and come back tomorrow, and we'll see if the Apple frenzy will continue.
So I want to bring up the Apple trade now and show you what happened. So this was Apple yesterday, and you could see it. It's not, regardless of the news, whatever the news is, the stock really ran from like 256 all the way up to this price right around here, around 266, which I was telling you about. And you notice since yesterday around 130, and then this morning it dropped back down to about 262, and it hit it again. It hit yesterday's highs. Now, you know, regardless of the news and how great it is what I'm trying to educate everybody. You might hear some great news about the company and think like, oh my God, you can't get the new Mini, and you know, I heard about this technology and everyone's doing a buying frenzy. That's great, but there's one problem. Okay. The seller is out there. I'm going to bring this up right here. And you could see them right there. He's right there at 266. Everybody see him right there? That line right there. So if you look at it, it looks like he got executed, but there are two orders, 266 and 267. There was a big order right here that showed up. See this big red line right here? If I bring this up here, I can show you what happened here in the past. Those are big stack orders, 20,000, 20,000. 10,000, 20,000, 20,000, so 50,000 shares. When they showed up, see how the stock went up? and these sellers got executed. So I know it might be a little advanced for some of you here, but what I'm trying to show you is that you get to see all the orders and see if they got executed or not. And that's what happened here with Apple, okay? But Apple's got this big resistance levels, okay, at these prices. I want to do one more with you, okay? NVIDIA. Everyone trades NVIDIA, okay? NVIDIA, NVDA. Let me bring it up. So NVIDIA, here's a long-term chart. Just bringing it up a little shorter so you guys can see it. And if I draw my trend lines on NVIDIA, you can see that right around here, it's got a lot of resistance levels at this number right here. Here, 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 here. And it's got a lot of support levels right around here, okay? Right around this number. So between 170-ish, okay, and 190, what is that, 3, I would say, okay? So between those two numbers, you could see where the support resistance level is. Now, you could see how it basically came down, hit 180, and went back up, right? So the question you probably ask, is it too late to get in? Whatever it may be. So the only way to know that is see where the orders are. So I want to bring up NVIDIA here really quick. I want to show you this. Is pretty cool. Okay, so you can see right here that there's a stack of sellers, stack of them. Here's 9:30 when the market opened up, and you can see this is program trading. Look at all these orders that showed up here. They all showed up right around these numbers right here. Look at all of them. 200,000, 780,000, 250,000, 200,000. I mean, listen, you want us to know something crazy? This is what's amazing. Watch this. Why aren't you coming up? Oh, there it is. Where are you? Hold on. Where'd you go? Where'd you go? Where'd you go? Oh, there we go. Here we are. Trying to bring up my calculator. Now it's running a little slow. But anyway, if you do the math, you got 800, a million, about almost a quarter, 1.5 million shares looking to be sold right around, there we go. So you got 1.5 million times, I don't know, an average of 193. You're talking almost over $250 million is looking to be sold right there. Now, you're telling me you know more than that guy or those people? Whose side you want to be on? Fausto's, Jeff's, or the $250 million? Okay, this is what I was taught, and this is what I teach my traders. So if you're not following the orders, you know, you're not seeing it, how are you going to have that game plan? That's what trading is all about, okay, is following the money. Now, all these things that I showed you, seeing is definitely believing. And I'm going to invite all of you guys, you know, to come in my trading floor for a week because we do practice what we preach. So, you know what? I know that you got a lot of great speakers that Jeff's got coming up, and you want to definitely listen to all of them. There's going to be, you'll learn some great content from all of them. And you're going to learn something. But when you're done, I want you guys to kind of, you know, see that when you come to Cyber Trading University, you'll see a little bit more of why we've been doing this for 35 years. Okay. So issues I always find is that majority of the people out there, and you know you're guilty of this, some of you like the guy on the left, okay? You can't trade by yourself. You could spend all the money on technology, you could spend all the money on the monitors, you could do everything, but if you're not sharing those ideas with people, who are you sharing them with? You're kind of trading blind, right? And, you know, like anything else, a lot of you are very smart individuals. You work for good companies and you work for bad ones. And you know some bad ones, you know some great ones. You know why they're great and you know why they're bad, okay? So you know who to work for and who not to work for. And you know if you're going to succeed with somebody or not. And you've seen who succeeds and who doesn't succeed. Well, I can tell you this. For somebody who's been doing this for a long time, it is very difficult to trade by yourself, to spend all this money on technology. If you've got no one to share ideas with, you have no one there to talk to you with, but because that's what we do at Cyber Trading University. We do a lot of coaching. We do a lot of classes. We do. You got a lot of networking done with the other traders. We're all out there to help everybody. So if you love trading, that's the way to do it. Now, don't forget to follow me on social media. You can see me on Instagram, TikTok, YouTube. Watch some of those videos. I like doing the shorts. You know, listen, people like I do some long ones, but the problem with the long videos, everybody thinks they could, once they do a long video, they can learn how to trade. I like to do shorts just to show you enough that just get you right to the point. So when you go out there, please like me, friend me, you know, and definitely go out there and share it. Okay. Leave a comment too. I definitely answer everyone's back. All right. Now, this is what we're going to do. I want to invite all of you guys to come to the trading floor now. I know a lot of you registered for the book. I know a lot of you here registered that you want to get that Nasdaq, the book viewer. Now, guess what? Let's go out there and do some live trading. Let me show you how we find the stocks. Let me show you how we get in and out. Let me introduce you to people like yourself that just started. Because let me tell you, it's never too late to learn how to trade. When you and I die and Jeff dies, the stock market's still going to be here. Don't worry about it. All right. So this is what we do at Cybertrade University. We have live audio commentary. We do it from 7:45 in the morning Eastern to 5 o'clock in the afternoon. We're going to give you hundreds of hours of workshops. We're going to give you real-time alerts. You're going to be able to talk to somebody here at Cybertrade University. You can have your own education advisor. I know some of you never even spoke to anybody. You're going to get all this great stuff that we do here at Cybertrading. You're going to get to meet our other instructors. It's not the Fausto show, okay? You're going to get to meet Rich and Josh, my other senior instructors here at Cybertrade University. And also, you're going to meet the traders around the world, okay? And remember, we're all out there to help each other, because if you're not, we get rid of you, okay? So there is an interview process that we do. We want to make sure you're qualified to trade, and because we don't want to invite people in there that's not for you. And there's no better person to say that than us telling you the truth, and that's okay. Listen, trading is not for everybody. You know, you might think it is, but it's not. Listen, driving the car is not for everybody. Okay, we know that. So if you want to do your homework, go to Google. You can read our reviews. Probably one of the only schools that have a 5-star rating that you'll find. We're also probably the only school in the industry that's endorsed by more brokerage firms than any school in the industry. We just signed on Mumu. I don't know if anyone here is, from Canada or, as in the Asian department, but a market. But our new brokerage firm that we signed up, that we're doing education for. I was just in Toronto at their office with Mumu. We do it for Schwab, Thinkorswim, Tasty Trade, TradeStation, all of them. Now, this is what you're going to get. Does everybody have their phone? Okay, now, if you have your phone with you, you could scan that QR code right there, okay? And this is what you're going to get. You're going to get live trading for a week, workshops, okay? The library of our workshops demands. You're going to get premium recordings of some of those workshops. You're going to get my book. You're going to show you how to beat the market makers their own game. This is a big value, and I used to get a lot of money for it, but this is what I'm looking to do. All I'm looking to do is charge you $9. Now, why is it go from such a high price to that price? Is because the deal is this. I'm only looking for serious traders. That's it. If you can't afford $9, honestly, I don't know if you really could afford to trade. Okay. So it's as cheaper than buying an expensive, I don't know if it's expensive anymore, but a cup of coffee at Starbucks. Okay. So take your phone. You can click that link that Jeff posted up there. And you know what? For $9, you're going to get a whole week. And you know what? At the end of the week, if you feel that we wasted your time, we'll give you money back. And you know what? You could start whenever you want to start. You could start Monday. You could start today. You could start whenever. But take the time and do it now and just get it out of the way. Okay. So for $9, you're going to get all this stuff, and I'm going to throw one more bonus in there for all of you, okay? For everybody that registers, I will personally talk to you on the phone. As long as you're on the trading floor for about 1 or 2 days, get to see what's going on. You're going to have a lot of questions, and then I will interview you, and we'll have that discussion to kind of answer your questions, what you've learned, and to see if trading is for you or not. And if you're really qualified to trade. So there's a lot of you that aren't, but there are a lot of you that are. But it all starts from here. If you can't afford $9, you're really unqualified to trade. If you can't be in the trading room and listen in, you don't qualify to trade. Trading is a 90% failure rate. Jeff and the MetaStock staff do a fabulous job doing this events with you guys to get you here. But to be good at it, you got to learn how to trade, okay? You got to surround yourself with good traders, and that's why they have us here, and that's why we love coming back teaching all the MetaStock traders, okay? Because you got to learn before you could earn traders, all right? So with that said, you got about 5 minutes to register, and you're going to have another presenter that's going to come right after me. Jeff, I love you so much, my friend. It's been always great. Always love coming on the MetaStock.
I love you too, man.
You know, and yeah. And then
CPU.co-trial. Click on the link. That's all you have to do.
So, like I said, the worst thing you could happen, right, Jeff? You learn something, right? Think what you learned today. Look what you'll learn in a week. All right. But thanks again, Jeff. You guys are the best at MetaStock, and keep it going. You know, look forward to the next one.
All right. Thanks a lot, man. We'll see you again soon. I look forward to the special session we do next time with the sauce recipe.
I'll get the sauce recipe. Fausto Home Living, you can put it up there if they want to go to YouTube channel, watch some of the quick shorts, Instagram, TikTok, learn how to make sauce, take care of chickens. I do backyard chickens, gardening. It's what I do on my off time. You know, it's great, Jeff. Sometimes you don't, like I tell people, what do you do all day? I said, listen, you know what? You know, you got the time to do it when you're about my age. What do you do?
What do you mean, what do I do? I know. Do what I want. How many chickens do you have right now?
Oh my God, I got like 16 ladies. 16 ladies, and they're really, really they can be bitchy sometimes. They're great, man. They make the most amazing eggs. You know, and I have some really good videos to show you that. You know, just kind of tell you very briefly, it's almost 5 times. First of all, a chicken egg is the best eating food in the world. There's more vitamins and minerals in it. And if you eat an organic one, the one that you've raised at home, it probably has 5 times more of the vitamins and minerals than you buy at a store. So if you look at it, they're like fat, they're like huge, and they're like orange and awesome. Yeah. You know. So
all right, well now I'm hungry. Thanks. Thank you, Fausto.
I'm gonna go make myself an egg right now. I'll see you guys soon. Thanks for listening, everyone. I'll see you all in the trading room. Enjoy the rest of the MetaStock event.
Okay, cool. Let me go ahead and do this. We love Fausto. He does such a great job. Let me go ahead and excuse him. I'm going to go ahead and share my screen real quick. And I want to thank one of the sponsors that we have, the Traders Forum. If you haven't joined, you should. We're getting a lot of new members this week. It's free. You can come up. You can live chat with other traders. Lots of really smart people up there. You can learn about the markets. You can make some friends. We do a couple really cool sessions. We'll go and do a deep dive on an indicator and see how well it works. And we do that usually about once a week. We'll also bring in an expert and just do kind of a podcast. We'll talk a little bit about how the market's going, what their expectations are, give some background. It's a lot of fun. All of that's for free. You just have to go to thetradersforum.com and register for it. And that's it. So, and it's a very quickly growing community as well. I'll add that. In any case, Greg Lewis, can I get an assist?
Mr. Gibby, you can. And really quick, might I add that several people are asking about where's the chat box on GoToWebinar. I should point out that GoToWebinar, there is a chat box. It's distinguished from the question box by its little bubble with dots in it, and the question tab is a little bubble, speech bubble with a question mark in it. The question mark is where you can chat and leave questions. The other chat is simply where organizers and presenters can chat. So we didn't do that. That's just the way GoToWebinar works.
I understand that GoToWebinar is actually opening it up so that you can actually chat. But
we should look into that, because and also if you'll notice, if we haven't chatted lately, it won't even show on the interface. It's different than the interface we're looking at, Jeff. I don't know if he knows that. The end user interface is different, and if we don't chat for a while, they won't even see the chat box, and that's why sometimes they don't even see the box. That's for you, Jeff. That's a little tidbit of information I'm passing on to you today.
Thank you. All right.
You're welcome. I'm here for you.
Okay. I do want to kind of make a special point right now. If you want to get the extended trial where you buy a month, get the second and third month for free, that's $75. You can get MetaStock for $75. It's a delayed chart. You can scan during the day. You can look at charts during the day. It's available here at the trial if you go to metastock.com/conf promo. And you can do that And you can also take advantage of any of the other offers that we're talking about today. If you have questions, we would love to talk to you. Give us a call, 800-882-3040. Greg, the reason I called you in here wasn't so that you could just look handsome right there. I wanted to help you give a prize. And I noticed, you might have noticed, I forgot to give a prize between, we're a prize behind, so we're going to do two real quick.
That sounds great. Can I look handsome at any rate?
You can. Yes.
Okay,
yes.
thank you.
That you have my permission.
Go ahead.
All right. So I'm going to have Greg give me two numbers quick back to back. The first one we'll look up and they'll win the Steve Bigelow's Candlestick Profits, Eliminating Emotions book, written by our dear friend Steve Bigelow. Steve passed a few years ago, but he's one of those people who was a great partner in MetaStock and had a huge impact on my trading. The second number is going to win the High Profit Candlestick Patterns book by Steve Bigelow. So I hope you've got your Google random number.
I'm ready. I've got two numbers. I've got two numbers in the chamber and ready to roll.
Okay. It's a higher number today, though. I need a number between 1 and 6,451, please.
Okay. Well, whoever those other numbers are, sorry, I'm going to re-roll it. Okay. The first number is 3,963. 3963.
Okay. That is Slava S in the USA. And let me just make a note of that real quick. Note. Okay. And then the second number for me, Mr. Lewis, please.
Yes, that is 4,574, 4574. Again, both of those are Google random number generator driven. Ooh, our boss just popped in for 1 microsecond.
And that is Steve P in the USA.
Oh,
also, I want to point out that even though we are using the Google random number generator,
yes,
they haven't sponsored us yet.
yeah.
Oh my gosh.
But if you're listening,
come on, Google, hook us up. We're on the G Suite.
All right. Greg, would you like to introduce our next guest?
Oh, I don't even feel worthy. Does he need an introduction? Honestly.
Probably. Yeah. Here is
so,
the guest.
Mr. Scott Brown has been with the MetaStock firm, I'm going to guess, approaching 30 years. He started out, if I recall correctly, in support or sales. Yes. Mm-hmm. And he over the years has raised to the ranks of supreme boss and owner of MetaStock through a lot of dedication and a lot of work, and I should say a lot of love.
Yes.
And he's probably the best boss in the whole world. I'm not just saying that because he's my boss.
Greg, we're not supposed to refer to him as the supreme boss in public.
Well, not in front of other people.
All right.
Well, break the leg, boss.
If you want to.
Hey, Jeff, are you going to do the?
Do you want me to do the legal disclaimer?
Yeah, let's see how good you are for take two.
I don't think I'm ready, but I can be.
Oh, okay, you're fine then. I have it here.
No. Okay. I tried to say it different each time, if you've noticed.
Oh, are you going to try a British accent today?
No, I wasn't going to. But today's demonstration, I can't do that. Today's demonstration is designed to instruct you on using MetaStock in the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. Scott, there you go.
Super impressive, Jeff. You are amazing. I mean, that's crazy. Monday, there was only maybe 5,200 and there's 6,400 today.
Yeah.
On the numbers.
That's
awesome, Jeff.
Thank you for everybody that's registered, that's watching, being part of this. It helps us keep this event going.
Yeah. And let's be honest here, everyone. A huge thank you to Jeff Gibby, Greg Lewis, can you imagine how many speakers do we have this week, Jeff?
46.
Can you imagine organizing, contacting 46 speakers, and then putting a conference together
I can
and
imagine
making
that.
it free
Yeah.
for everyone? Come on. Jeff, you've definitely gone above and beyond.
Cool.
Great job for you and Greg Lewis. Thank you. Let me share my screen here.
Okay. You should just be
and
able
we'll
to hit
see.
the share button.
Yep. Let me just get that, and we'll make sure that you see it. And then, and you know what? Then maybe I'll kick you out of the room, Jeff.
Woo! That'll be okay.
I know that you have to tease people about doing that. So, can you see it yet?
Yes, we can. It took a second
Okay,
to
cool.
load in, but I can
Awesome.
see it. I can see you. I do this really well. I'm gonna get out of the way. It's your turn. Go.
Okay,
Go.
thank you so much, Jeffrey. I'm gonna shrink this a little bit because I think that throws me off as well. So welcome. So glad that you joined today, along with the other 6,500 people that registered. With MetaStock, we have a deep history, right? MetaStock has been around since the late 70s, since the time of Microsoft. Obviously, we're not nearly as big as Microsoft, but to have a tech company that's been around since the late 70s and endured all the different technologies is pretty amazing. We're not a fly-by-night company. We're a company that's done this, and man, we've been through a lot, and many customers all over the globe. I think at last count, I've been to 75 countries, and MetaStock has global data. And so everything I do today inside of MetaStock 20, you can, most likely get from any of your local exchange, whether it's, Singapore, Dubai, Buenos Aires, wherever it is, in the world, or if it's New York and Nasdaq. Obviously, we have that data for you. I've been with MetaStock for over 25 years. I started out in inside sales. I just graduated from college, and back then there was no internet, so I had to go to the newspaper, and I went through the help wanted section and found a job for MetaStock, and became a level entry salesperson, and worked my way up to large account sales, and then was in charge of all of our international sales and all of our events. And then I moved into the director of sales and marketing, and then I went into the president of the company. And I was the president probably from 2008 or 2009 to 2013, and I'd gotten a new boss that was managing the trading floor for Deutsche Bank. And I went to his office in New York, and that's where our headquarters used to be, and under Thomson Reuters. And it was during that Great Recession. And he kept saying to me that, hey, look, we need to get back to our core business. Our core business is so important. And after he said it for the fourth time in about 10 minutes, I knew that I was pretty confident he was trying to get rid of the company, and he was going to sell us off. So I said, hey, are you looking to sell us? And he goes, yes. And the smartest thing I ever did, I responded back instantly, and I said, can I buy it? And he goes, sure. And so it took us about a year, but in June of 2013, I actually bought MetaStock, and I own 100% of the company. So that's kind of a cool thing. And we've created more upgrades and more functionality in MetaStock from the last 13 years than we have in the 20 years before that easily. And you're going to see MetaStock 20 today. We just released it in November. So if you're a new user of MetaStock and you try out MetaStock today, you'll get everything that I'm showing. And if you're an older user of MetaStock and you're using maybe version 16, 17, 18, 19, MetaStock 20 is unbelievable. We've really sped up the data, so that will help you with your explorations and things like that. And And with that being said, let's dive into the presentation. So the MetaStock forecaster, it really analyzes the past. We had an individual that came to us and said, well, do you have anything that analyzes the future? I've presented MetaStock just thousands of different times around the world in front of hundreds of people, per time. And it's interesting. Every once in a while, you'll get some guy that'll raise his hand and he'll say, hey, that's great that we're looking at the past, but do you have anything that looks into the future? And that's really what we wanted with the MetaStock forecaster. It looks at different trading systems historically and how they've performed. And what it does is it draws a cloud into the future. And we'll kind of get into that and show you how to do it. Jeff already went over that with us. It's actually 32 years. I think that we've won the best analysis software in our trading group. And that's given by the readers. And Task Magazine is definitely the flagship periodical for traders around the globe. And to be recognized by them for 31 years, come on, that's unbelievable. So the forecaster looks at past events, and it's going to determine future probabilities of the future price action. And it's going to give you a very, very clear way as to where the forecaster thinks it's going to go. It answers that question, where are prices most likely going to be in the future after an event occurs? And an event could be anything, including crossovers, divergences, overbought, oversold, breakouts, or candle patterns, okay? You can actually draw your own patterns in MetaStock. I can't tell you, out of all those hundreds and thousands of times of demoing MetaStock, someone will say, hey, do you have a cup and handle pattern? Do you have a triple top pattern? Do you have a head and shoulders pattern? We did something so unbelievably cool with MetaStock is you can take your mouse and actually draw your pattern right on the chart. And then MetaStock will take that chart or that pattern, and it will create all the formula language behind it, and it will create a system based on your customized draw pattern. And then we can actually do some, analyze it and do a little bit of research on it. You can copy patterns directly from the chart, and it ranks recognized events. There's a lot of great things that I'm going to show you that we can do. So these event recognizers that we have inside of the forecaster, here's a list of just some of them, but now we can create our own, and I'll show you how to analyze and use that library. They're really just systems. As you look at them, you're like, oh, okay, I've heard of a MACD or the moving average or the CCI oversold. Those are just different pattern event recognizers that we have inside of the software that you can choose to use. The next thing that we have is that I said it would draw a cloud, and that's what you're looking at right there. So when this event marker occurs, that means that during the moving average 50 cross down, it triggered an event, whether it was a buy or sell. You click on that triangle, and it will actually draw out a cloud. And that cloud will specify into the future where we think that this stock is moving to, okay? Now, right here, this as this projects out this map into the future, this is an image that doesn't change, okay? Now, if you click on the past performance right there, this is what comes up. And a lot of times you'll say to yourself, well, back here on this date, and it goes out, that's fine, but this is a fixed cloud. Now look at all these new bars that have come in. Well, what we did is when we click on past performance, now what we do is every new bar that comes in, we redraw the cloud. Okay. So it's really cool. And I'll show you how this works. Here's an example of the Adobe systems with the CCI, Commodity Channel Index overbought events, drawing it into the future. And you can see how that mapped with the actual price chart. It actually matched it really well. There's a lot of ways to get into the forecaster inside of MetaStock, and I'm going to show you that right now, how to do that. So when I'm inside of MetaStock, and here's my chart of NVIDIA that I'm looking at. Now I can, if I already have a chart up, I can just right click, click forecaster, and it will automatically add that security into the forecaster. Or I can come down here to our new power console. Again, this is MetaStock 20. I can click on the forecaster, come up here and type in, any symbol or a number of symbols, and I can choose the interval, and it will go ahead and put that inside of the forecaster. Now you can see here we have data from all over the world: Asia, Pacific, EMEA, North, South America. We have the indices from the world. We even have things like Bitcoin as well that you can analyze, or mutual funds, or ETFs, fixed income, things like that. But this is how you would access it. Let's go back into the PowerPoint. So we're going to look at a little bit of this. You know what? Let's just do this. Let's do this. Let's actually go into the software and really let's analyze it, because there's not, who wants a PowerPoint, right? Let's get into the software and do some real analysis. So right here, we're looking at NVIDIA, right? And I go to forecaster, I pop it up, and you can see here that NVIDIA, we're looking at different analytics. So let's actually come in here and, you know what? Let's look at most distinct forecast cloud. And what we're looking at is all of these recognizer libraries. Every time I bring in a security, it is scanning every single one of these patterns. Look at that. There's a lot of them here. I'm sure I have well over 100 in here. And when I bring it up, like NVIDIA, I can sort these by these 8 different, I think it's 8, maybe it's 7, oh no, it's more than that. I can look at a highest profit potential long or short only, most accurate current forecast, most pronounced current breakout, the most distinct forecast cloud, the most recent event, or most events. Now, when we're looking at these types of things, when you have more events, it can actually give you a better defined and clearer cloud that will reflect on the future. Because if I'm only going to draw a cloud based on 4 events, statistically speaking, that's not a great, pool of statistics to look at. So I can come in here. Let's start out with this just for fun. We're looking at the LCI resistance pivot bounce. And if I look at 30 bars, this will, and I draw it, it says, look, I can't even draw that out because there needs to be at least 5 events that have occurred. So let's try and get something with at least 5 events. Here's something with a little bit more. And I can come back here and I can look at 30 bars. Okay. Well, look at that. It's like, oh, wow, that there weren't that many to look at. It actually went through it, but there was a down period there, right? I can come to this one. Okay. So what I'm getting at is I like to look at, when I do a cloud, like this one finally has like 8 or 9 event markers in it. Look for a chart and the amount of event markers with at least, 10 to 15. But look at this, over 30 bars, it really tied in well with the price chart. Now over here is that I have my probability scale. If it's dark within the cloud, it's a lesser probability than if it's brighter. So as it goes kind of red in there, it kind of gives me that 80% probability that it might move through that the price chart. Now let's remember, and I'm going to say this numerous times today, there is no guarantee that the price will go through the cloud. I want to make that very clear. This is just analytics showing us historically, if you were a fan of the stochastics, it's looking at this historically. Every time there was a buy or sell event marker, and then what it's doing is calculating all of these statistics here in the bottom right of our screen. And it says, look, let's read some of this so you can kind of get an idea of what these statistics look like and what it means to you as a trader. But this event occurs 10 times, really over the last year is all it's saying. Usually I'm looking at more data than that. It only brought out a year's worth of data. So but this is hourly data. Okay, so that makes a little bit more sense. So we're looking at hourly data on an hourly chart, and it's looking that over the last about year, which is a lot of data for looking at during the day of trading. On average, the event occurs every 103 bars. The shortest gap between events is 2 bars. Statistically speaking, 7 bars after the event occurs, and with a probability of 95%, the closing price appears to be about 0.72% lower with a standard deviation of 0.0279. The statistical margin of error is about 31%. So it has a high percent of statistical error there. But the more event markers we have on the chart, the less that the statistical margin of error, it actually goes down, okay? So we can go in here and we can say, look at this, and it performed really well. We can come in here and say, what does a 90 bar cloud look like? It shows us kind of how that performed. But look, it says out here with NVIDIA, it thinks that the price is going to go there. So let's say it's trading there at 67,200. If it can make it up to, per se, 69,000, maybe you could get some cheaper options that way, right? And a lot of traders like to use it that way. Okay, let's look at what 180 bars looks like. So 180 bars, it says, look, in the future, we think it's actually going to drop further. We think that it's going to go down, in the next, 51 60-minute bars. It could be all the way down to 65.5, right? So it's an interesting take there on looking at that analysis. Now, remember the forecast cloud here, because remember, right here is where it's generating the cloud. But look at all the new bars that have come in. This is a static image, and it will not change, okay? So as we look at these bars, what happens is if we pull up the forecast cloud, every time we get a new 1 hour bar, it will change how this cloud looks, and it will build a story, bar after bar after bar, showing us where it thinks it's going to go based on the stochastic positive divergence, okay? So that's a look at NVIDIA. How about we take a look at Bitcoin, right? Let's go ahead and do this. Do I? Okay. So right here in Bitcoin, we're looking at, in NVIDIA, we looked at stochastics. And right now what we're going to do is let's take a look at some of these. Let's find one with a little bit more event markers and 9, right? Let's try and find one with, here's 12, and this is the Gibby 50th because we created a custom indicator. But let's look at this. It says it's occurred 12 times, and we can kind of go back in time, and you can click on any of these event markers, and you can kind of say, okay, is it working? That looks pretty good, doesn't it? Let's go back even further and see if it'll let us look at some of these. Okay. You can see those. Now let's go here to some more recent ones. Okay. What I'm doing is checking these because I want to build confidence in this trading system, that we've created. And it looks like it's doing pretty good. Let's look at our latest one. Okay. Look at that. So a bright yellow. Bright yellow is a very high probability that the price is going to go through it. And as you see, it trended up and it kept that price through there. Let's look at a 90 bar and see what happened. Okay. And as we all know, Bitcoin has been a tough one to trade, right? It's dropped down quite a bit. Let's look at 180 bars. Okay, so it's kind of showing you, and look at that, clear back here on February 13th, all the way out here to, 60, a lot of different bars into the future. There's just an inkling of that purple, and it's showing you that, hey, clear back here, it called it all the way to here. Let's look at the forecast cloud. The forecast cloud as of today with, 60-minute data, it shows you that, the growth, it says, hey, look, it might drop 1% or 2% out here, but really it's not calling anything too crazy of an increase or decrease, on Bitcoin, according to, the indicator that we're using, which is a custom indicator we created, the Gibby 50th. So you can kind of see how that works there. Let's jump now to crude oil. I don't know if there's any oil traders out there. And what we're looking at is the highest profit potential. Now remember, however you select any of these processed recognizers, it will sort it based on, what it thinks are the best performers. But let's look at this. Let's look at the moving average 50 cross up. And we're looking here again, we're looking at crude oil. We've had 27 events occur. So let's kind of go through some of these. Let's select this one. Okay. Followed it a little bit there. Okay. It's starting to really grab hold of it. That looks a little bit better. Wow, look at that one. Called it from the top up here at 66 all the way down to 60 in a 30-day time period. Wow, that could have helped a trader out for sure in 30 days. We're looking here at a daily chart. Let's see how it looked out here on the latest event on January 9th. And let's look how it performed in 90 days. Wow. So it's saying on a moving average 50 cross up, it thinks oil is definitely going to come down. Does that mean that it will? No. But if it did, and it kind of came through some of this at 56, and you're currently trading at 64, that'd be an interesting move. As we look at the forecast cloud based on the moving average 50 cross up for crude oil, you can see right here that a high probability it remains the same as right now. But according to the moving average 50 cross up, in the future, in about 45 days, it feels like it could drop about 5% according to that. Now, what's interesting, let's look at the statistical report, because now we have 27 bars instead of, I think it was 9 or 12 we were looking at before. And it lowered that statistical margin of error to 19%. So again, statistically, 7 bars after the event occurs, and with a probability of 95%, the closing price appears to be about 0.56% lower, with a standard deviation of 0.0516. Now, and you can even go further down. Let's look at 60 bars. It says, look, the closing price appears to be about 3.69% lower every time I get a bar 60 bars out, with a standard deviation of 0.1177. And that statistical margin of error is 19%. Okay. Now, this last one, we're looking here at Microsoft. Inside of Microsoft, we're going to look here at the most accurate current forecast, and we're looking at a trend surge down. Now, look, there's 39 events this occurred, right? Which actually dropped our statistical margin of error down to 15%. And for 30 bars, we're actually going to, let's look at how this performed. So we're just going to randomly select some. Okay, it feels good. Let's see how it performed event 22. Okay. Let's come up here. This will be an interesting one because you have some up and down movement here. Now, when this is not going to work well is when there's an event, maybe there's some news that they sorely missed something and you get a big gap on your chart. Obviously, that gap hasn't happened historically, so it has a hard time calculating that into the future. So that's something for you to keep in mind. Okay. So something like this, right, would be hard for it to calculate because that is such a massive gap, right? But let's take a look at this last event marker and let's see how it's performed. Okay. So it's kind of on target for that. And let's say 90 bars on the trend surge down. It's saying, hey, look at that out into the future. It kind of feels like it's just going to maintain where it's at right now. Again, if we come up here to the forecast cloud, for every single day that it's brought in, over 30 days, it's kind of the same. Yeah, it doesn't really feel like it's moving anywhere according to the forecast cloud for trend surge down. So that's kind of interesting. Okay, let's move into, I'm going to show you something inside of MetaStock, how you can scan these. So if we want to scan something, we come over here to our Power Console and we go to Explore. Okay. Now, when we come down to Explore, here right now is our Explore console. MetaStock has a very powerful exploration tool inside of it that people have used for decades and decades to sort through the stocks that they want to look at, right? So right here are all the, the different forecaster scans that we can kind of look at. And since we were looking at trend surge down, let's go ahead and do a scan on that with the Nasdaq 100. Now, this is looking back at 1,000 different bars, which is about 4 years of data. And what this is sorting through is this is telling us, if there is an opportunity in the Nasdaq 100 for an event marker on trend surge down that we could look at. And so as it scans it, instead of doing this by hand and trying to figure all this out, MetaStock will really, come through and help you out and to find those. And I love that, hey, look, it's not finding anything right now, and I didn't know if it would or if it wouldn't. But I'm fine with 100% rejected, right? Because it just means that it's very selective. So we come back up here again. Let's try something else. Let's look at stochastic oversold. Let's scan those, see if we find something. Again, scanning the Nasdaq 100, and it's going through that, and it's going to show us if there's anything that's hit, on the day. So maybe it will, maybe it won't. But I just wanted to introduce to you the scanning tool of MetaStock and actually how we can use this inside of, there is one that came back, so 2. So right here, we come in here and it says, hey, look, there's Picard or Tesla. If I want to bring this up, I just double click. It'll bring up the stock for me. And we're looking at the stochastic oscillator. And it's as simple as just right clicking, going to forecaster. And now it is right on the chart. And I went from not knowing what to trade, you know what I mean, to coming down here, and I can sort these by recognizer name. And I can come down here to the stochastic oscillator. I think it was the stochastic overbought, maybe is what it was. And you can tell there's an opportunity. It might have been the oversold. Nope. Right here where we can come in and we can actually do some analysis now. We can move that cloud out forward. And you can see, look at these opportunities that we found, inside of the exploration tool of MetaStock. Okay, now put your seatbelt on. We're going to do some really, really cool things inside this. So what we want to do, first things first, is I want to go up here to the recognizer library. Again, the recognizer library is a place where it shows all of my different systems that the forecaster will calculate every time I bring up a new security. Now, every time I could enable them all, I can disable them or choose the ones that I want to look at just by selecting them. But I just always leave all of mine enabled. If I come over here in the top right corner, there's something called Draw New Pattern. And if I click on the Draw New Pattern, this is where it gets really fun. So I can come up here and say, look, I want to do a head and shoulders. Now I take my mouse and I draw a head and shoulders pattern. How cool is that? First of all, that's cool that I can just draw any type of pattern that I want. Now, all of these mini circles, I can manipulate them. So if I didn't draw it like how I wanted to, and I wanted to pull these down a little bit more, I could do that. and you can see, you can manipulate it that way. Over here, if I wanted to create this, oh geez, if I wanted to invert the pattern, I can invert it. I can reverse the pattern. So if I wanted to do a reverse head and shoulders, I could have this pattern here and type in a reverse head and shoulders, and I could click save. Now, what this is doing is it just created a pattern on my chart here. Reverse head and shoulders pattern right here. It draws a little bit of it so I can see it. And I can go out there and I can rescan the selected analysis for the chart, and it will bring back anything that occurred. So right here it says, look, it's a 76% match. Here is a 75% match. And it's got to be a minimum of 75. And there's a 75% match. So let's go in there and say, okay, let's draw a different pattern. Let's come in here and say, let's call this one a surge, a bullish surge. So I call it that. And what I'm doing is I am wanting to see anything with kind of a bullish pattern. So there it is. I click save. I come up here to bullish surge, and let's go ahead and rescan that analysis. So I just created two specific new analytics that are completely pattern related. MetaStock then creates all the formula language in the background, programs it, and automatically puts it here on your chart. So here's the bullish surge for them. And you can see it did 12 different opportunities. Let's go ahead and select one of those. We'll select the last one. Look at that. Went right through my yellow. And let's see how it performed. That's 90 bars. Let's see how it performed on 180 bars. There you go. And then on a forecast cloud, every day we get a new bar, right? And with that new bar, it tells us exactly what it's doing and going to happen into the future. Again, no guarantee. But as you can see here, over the next 1 bar, 7 bar, 14 bars, it's saying, look, with this security, you know, and maybe it really feels like it's just going to kind of maintain with maybe a slight downfall over the next 6 months at the end of that 6 months. Okay. So let's come back up here and look at the price. Now I've got, this is probably, I'm saving this to the end of my presentation, is that closer to the end, I should say. This is one of my favorite tools inside of MetaStock. This shows you really, it's a powerful tool that you can do. And you come up here and you select user defined pattern select. Now, a lot of you out there, you have your own criteria. You have your own ways of boosting or finding a trade, right? If this specific pattern occurs, I always love to jump in, right? And if that's you and I'm talking to you, you have to get this because this will make your life so much easier. So let me do this. Let me zoom in and let's get like maybe a pattern of 4 or 5 bars that are going up, right? I don't like that one. Okay. I'm going to keep looking because I want this to be very specific. Okay. Okay, let's find. Okay, here's one. I'm going to select these 4 bars. All of them are growing. It's above the other bar. Do you want to capture the selected price formation as a user-defined pattern? Yes, yes, I do. So then I come in here, and now what I can do is name this pattern. So let's name this pattern. It's trending up. Let's come up with a unique name. Let's name it MetaStock bullish. And what we do is we come in here, we click save, and we come down to MetaStock bullish. And I want to rescan the selected analytic on it. So it's taking, it looks like we're doing Bitcoin. And it's showing me the MetaStock bullish. There were 107 times this occurred. And look at this. It drops your statistical margin of error down to 9%. And as we come in here and look at 30 bars, here's a 30-day bar pattern. I love it when there's this many patterns or event markers on the chart because statistically speaking, it has the opportunity to be much more accurate, in my opinion. And as you can tell, you can see it on the chart. Wow, look at that. It just keeps calling it. Yeah, and we're looking at hour bars. It thinks that it's still going down a little bit right there. And what's cool is you can hover over these bars, these event markers, and it tells you, look, 95% match. You know, you can come in here and say 91, 94. But if we come up to our forecast cloud, it's saying the same thing. Look, after 1 or 7 bars, you know, after 14 bars, it looks like it might drop 1%, right? And so it really gives you that view. Let's take a look at, let's do NVIDIA. And let's take a look at the recognizer library, rescan selected analyses. Man, look at all those opportunities, right? The event markers, 166 times this occurred, which lowered my statistical margin of error down to 7%. So as I click on these, again, these would show you into the future, right? These are 90 bar clouds. Look at that. Here's a perfect example of one that didn't work. And I wanted that to be clear to you guys that, hey, it's not going to work every single time. But as you get more and more comfortable with it and you feel like it's matching, right? It, you know, let's look at the last 2 here. It gives you that opportunity to build more and more confidence as more event markers. So with NVIDIA and our indicator that we just created, it says, look, everything feels like it's going to be the same. It might come down a little bit after 14 bars, maybe 1 or 2%. But again, this is only a 50% probability, right? Based on this. So, you know, quite interesting, you know, how that's done that. So again, MetaStock Forecaster, it can do a lot of different things for you. The MetaStock Forecaster can go back in time with a specific system, put that system right on your chart with these event markers, and as you click on those, it can draw a 30-day cloud, a 90-day cloud, or a 180-day cloud. And it will go into the future. It's a static image, and it will always remain the same. Now, if you want to go into the forecast cloud on that tab, every new bar that comes in, whether it's a 60-minute bar, 30-minute bar, 10-minute bar, or hourly bar, every time we get a new bar, this cloud will change and morph into, as the current data comes in, instead of just being a static image. Again, another thing we can do inside of the forecaster, we can create our own patterns. We use our mouse, we can draw our own pattern, and it will, you can do the analysis based on that. You can also highlight any number of bars on the chart, and it will create another system for you. And then in the background, we create all the coding, all the formula language, so you can do those analytics, and that's a really important feature inside of MetaStock. And this is something that no other software in the world has. This is patented, and we're proud to have that. We are the only ones that are allowed to draw these clouds into the future. And so, it's taken us years and years to get the patent, but, we're so proud that we do have it. And so let's kind of go back into the PowerPoint here. And we're going to talk about how much does it cost and how can you do this. There's two different versions of MetaStock. One is a real-time version. A real-time version is someone who is trading in real time. It could be a day trader or a swing trader. And with the software and the data, it costs $265 a month. Now, that's going to give you, we're doing a great offer. If you buy 1 month, you get 2 months free. So for 3 months, it's hardly going to cost you anything. And you're going to get all these analytics that hundreds of thousands of users have bought MetaStock and use, right? MetaStock 19 daily chart, it's $69 a month, okay? That's it. That includes your software and that includes your data. And everything that I've done today is MetaStock 20. I know my right here it says 19, but we just barely released MetaStock 20. So everything in your everything I did today, if you try out this 3-month trial, you'll get MetaStock 20, and it'll have all the features that I've included. If you're an individual that's an older user, let's say you're using MetaStock 18 or 19, you're going to want to upgrade and get this. This also includes the data for your region. So you could be a North or South American trader, Europe, Middle East, or Africa, or Asia Pacific. We're going to have that data available for you. You get support. You're actually going to call and you're going to talk to someone in my office right now here in Salt Lake City, Utah, and they can even take over your computer and show you how to do things if we need to. And then the last thing is we created an unbelievable tutorial training manual called Unleash the Power of MetaStock, and that's $99, and we're going to give that to you free if you will take this trial. It's buy 1 month, get 2 free. You can sign up by calling 1-800-882-3040, 800-882-3040. And again, these are going to be sales reps that are in our Salt Lake City office right now standing by. You can go to our chat if you want to do it that way. It's metastock.com/saleschat. Again, metastock.com/saleschat. Or you can go to our landing page, metastock.com/comp promo. And really just wanted to thank you for spending the last hour with me going through the MetaStock forecaster and the power. Again, this is just only maybe 10% of the power of MetaStock. There are so many more features and capabilities inside the software that could really help you. I would really, exude you to try this out. Give this 3-month trial. You're here for only one reason. 6,500 people wanted to come to this conference, okay? The only reason you came to this conference was to learn how to trade better. MetaStock is that tool that will help you trade better. I just want to thank again Jeff Gibby, Greg Lewis for all the time and effort they put into this. Thank you. And I guess, Jeff, are there any questions that we have that we could answer?
Where's my mic? We did have a comment from a user trading profitably in YouTube, and he said, "Hola, I had the good luck to meet Mr. Scott once in Asia. I liked him, a great guy."
There you go.
We also had another comment from Greg Lewis, and he's like, "Scott's the best boss I've ever had."
He was trying to get me to name the indicator after him, and next time I will do that.
Patricia wanted to know if you have Forex pairs or US dollar index.
Oh, that's great. Usually I put a Forex pair up there. Yes, 100%. We have the Forex available up there, and we have those pairs. We could pull up the euro or US. Yeah, we do have that data.
Patricia would like to know if there's YouTube tutorials to watch or to research about this.
Boy, that is a great question. Our YouTube channel is youtube.com/MetaStock, and we have millions of views and hundreds or if not thousands of videos. And they're all free. What you need to do is go up to that YouTube page. You need to like, and follow, because there is so much valuable training. For example, correct me if I'm wrong, Jeff, but you're putting this up on YouTube on our channel.
That is correct. You're live on YouTube right now,
yeah,
Mr. Scott. So
I'm
there you
YouTube
go.
famous. What can I say?
Yep. Cool. That's all the questions.
Okay.
So let me. Great job. MetaStock.com/conf promo to sign up for that 3-for-1. It is or MetaStock.com/sales chat. If you have questions, let us know. We'd love to talk to you. You can call us toll free here in the U.S. We're in Canada, 800-882-3040. Scott, thanks for joining us. Thanks for spending another hour with us.
Would you please excuse me?
I had to bring you back.
Please excuse me so I don't bring down the whole conference.
All right. See you later.
Thanks, Jeff. Thanks, Greg.
All right. Along the lines. Whoa, that's a big picture of me. Let me go ahead and kind of share my screen real quick. Along the lines of kind of what Scott was talking about, there's so much software that's in the program. We see so much competitors that come in and they develop software, and it has a nice list of bullet points, but it doesn't have any depth. And what's one of the things I think MetaStock really excels with? There's hundreds of systems that are pre-built in there. You can test them. You can get ideas. You've got the patented forecaster Scott just showed you. You've got the system tester, the expert advisor. It's such a great tool. I use it every day. I've already used it to kind of evaluate my trades, close a couple. Going to run a scan later, see if I want to buy any more. It's a great tool. And just to kind of iterate, these are a couple of the things that I kind of like to highlight. You'll get an Ichimoku master add-on that'll kind of help you understand the Ichimoku Kinko Hui indicator. There's a gap system, and these are just the additions that were put into the MetaStock add-on last time. There's a Michael Murmer's ETS system that's just basically included for free. There's the Jake Bernstein expansion contraction indicator. You do as part of your service, you get a white glove installation appointment. I'd recommend you do it. Patricia, that's another great way to learn. You can sit down with one of our support reps, and they will just walk you through it. And Patricia, I know you won the contest on Monday. I got your complimentary 3-month account set up as a contest winner. But I would recommend they will still reach out to you and see if you want to do a one-on-one appointment. I would recommend you do it. So they'll give you a guided tour, and of course you do get unlimited access to support. But I could make hundreds of slides like this with different things that are part of the software. The truth is, it's been rated #1 in its price category for 32 years. We've been making it since 1982. We are continuing to just improve the software and add features and add functionalities. And honestly, we're just getting started in terms of the stuff that's there. But what I'm hoping to this week will help you do is it'll help you find those things that are going to help you take your trading to the next level. Because I know if you start MetaStock, you're not going to outgrow it. It's going to be a software that grows with you. If your trading appetite or your risk style changes in the future, MetaStock can adapt and help you find a better methodology to work with that. So 32 years has been rated #1 in this price category. You can get the DC version, which stands for delayed charts, for $75 a month. That'll give you a daily, weekly, monthly, yearly charts. It'll give you a delayed update that gives you real delayed quotes. I almost said real time delayed quotes for any market. So you're interested in basically all markets on Earth. You can scan against that data at $75. Really, how many trades do you need to find that are going to pay for $75? So the fact that we're going to go, if you sign up today, it'll go till May 18th. We'll give you 3 months for the price of one. There's no commitment to keep it. I want you to be one of our customers that's just with us for decades. There's people I signed up 30 years ago, still using MetaStock, still loving it. It's useful. It's something that's helpful. And if it's not, I expect you to cancel your subscription. But try it. MetaStock.com/conf promo. You can call us 800-882-3040. We'd love to talk to you. Or MetaStock.com/salespchat. So Patricia says, cool, awesome. It's awesome and a lot. I like to take my time watching after that. Patricia says, I'm in trades. Euro, US dollar. Okay. Thank you. Okay, cool. All right, let's kind of move on. Do want to say thank you to Stocks and Commodities Magazine for sponsoring the events this week. We really appreciate all of the support they've given us over the years. They've been great. Sean, all of those guys do a really good job at Stocks and Commodities. And you can find get your own subscription to Stocks and Commodities. You'll get a monthly mailer that gives you access to all of their 17,000 trade articles if you go to traders.com. So without further ado, the next guest is John Seville. John has a great accent. You're going to love it. In addition to that, I have fun conversations of talking to John, I don't know, a while ago, about his company, Acorn Wealth Corp, and how they wanted to kind of, the goal of their organization was to take acorns and build them into oak trees. Acorns being the traders, oak trees being really good traders, I think is the analogy there. John does a really good job. And I'm going to go ahead and get him on here right now. John, let's get you started.
Great. Can you see my screen, Jeffrey?
I can see your screen and I can hear you.
Wonderful. In fact, we'll have to get in touch because we'll be hopefully traveling back through your way in Utah in a couple of months.
Yeah, I know some good lunch places. You should totally come.
Well, I know I missed you last time because we were racing the RV away from a snowstorm.
Okay.
Because it wasn't winterized, but this time we're going back into good weather, hopefully. So we'll.
Well, whenever you're in town, you're always welcome. We'll give you the extended office tour. John, I can hear you. I'll get out of your way. I'll let you get going.
Terrific. Well, great to see everybody, or virtually, and thanks for joining us, and of course the great day of speakers. And we're going to dive into some exciting things that are very relevant to what's going on in the market right now. Especially when you see a lot of the news and so forth is all talking just about directionless volatility and chop and noise. I get it, but we're going to dive right into what's really going on behind the scenes, because right now we're in a market where so many gurus and things like that. It's hard to know where to actually look for what's really going on. There's far too much information out there, in other words, and not enough insight. Who'd agree with that? I think it's a common thing that people struggle with. Where do you find the good, what's actually going on? And so that's what this is all about. Now, quick disclaimer, this is, of course, for educational purposes only, not a recommendation to buy or sell securities discussed. Acorn Wealth and myself are not registered investment advisors in a jurisdictional province or provide legal investment or tax advice. So always be aware of the risks of trading and never risk more than you can afford to lose. Speak to a registered financial advisor before taking any action. And remember, past returns discussed do not guarantee future results. Any stocks discussed are for illustrative purposes only. However, they may be stocks that I myself or the team at Acorn and Smart Money Trading may be holding or intending to get into. Okay, so to get back to this big theme that's been going on, and we've been talking about this now for a number of months, and excuse me, which is the great decoupling. And what I mean by the great decoupling is going into November and December last year, we started to see some kind of major institutional and smart money moves in capital that was going unnoticed by many back then, but has really started to play a meaningful impact into what's going on in the market today. So a quick show of hands. Type into the chat box, whether you're on YouTube or here in GoToWebinar, where do you think the market's going to go next? Up, down, boom, bust, or no idea? Boom, bust, or no idea? What do you reckon, as we say in Australia? All right. A lot of people are right now kind of in that no idea standpoint. All right. And oh, and by the way, now I just see a couple of, hey, Patricia, great to see you. Wonderful. No idea, says Greg. Okay. What we want to try and do is replace that. Patricia, love that answer. Patricia says depends on the sector. Bradley, bust. Richard, sideways. Okay. Let's dive into this in a more data-driven way, because the problem with how we generally answer this question is we look at what the index is doing. And so my argument today would be that we're not in a bull market. We're not in a bear market either, but we are in a selection market. And that's the most important distinction that I think you can make as a trader right now. And if you felt frustrated lately, if the market feels harder than it should be, that's not failure, that's feedback. That's information the market's giving you. So the market didn't get random, it just got much more selective. And when we approach things from that perspective, your entire job changes. So let's talk about that, right? Because this framing matters more than any chart I could possibly show you. When you start to get into a selection market, the market direction alone can become a bit of a false prophet, right? Because here's the problem that most traders run into. We've been trained to look at direction, right? So when we think about is the market bullish or bearish, we check futures, we check the S&P, which is often called the market. And then we treat the market like this single thing that moves as one. But in 2026, that idea is defunct. There's a big problem with that because direction no longer explains opportunity, right? Think about the last few weeks. While indexes have chopped and despite that, certain stocks to continue to surge with force, right? That disconnect isn't chaos and it's not just choppy volatility. It's information. And the most expensive habit you can have right now is letting index direction tell you what to do, right? So we all know the bull and the bear market, right? But the selection market is the silent killer. And if we take a look just a little bit beneath the surface of what a selection market can look like, and I call this the index illusion. It's going to jump forward a little bit. The index illusion, or the mask, is where the S&P looks one way. Like, for example, last year, the S&P looked fantastic. Just went up and up and up and up and up, right? But when you peel back the curtain and look at what's really going on behind the scenes, you see a much different truth. So let's take a look at the S&P as it is right now. Right, so there's our lovely MetaStock chart of the E-mini as of earlier today. Right? How would you describe the market when you look at this? When you look at this, what does it look like? Choppy, uninteresting, maybe even bearish. All right. Now, this is the S&P. This is the traditional market we refer to. Right? And remember, the S&P is weighted. So the top 8 companies account for a large majority, sometimes as much as 40% or more of the S&P's movement. In fact, last year through 2025, the majority of the move that happened last year was as a result of the major 8 companies, the Magnificent 7, whatever you want to talk about there. Followed by, a lot of the tech boom, following the AI software rally. Now, let's change the lens that we're now looking at the S&P through. So instead of having a weighted index, instead we're going to look at the same 500 companies, the exact same S&P 500, but instead we're going to make them all equally weighted. And this is called RSP, or as I like to call it, the real S&P. It's a really easy way to remember that. Because if we want to know what the market's doing, right, we're not just wanting to look at the averages, weighting those top 8 companies as the most important. I want to know what all stocks in the market are doing. Right? Because opportunity doesn't live in averages; it lives in pockets. So, type a 1 in the chat box if if looking at RSP is something new for you. Put a 1 in the chat, or type new into the chat. If this is kind of one of the first times you've looked at RSP, this is really valuable stuff, right? So when we look at RSP over the exact same time frame, we get quite a different picture of what the market's doing, don't we? In fact, let's put them side by side. This is RSP on the right and the S&P E-mini on the left. Same exact components, same exact stocks, but 2 completely different stories. Isn't that amazing? Right? So it's so important what kind of filter we use to look at the market through. On the left, looks bearish. On the right, booming away, making all-time record highs over the same time frame. In fact, if you take a look 1 layer even deeper, this just goes to show that divergence of what's actually going on beneath the surface. And we peel that mask, that illusion away. So this is ever since the beginning of November. And what we've got is just showing the different sector performances compared to the S&P 500. So the S&P 500 up 0.2%, technology down 7.5, healthcare 9.4. So, you can see across these different sector movements, the relative performance, that if you were in energy, for example, your portfolio might be up 23% roughly, just in the ETF. Whereas if you were holding some of the darlings of last year, the champions of last year's rally, technology, you might be down 7%. And so that same market can feel very different in 2 different people's portfolios, depending on just what sector of the market they're focused on, right? In fact, that's a 30% difference, a 30% spread between energy and technology. And that's a significant difference in your portfolio. What if your portfolio was up 30% more? Or what if your portfolio was down 30% more today? That would be a big difference, right? And that's the difference of just looking at the market through a lens of saying, hey, it's not a stock market, right? It is a market of individual stocks. And so when we stop treating the market like, you know, this one organism, and we stop talking about, you know, just up or down in the index, we get a completely different picture. How's it going so far? All making sense so far, guys? Right. So the trap that traders then tend to fall into is becoming too busy, right? Focusing on too many things. And that's often what leads us to miss some of these core trends that are going on beneath the scenes, that the simple truths that are hiding in plain sight. Because people are watching everything, multiple screens, multiple feeds, multiple news channels, and yet results still feel inconsistent. Why? Because information has continued to explode. But people's filters haven't adapted. And so we're drowning in information, but starving for a signal. And this is really expensive in a selection market, because what's going on is that money is moving. In fact, and what we've seen in the institutional money flow from reports like Goldman Sachs and Bank of America, quant strategists, Jill Carney, but you know, they've been talking about since November how a lot of institutional money was selling the leaders of last year, getting out of a lot of the mid caps, and that money wasn't going to cash, right? Even though there was this big exodus from these components of last year's rally, that money wasn't going into cash. Like, oh gosh, the market's crashing. Let's dump everything and sit in cash for a while. Instead, that money rotated, and we had saw major capital inflows, 25-year high record levels in areas such as healthcare, had a 10-year strong start. Small caps, incredibly strong. In fact, going into the beginning of the year, it was that there was the largest amount of stocks in the entire US market that were outperforming the S&P, one of the highest percentages of stocks, all stocks in the market that were outperforming the S&P was basically about a 22-year record level of these types of small caps and things that were catching up to the rally that they weren't really participating in last year. So this is yeah, and essentially what I'm saying is we don't need more information. We need a framework that tells us where the opportunity is. You know, this qualifies and this does not, and that is going to help us eliminate all of that noise so that we can stop trading headlines and start hunting where the capital is actually moving. Right? By the way, if this is something that you've been following yourself and noticing these trends, type me in the chat box. I talked about this, in fact, at the last MetaStock event, looking at where the real capital was flowing and looking at this concept of RSP and so forth. So hopefully not new. So let's talk about the $1 million question. So how do we trade it? What is that filter, right? And I'm just going to skip forward a little bit, because this is what happens in a selection market, is these pockets of opportunity that have been underperforming before have now started to have explosive moves to the upside, but they move quite quickly, in fact, and they generally do, but especially in a market like this, right? So how do we find them? So well, let me now introduce to you my absolute favorite strategy for trading this kind of market. In fact, in any market, it is one of our absolute go-tos for trading our own money, and it's one of our most popular strategies amongst students. I think we had a few people in the room saying how much they love it when I came on live, and that is the smart surge. Now, I'm going to dive deeper into smart surge as we go along, but I just want to introduce it in a really simple layman's terms to get started, right? Show you what it looks like as a finished product, and then we'll dissect the pieces of it, if that's okay with everybody. So what is a smart surge? What does it look like? Well, you can see here in MetaStock, this is an example on XFOR, which we'll just start with this one. So a smart surge begins with a very aggressive movement, up or down, because it can work in either direction, bearish surges and bullish surges. In this case, you can see the stock surged from $1.50 to $3.50. Now, in many cases, if you get a stock that's gone up 100%, especially in 2 days, you know, most strategies would say, don't chase it, sell it, right? And in most cases, that would be the right thing to do, because there's an old saying of going broke on breakouts, because so many stocks that do moves like that fizzle, right? And plummet straight back to the ground where they came from. You know, so a lot of head and shoulder breakouts or breakdowns, flag patterns, things like that. So many of them fail. But this is where smart surge is different. What the smart surge is doing is it's looking for a very specific quality in the patterns of how volume is moving, in what was happening before the surge occurred. It's looking at qualities of the stock that signal that there's major accumulation going on, or in other words, the smart money fingerprint. And we're also looking for stocks that are marching to the beat of their own drum. So stocks that aren't just going up simply because the market did or the sector did, but opportunities where there is something really special going on, where the stock is screaming, pay attention, because something major may be about to occur. And so that's the first part. First part is the big move to the upside or downside, depending on the direction. And you can see here that the smart surge system identifies this, and that's what these green arrows are: 1, 2, 3, 4, 5. Right? You can see written next to them is H or M. H is a high conviction surge. M is medium conviction. We won't worry about that too much at the moment, but it's just different things that they measure in the stages of the surge process. The most important thing is the green arrows themselves. Now, once the surge has occurred, what then occurs is a pause, right? A pause, like the stock taking its breath, and then the breakout. And that second wave, with all that smart money accumulation and that fingerprint that we're looking for on the stock's profile, all of that combined, that's where we know we have a high conviction trade on our hands, and that's where we take the trade. So after spotting the surge, we wait for the pause, and then after we break out through that coiled contraction, that's where we program our entry, and then as well our exit target, or targets. We have more than one. So in the case of this example on XFOR, we programmed in to purchase it if it broke through its contraction zone, which is around 350. And before we programmed that entry in, we also programmed in the target, which was at $4.43, and also programmed in the stop loss so that it would automatically get us out at a profit, or if it went the wrong way, and to cut our losses quickly and move on to the next one. So the whole process, from the way we scan for it, through the way we enter it, exit it, and manage risk, all of it is rule driven, and something that does not require you to actually sit there in front of the screen and watch the trade happen if you don't want to. And for this one, that was a great move. It was a $6,500 profit over 1, 2, 3, 4 days, or a 40% move in terms of the stock, or something close to that. Not bad. And so the job now is to go and do this exact same trade over and over and over and over again, to the point that it almost becomes boring. But who here would be happy to do this trade over and over and over again, even just once a month? Sure, a lot of people, right? So let's take a look at another one more recent. This was on PTX. This was a biotherapeutics company. Now, again, healthcare is one of the sectors that a lot of institutional as well as insider money had been active in going into late last year into the beginning of 2026. Now, we weren't necessarily having to scan specifically in those areas. In fact, we didn't necessarily have to be aware that the institutions were doing this, because just by the virtue of how the scan works, we just started seeing a lot of biotech stocks popping up in the smart surge scan. So it's kind of chicken and the egg, right? The scan's intrinsically doing that research for us, looking for these potentially very high quality opportunities, and the ones it's finding just so happen to be where the money's going, right? And so PTX was one, as you can see here, was alerted by the scan. And when it's alerted by the scan, it prints it on the chart as well. So you can see smart surge 1, 2, 3, 4, 5 days in a row. Then the pause, stock catching its breath, right? So where are we going to program our entry? Right above that level, around 210 or so, okay? Where are we going to program our exit? Well, based on the rules of the smart surge, which are black and white, and something we share with all of our members of the program, the pre-programmed exit, or at least the first target, was around 240. Okay, so we've now programmed our entry into our broker, we've programmed our stop loss, we've programmed our target, and then you let the strategy do its job. And so as you can see in this case, even though I'm not a day trader, this trade that was programmed in 4 days beforehand at the beginning of the week, then triggered again 4 days later without me being in front of the screen. And in fact, it even triggered in the pre-market to purchase PLX for 4,000 shares at $2.15. Later that same day, in the aftermarket, when I wasn't in front of the screen either, it hit its first target of 241, selling 1,895 shares. Is this making sense so far, guys? Because this is something, if you understand this, then anyone can do this. If you understand the rules I'm showing you here, and you can spot the surge, and you can and you understand how the exits are, the idea of programming exits in, it's repeating the same process over and over and over, right? So then what about managing the trade? Well then, so after it's hit its first target, we then have our second target. So there was a screenshot from my brokerage on that day after it had hit the first signal. And so you can see I've got my stop loss still sitting at 197, about 15 cents below what I paid for it at. So I'm going to raise that. I raise that to above what I paid. So I'm protecting my original capital. I'm also then protecting the rest of the profit I've made. So I'll move that stop up to say from 197 to say 223. And then if it stops out on the remaining half, it's still a win, still a good win. And if it keeps going further and hits the next target, it's an even bigger win. So it's the best of both worlds. It's not gambling. It's not like poker or blackjack where you're all in, putting all your chips on the table. That's not trading. That's gambling. So here we're managing the risk and we're managing the profit in how we manage the trade. So 293 is our next target. And then, as you can see, it rallied all the way up to there. And that's actually where it sat for the following few weeks. But all in all, again, very aggressive move from $2.15 to 293, almost a 50% move in 1, 2, 3, 4, 5 days. So if you're wondering, if some of the things you often wonder is, how fast does this perform? What's the average trade length? Obviously, I can't guarantee what the future may bring, but we typically expect a smart surge to hit its first target within 3 to 5 days. It could also stop out within those first 3 to 5 days, and both are good, because if it's not going to work out, I don't want to wait 3 weeks or 3 months to find out. I want to get out quickly, and I want to move on to the next one, right? So there's that's a great example on PLX. 1 second here, guys. All right. So you may have noticed when I was showing you PLX, I just thought this would be kind of cool. There was another one in that screenshot from the same day, which I'd only just taken, which is UAA. UAA. Anyone know what UAA stands for? Anyone familiar with that stock symbol? So you can see at the time, and by the way, full disclosure for legal compliance reasons, this is a position I still hold. But UAA, you can see I've got the January $7.50 calls. So if you're an options trader, this is me now actually trading options to leverage the smart surge strategy. You can see I bought those for 81 cents and 40 contracts. At the time, it was only up $157 or 4.8%. It was early on. Let me show you the why, though, behind the what. So Under Armour is what UAA is. Right? Under Armour. Now, there is not a chance that I would have been looking at Under Armour. But one of the other sectors that had incredible levels of insider buying and smart money from an institutional standpoint accumulation was consumer cyclicals. So as we went into December and January, one of the largest movements of capital from a smart money perspective was moving into consumer cyclicals, which went pretty much unnoticed throughout all of last year. A lot of them even going down. Under Armour was one of those kind of fallen angel type examples where it had really kind of fallen from grace and was actually going down when the scan alerted it to us. And you can see here, this is actually pictured in TradingView, just so you can see if you're not on MetaStock yet. This is how it looks in other platforms because we do support all platforms. But there you go, 1, 2, 3, 4, 5, almost 6 maybe smart surges in a row. Now, Under Armour was unique because it was actually already in its coiling consolidation zone when the surge started occurring, and it's picking up on that major move underneath the surface. While if you just looked at the chart on its own, it doesn't really look that interesting, right? But that was enough to get it on our radar, and of course we follow the same rules as I talked about before. We program our entry after the first surge above that breakout zone, and there it is. There would be the earliest point to potentially get into that setup. All right. And so the way that I traded that was again the $7.50 calls. UAA then just exploded from there. And is still going. This is a screenshot from a few days ago, but it's hovering around about the same price, I believe, today. Right, and you can see straight up, despite the market, the so-called market, the index direction being sideways, choppy, uninteresting, not profitable for some. Under Armour has been one of these diamonds in the rough that has performed regardless, right? So for that one, on the $4,400 I had in that account, that's up about $3,500. I also bought it in my retirement account, right? This was such a high conviction setup. I didn't just buy it in my trading account. I bought it in my TD self-managed retirement account, and I bought the stock for 10 grand, and I bought another 40 options there for another 3,500, which were up again about another $5,000 there. All in all, about $7,000 or $8,000 of gains so far. I've liquidated my stock now to take profit on that. I'm now just holding the options just for transparency's sake, part of managing the position. And again, I don't share this, by the way, to gloat. It doesn't matter whether it was $8,000, $80,000, or $800, right? Everyone's going to have different account sizes. But the point that I wanted to share with you on that was that this isn't just something that I'm here to talk about. It's something that I use myself every single day, as well as the rest of our coaching team and everything that we do at Acorn. Right. So when I say it's our go-to, I really mean that. and when we find it, it's something that we get very excited about. Right? All make sense? Perfect. Okay. So I've gone through some examples of kind of what it looks like, so we can get a kind of clear idea of what it is, what's going on there behind the scenes. But how do we find it, right? Because that's the million-dollar question, really, right? There are 8,000 stocks in the market, in the US market anyway. So if you wanted to look at every single one, try and see the handful that are setting up for a major move, how long do you think that would take you? Hours, days? You'd burn out before you found anything good. And in smart surge, this is ever more important, because out of the 8,000 stocks that we scan every single day, on average, there's only about 5 to 8 smart surges detected out of 8,000 each day. So think of it as 1 in 1,000 stocks. So statistically speaking, you'd have to look at 1,000 companies, 1,000 different charts to even find one smart surge on a day-to-day basis. And that's not to mention the hundreds of lines of code that that the smart surge recipe is doing on our behalf. That would be almost impossible to do manually. So the scan is a critical factor here, because without it, we can't find these 1 in 1,000 kind of opportunities in a timely manner. And time is important, because smart surges, as you can see, are things that could be about to imminently move, right? And if you miss that window, what ends up happening is, and without a scan, people end up doing one of two things. Option A, they just chase whatever's moving. So they sacrifice quality and often buy at the worst possible times. Or option B, they freeze and they just watch from the sidelines while the great opportunities pass them by. And then that usually leads to then revenge trading, where they're annoyed that they missed the best opportunities and then chase the next one almost out of spite. So these are all bad habits. And what I've learned after 17, 18 years doing this at Acorn Wealth is that the traders who win are not smarter, right? They don't have degrees in economics or work at the floor in Goldman Sachs and things like that. They just have a great filters and great rules that allow them to see setups earlier and execute. And that's what this is all about. No complicated systems, no 47 indicators, just one pattern, one scanner, and a clear path. All right. So we've talked about the smart surge. So just to recap, smart surge, 3 things. Stage 1, the run-up. The run-up, first part. Stage 2, the pause, the stock taking its breath, right? Which is not weakness. This is where smart money accumulates. And then stage 3, that's the trade, That's the part we're getting in and out on. Any questions so far? Type them into the chat box. We will do some Q&A at the end, but please do feel free to type them in as we go along. But it's one pattern, 3 stages, and it's something that we just go and do over and over and over and over and over again. So when you start to see that all of these smart surges almost look identical, if all of your trades start looking very, very similar, then you know you're doing it right? Because it does show up over and over again, and we're trying to eliminate, and that's what the scanner does for us, eliminate the noise that doesn't fit the very precise model and profile that we're looking for. And the reason that this pattern can be so reliable is, and I'll give you the short version because you don't need a finance degree to use this, but when a stock runs up and pauses without breaking down, it means there's underlying demand, right? Serious buyers, institutions, funds, smart money. And they're using that pause to build positions because they can't buy everything at once. Right, that would spike the price against them. So they accumulate slowly, absorbing every small dip. And from the outside, it looks like nothing is happening. But from underneath, the pressure is building. And when that pressure releases, when that supply of shares has been absorbed as much as possible by the smart money, right, then you get a pressure release. And that's when that next big surge occurs. So this doesn't remove risk, right? No pattern does, no indicator does, no strategy does, but it does remove guessing. You're not hoping, you're not predicting, you're not blindly following someone's stock picks. You're identifying a very specific condition that has historically preceded big moves, and the scanner finds that condition, and then you decide whether to act, right? So over and over, there's so many examples of this. UPS was another one I just got out of. Again, that was identified in October, November. Smart surge, smart surge, smart surge, smart surge. Stock took its breath. And again, I don't think I've ever traded UPS before. Don't think I would have if the scanner hadn't identified it. But there it was in MetaStock. There it is in TradingView. Looks exactly the same. And then there was the breakout, potential entry. And then off it went, much like we saw in Under Armour. And for this one, you could have traded the stock. You could have traded the option. I did both. I bought stock and option. I'm out of both of those now. But that was a great move on the options. Again, quite a fair way out. Bought the December 2026 $100 calls, which we sold just a few days ago. And are looking to get back in, but waiting for the next opportunity to be right. Right. So let me share with you how you can be a part of the smart surge. Because if you're wondering, okay, well, how does this all work? In terms of putting it in place for oneself. The best part about all of this, especially being part of today's MetaStock special event, is that we've put together the Smart Surge program for everyone joining today in a way that just completes everything that you need end to end, right? It's not just an indicator. It's not just a bright, shiny object. It's the complete strategy and all of the tools you need to start using it right away. So let's talk about that. The first thing that you receive in the Smart Surge program today is the scanner. As I mentioned, the scanner is really critical because it's how we find these ideas, which just cannot be done manually. Believe me, I've tried. The Smart Surge strategy, in fact, was actually one that I tried to implement at Acorn when we first started out in 2007. But for the first, gosh, what is how long? 10 years or longer, we just could not develop a scan that would find them. There was too much noise. You have to go through, even the best scanner we had back then would still find 200 plus opportunities, and you still had to drill down through 200 to find the 5. It's just too much. So despite it being one of my favorite strategies, it wasn't efficient enough. So no matter how much money it could make, it had to be efficient as well. And so this wasn't really until about 7 years ago that we started, we developed and released our first beta version of the Smart Surge scan, which has come a long way since then. Right. So this is the small hinge that moves a very big door. So every day it scans all 8,000 US listed stocks. Of course, in MetaStock or whatever platform you have, if you can scan for alternative markets like in Germany or Australia or Canada, it works for that too. It works for Forex, it works for indexes, ETFs, it works on whatever time frame you want to scan for it on, whether it's an hour, weekly, daily. So when I say 8,000 stocks per day, I'm talking about it from obviously the daily standpoint, but you can do smaller time frames as well. And from a daily standpoint example, after scanning through those 8,000 plus stocks, it's going to filter it down to those 5 or so that have the Smart Surge happening right now. Right, so this is not hours of hunting. This is one click, and then that short list of about 5 stocks that qualify handed right to you. So this works in TradingView, Wealth Charts, Thinkorswim, MetaStock, of course, Incredible Charts, TradeStation, Trading Indicators. So no matter what platform you're on, this will work for you. Now, this is normally a $997 a year program. And of course, if you want to install it on multiple platforms, there would be a licensing fee for that. The great thing about the offer that we've got for you today, that we've been doing since just the beginning of the month, that gets you access to all of this. This is lifetime. So there's no annual fee. There's no monthly fee. The Smart Surge scanner is included for life, and as a lifetime member of the Smart Surge scanner, that means you can also install it on multiple platforms. If you have a few different ones you use for different purposes, that's no problem. You can install it on both, as long as you own it's your username, of course. And beyond that, we're also including the Smart Surge indicator, which is, of course, what I was showing you on the charts earlier. So every single time that the Smart Surge scanner identifies the conditions, that also prints directly on your chart. So if you're looking at stocks that you currently own and want to see, is there a bearish Smart Surge happening? Is there things I need to be aware of? Or or stocks that might have been up a lot recently, you could pull those up and say, hey, is it time to get out? Or is there another major move that might be building? Is there a Smart Surge starting to happen now? Right, so you can pull up any stock and see what the Smart Surge is saying. But of course, on a daily basis, hourly basis, whatever you want, you can scan for them as well. And so the combination of those two gives you the complete visibility and an opportunity to find them. So any chart, any time frame, as long as your platform you use supports it. Right, so again, all the major platforms this works in. You've also got your quick start guide. So the quick start training is a video walkthrough of everything: how to install the scanner, how to read the alerts, how to evaluate setups, what to look for, what to avoid. So by the time you finish this single video, you'll know exactly what to do and how the rules work, right? And that comes with the setup criteria guide, which is the rule book. What makes a Smart Surge valid? What disqualifies a setup? When do we enter? Where do we place our stop? Where do we place our target? And how do we manage it along the way? So it is clear rules, no guessing, right? This is about having a rule-based, data-driven, effective strategy. So if that's what you're looking for, if you want more clarity and confidence and the ability just to pull the trigger, and what I showed you earlier makes sense. You can see what I was showing you visually. Then anyone can use this. And we have some wonderful bonuses we've also included, such as the Finding Flags course, which is a terrific complement to Smart Surge, because it goes through why so many other breakouts fail. And so this just gives you some great pattern awareness in technical analysis and things like that, which is, I don't talk enough about this. It's a really valuable 4-module course, which you also get lifetime access to. And you don't need to go through it tomorrow. You don't need to go through it next week. You can do it in your own time. You can do it as many times as you want. It's yours. It's yours for life as well. And it's just a great complementary addition that goes into a lot of the why behind the what for those of you that might be more engineering types and like to pick things apart and see how it all works. Pretty cool. So all of those things are a part of the program for lifetime access. And one last thing that we're including is, as Jeffrey was mentioning, if you become a member of MetaStock, that white glove service. You know, it's funny, good companies tend to share these types of qualities. We do the same thing. So you'll be assigned your own dedicated white glove concierge to onboard you, to help you set up the scan, to run through the scan with you, to go through all the things that are in the quick start guide, but just hitting the ground running. And you have that same dedicated person for 3 months that you can practice with, talk to, whatever you like. Right? They can't give you financial advice and say, legal advice and things like that, as I mentioned at the beginning. But they can certainly go through the rules and talk through things that I've said in the trading room and things of that nature, so that you can really just understand how to put this to work for you right away. That's included for 3 months. So the total value is well over $5,000, and it would be worth it. But last year, some of you may remember, we did do an offer for new members. Some of you joined back then. And even at $14.97, it's still a fantastic deal. Again, one trade, just one trade would pay for it at $14.97. But we wanted to do something very special, and this, as I mentioned, we brought this back for the month of February, and that is our Black Friday offer from last year, which is all of these things: the indicator, the scanner, the 3 months of your own personal coach, the Finding Flags Masterclass for life, all of that for life, for only $397. Only $397. So the link to get started is acornwealthcorp.com/meta. Okay. So once again, lifetime access to the indicator, lifetime access to the scanner, your own personal 3 month implementation coach, the Advanced Finding Flags Masterclass. Thank you, Jeffrey. He's just put it into the chat box for you. acornwealthcorp.com/meta, as in MetaStock. Now, before I run out of time, I think we've got 5 minutes left, if that's correct, Jeffrey. But
yes, that's correct.
Perfect. Okay. So one of the things that that we're doing is a live action first action taker bonus. And the reason why we do this is because trading is all about execution. I'm not sure if you heard my phone going off while I was talking before, like kind of a foghorn. It's literally going off right now, telling me a trade's happening while we're talking. I ignored it, but it's execution is everything. That's why I program my trades in, so that I don't have to sit there and second guess the rules. So I don't have to sit there and worry about getting greedy or fearful, because both are bad, right? Execution is everything. So it starts today. If you see the value in this, take the leap of faith. For $397, there's a lot of other things out there that are just, waste of money. But this is an investment in something that you will use for many years to come. And if you do take action right now while we're live, we're going to, for the first 25 people, we're going to be including 3 months of our live trading room sessions. That's every Tuesday and Thursday, hosted by myself and the other head coach, Greg. And that's where we go in and go through where the smart money's going, where the institutions are going, where the insiders are going, and then run the scans and pick out our favorite setups live. So above and beyond your implementation coach and the quick start guide, which covers everything, You're going to get to then see it used and applied in live markets every Tuesday, Thursday. And that's also recorded and sent out right away afterwards, as well as broken down into a written form if you prefer to read versus watching video. So you won't miss any of it, even if you can't come to the live sessions. And on top of that, we also send out our videos on our favorite trade ideas throughout the week. So I'll say, hey, look, UAA looks fantastic, and here's why. And this is what I'm looking to buy the stock at. I'm looking at these options, all of the reasons behind what the smart money is doing. So again, it's a look over my shoulder, being able to see the whole research process happen from market through to execution. So the link is acornwealthcorp.com/meta. Now, what would I say the percentage of win? Let me just go to some questions. What would you say the percentage of winners, and what's the typical risk versus reward? So the smart surge system is arguably the highest, or if not one of the top 2 highest patterns I've ever traded, systems I've ever traded. But what makes it really effective is actually the second part of your question, which is the risk reward. So this is covered in the quick start material, by the way. But when we go through those smart surges, what we're looking for a smart surge to qualify is a minimum, absolute minimum of a 2-to-1 risk versus reward. Now, 2-to-1 might sound small, and it is, right? I mean, some of the best smart surges like UAA and UPS and things like that have been much better. They've been 4-to-1, 5-to-1, 6-to-1. So the 2-to-1 that I mentioned is to the first target. So when we evaluate a trade, we don't look to the skies and say, well, if this goes to $1 million, well, then that is worth the risk, right? That's pie in the sky stuff. So when we determine is a setup good enough, we're looking at the worst case scenario of the smallest amount of move that could happen before it hits any kind of resistance, right? So we're really conservative and say, look, if this only goes up 8%, is it still worth taking? And so that's where the risk reward comes from. Whereas then our second target, which is where a lot of the meat in the trade is, when it just continues to explode, those might end up being much higher, 4-to-1, 5-to-1, as high as 10-to-1. Probably the best I've had recently was 13-to-1. But we always look for the minimum profit expectation, a small result, so we can just take a little bit of capital off the table, move our stop loss up above what we paid for. We look for that to be at least 2-to-1. So look, I'm trying to condense what I take a lot of time to explain properly. Risk management is more important than making money, because if you manage risk well, you're always going to be in the game to fight another day. So I don't like giving a short version, but that would be the short version. But you'll learn you'll see the full structure right in the quick start guide. Can you use this on multiple platforms? Yes, absolutely, Lolita. As part of today's offer, you can, because it is included for life, which gives you the multiple platform license. All right. I clicked on the link and it has a 23-minute timer. I missed part of the presentation and wants to watch the recording. You'll still be able to get this offer. It just won't have the live event bonus. But even without that, this is still, again, a huge saving versus the 5,000 it normally would be. But I'll go you one better. Let me go you one better. I wasn't going to do this today, but we're at the end of the event. I don't want anyone to miss this. I don't want to take up any other speakers' time. But I'll tell you what. Anyone taking action today, we will include our 30-day Smart Surge guarantee. So if you sign up today and you lock in your bonuses, lock in the savings, and dive into it instead of watching a recording, dive into it, start using it, do your first coaching onboarding session, 30 minutes. And if in 30 days you aren't impressed with everything you've seen for us and how it works, you can let us know and we'll refund you right away, no questions asked. Right, so that gives you the comfort, and you can even paper trade if you wish, whatever you like. I'm that convinced because I hear it from our clients all the time that this is a strategy they just love. So hopefully that makes a difference for you there, Stephen, and you can still get the first action taker bonus. I am out of time. In fact, maybe even a minute over. So I will leave it there. But I do want to thank Jeffrey and everyone at MetaStock for putting on another great event, and thank you all for spending your time with me. And I hope you walked away with some great insights.
Thanks, John. Appreciate it. acornwealthcorp.com/meta. John, thanks for being here. Thanks for sharing some time with us.
My pleasure.
All right, let me do this. Okay. And then we will just excuse. Okay. All right. All right, that's great. A big thanks to John for kind of coming in and joining us. If you haven't yet, you can join the Traders Forum. We're up to about 1,300 members now. It's a free community. You can chat with other traders. There's tons of resources about different technical indicators, technical analysis. It's a community of traders designed to help other traders. We do lessons. We do all kinds of stuff up there. TheTradersForum.com, www.thetradersforum.com. Come up, join us, all that kind of good stuff. Greg, let's do a little bit of a prize. We are a little bit out of time, but we will make time for prizes.
Well, you need to do 2 prizes because you didn't do it on the last hour.
Oh, don't tell me what I need to do.
Dare I ever? No.
All right. Well, let's give away a Master Trader Advisory Swing and Option Traders letter. This is put together by Greg Capra. It's been a long time. He was here on Monday. That seems like forever ago. It's his newsletter service. It's $97 value. We're going to go ahead and give away a subscription to whoever you feel is lucky. I did update the count, Greg. I need you to give me a number between 2 and 6,489.
Okie dokie. I'm sorry. Give me a second. Okay. First one is 4,160.
And that is Wayne B. With a Verizon email address in the U.S. Let's do the next one. The next one we're going to give away is, look at this. We're going to give away Jeff Tompkins' top 10 stocks for 2026 ebook. It's a $97 value. And what a coincidence. We have Jeff coming right in right now. So
that is a coincidence. What an amazing coincidence. Do you want the number?
Yep. Whenever you're ready.
Yeah. According to Google Random Number Generator, it is 6,399.
Wow, high. That is Frank S. in the Netherlands with a Ziggo.com address. So
I just registered.
Yeah. Must have been really recently. Okay. All right. I've got that taken care of. Greg, why don't you let everybody know how they can make sure they're eligible to win a prize?
You bet. If you're watching on GoToWebinar, you're probably good to go. If you're watching on YouTube, all you need to do to go, there's a link pinned at the top of the chat, or you can go to metastock.com, click the banner on the top, and go to the registration page. It just takes 2 seconds. You only need to do it once, and that's it.
Cool. Patricia says, thank you, John. So thank you, John, for that presentation. I want to remind you guys, thank you very much for the assist, Greg. Appreciate it. I want to remind everybody all of the conference offers that we're talking about today, including the extended trial for MetaStock, you can find at metastock.com/conf promo. You can call us at 800-882-3040. You can go to metastock.com/SalesChatMassFix. Been rated #1 in its price category, only for like 32 years in a row by the readers of Stocks and Commodities magazine. We've talked about scanning, testing ideas, getting commentary. Scott came in earlier and talked about our patented forecasting technology. All of that and much, much more can be yours for $75 per month. In addition, it covers all the data that you need to get it. It's a delayed feed, everything you need for $75 a month, and that's it. If you buy a month today, We'll give you the second and third month for free, which means you'll be running until May 18th. MetaStock.com/conf promo. Give us a call, 800-882-3040 if you want to talk to us. We'd love to talk to you. Or you can chat with us at metastock.com/saleschat. So big thanks for everybody for being here. And all of you that have set up for MetaStock, you're not going to be disappointed. Thank you. All right. Our next speaker is Jeff Tompkins. Not only does Jeff have a very good first name, the best, he's been a valuable partner of MetaStock for a number of years. How he started his career has kind of been pretty interesting to me. He started by teaching people how to trade on a website called udemy.com, which they specialize in giving a lot of different classes in different formats. He trained a ton of traders through udemy.com. Since I've known him, we've released his two of his add-ons, Trade Trend and the Power Pivot, Power Act. This one right here, the price action pivots. There we go. I had it somewhere. I just had to find it. In addition to that, he's started his own hedge fund, and he's been managing that. So he's really kind of blown up, I'd say. He's doing a great job. He always does a great job when we have him speak. And Jeff Tompkins, let's have you do that right now.
Hello, great to be here with everybody.
Good to see you, or good to hear you anyway.
Yeah.
I'm going to go ahead and turn off my screen share, and you should just be able to hit this share button at the bottom here.
All right.
All right, I can see price action pivots. I can hear you.
All right, we're off to a good start.
I'm going to get out of the way. It's your turn. Go, start.
All right, let's do it. All right. Once again, great to be here. Thanks for having me. Great to have all of you here today. So I'm going to be sharing my price action pivot system. And we're going to look at how to forecast trend direction and trend reversals without using a single lagging indicator or component. So this is all price action based. You don't need to use any lagging indicators, and it's remarkably accurate. So before I get into it, let's just cover a brief legal disclosure. Trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risk standardized options. Of course, need a broker to trade securities and options and must meet suitability requirements. Any results that I share on the session with you today, just know that they're not indicative of future performance. They might be based on actual trades or hypothetical trades, but due to the time-critical nature of trading, brokerage fees, activity of other traders, we don't guarantee anyone will mirror any performance that I share on the session. So by the end of our session, you're going to discover how to use price action pivots to spot turning points in the market. And this valuable information can be used to forecast market trends before they occur. So again, we're throwing all the lagging stuff out the window. So whether you're just starting out or you're a seasoned veteran, this is must-have information for today's markets. All right, so I'll just give you a brief background on myself before we dive in. Again, I'm Jeff Tompkins. I have over 2 decades of experience trading the stock, options, and futures markets. Received my professional training as an intern at the trade desk at Morgan Stanley back in the early 2000s. And we just hit our 10-year anniversary at Altos Trading. So I serve as the chief investment strategist at Altos. We've rapidly grown to over 60,000 members in over 100 countries across the globe. And as Jeff mentioned, I'm also a hedge fund manager. So I manage money for my clients at Altos Capital. We just hit our 6-year anniversary in the hedge fund. We traded through some very challenging market environments like the COVID crash, the bear market of 2022, the recent tariff crash. And we've never had a negative year in the fund. We've always had positive returns. And the methodology that I'll share today on our session, price action pivots, is one of the methodologies and strategies that I use inside my hedge fund. And I'm also the developer of the price action pivot indicator, which we developed in partnership with MetaStock, and we're going to be looking at that on the session today as well. So let's dive in. All right, there's a few things we need to know when we're placing trades or making investments. All right, and so we'll just start very high level, right? Obviously, we need to know when to buy, when to sell, and when to stay out of the market. And that third one's probably the most important. This is the essence of why we trade, right? If we're a buy and hold investor, we have continuous constant market exposure, right? And we're vulnerable to black swan events and market crashes. So the real reason to trade is to actually stay out of the market when conditions are not favorable. So we know when to stay out, but we also know when to get in or buy and get out and sell, if we're going to short. Now, we're going to look at how and why periodicity highs and lows provide crucial trend and reversal forecasts. So again, this is going to be purely using price action. We'll look at how to identify when markets are likely to reverse trend. So this is a remarkably powerful method for identifying trend reversals. Okay, so most of us trade directionally or try to get into a trend, and oftentimes we're late to the game, right? We get in after the trend's already developed, and potentially near a reversal in the opposite direction, and we get whipsawed or trapped in a bad trade. Okay, so this will help us avoid that. We'll look at how to identify key supply and demand points. So the stock market or any really financial market is all based on supply and demand, just like any other market, right? And that's why you get trend reversals. We'll look at how to set accurate entry, stop, and take profit levels. So this methodology, the price action pivot system, doesn't leave any questions unanswered. We know exactly where to get in, exactly where to take profits, and exactly how to define our risk. All right, so as market trends prepare to reverse course, there's a shift in supply and demand within candlesticks. And these candlesticks will give us clues to future directional movement. And we're going to be using a 5 candlestick pattern. And I put minimum in parentheses because there are some exceptions to that, which I'll explain when we get over to the charts. But we're going to use this 5 candlestick pattern to identify when these trend changes are likely to occur. Now, once the pattern's completed, we have a blueprint for forecasting directional trend. Okay, and it's a remarkably accurate method for identifying trend shifts and directional trend that actually has momentum behind it. All right, so the nice thing is price action pivots only require a basic candlestick or OHLC, open, high, low, close chart. Right, so you have a very clean chart. You don't need to clog it up with indicators. You don't need any lagging indicators. You don't need a MACD, an RSI, a stochastic. Okay, and what we're going to be doing is tracking changes in candlestick highs for short setups and candlestick lows for long setups over 5 candlestick periods. And again, there's the minimum in parentheses, and I'll explain why. All right, so price action pivots can predict market shifts with remarkable accuracy. It can be applied on any retail trading or charting platform. It can pinpoint turning points in a security without using lagging information. All right. Now, the other nice thing about this, and I think this is important for any trading strategy or method that you use, is that it's universally applicable. So it's not something that's just going to work in very specific market environments or in a very specific asset class. So price action pivots can be used with equities, ETFs, futures, Forex. It can be used on daily, weekly, monthly charts. It can be used on intraday charts. The time frame doesn't matter, and the asset class doesn't matter, because it's all based on price action. All right, so let's get into price action pivots. We're going to go over to the MetaStock charts, and I'm going to walk you through the process, okay, and the setup. You're going to know all the rules and how to identify these. So let me get my little drawing tool up here. And I have a chart. Again, we could pull up any chart, but I currently have a chart of Tesla pulled up, so we'll just stay on this. And we're going to start, we'll start with a bearish setup. Most people are, concerned of when's the market or when's the stock going to sell off, right? Well, I'll show you how to accurately identify when it's likely to rotate lower. So we'll start with a bearish setup. Okay, so first things first. So we need to identify market structure. All right, and we've actually got an active bearish pivot right now in Tesla. I'm looking at a daily time frame, by the way, that has just formed, but has not yet triggered. So we'll look at that one too in just a second. But let's look at one that's already completed. So and there's a number of them in here. So the first thing, as I mentioned, is identifying market structure. Okay, so you can go back as far as you want. I like to get a pretty high level overview of what's going on in the market or the stock. So like if we go back to March, right? The March lows, March and April, looks like maybe April was the low in Tesla. From there, it's been in a strong, well-defined uptrend, right? Making a series of higher highs and higher lows. All right. And then it topped out here in December. And I'll just kind of circle that right here. All right. So we're going to use this pivot as an example of a bearish price action pivot. So I've identified an uptrend. Okay, and there are all kinds of bullish pivots that we could have traded along the way here, and we'll look at one of those next. But if the stock's in an uptrend, I'm mainly concerned of when that trend is going to end. When is that trend going to reverse from an uptrend into a downtrend? So I'm looking for bearish pivots. So if we start here in November, we'll just kind of use this as our starting point. All right, we had a couple pivot lows here, it looks like around mid-November. Okay, then we resumed the uptrend. All right, we took out a prior level of resistance. All right, and put in new highs. Now, and let me actually zoom in on this so as we look at the pivot, it's a little easier to see. Okay, so here's the one we're looking at. So we have an uptrend intact, right? And this is actually an interesting one to start. I'm starting with a little bit more of a complex one versus a clean one, although we'll look at some of those. And this actually is a good example of a circumstance where this might be more than a 5 candlestick pattern. So good starting point. I'm going to kind of start you at a little more of a complex starting point here. So we have an uptrend. How do I know that? Well, obviously price is rotating higher, and we're on the daily candlesticks, we're putting in higher highs and higher lows. Now it's a little bit choppy up here near the top, and we notice that. So like on this candle here, right? If we reference the next candle to the right, we have a higher high and a higher low. All right. However, the next two candles, we get what I call indecision candles. So or inside candles, right? So there isn't enough buying or selling pressure to make a directional move at this point. So we get consolidation, and the high-low range of the candle resides within the high-low range of the prior candle, which we call the mother candle. All right, so this is where the 5 candlestick pattern can exceed 5 candles, because we're going to ignore inside candles, okay? Because essentially buyers or sellers, neither are in control at this point. And you can see that, right? On the first inside candle, it's bullish. The next one's bearish. So they're battling it out here. And you tend to see this around trend reversals. Okay, but we're gonna ignore those. So all I really want to pay attention to are the prior candles that are not inside candles, that are either making higher highs and higher lows, or lower highs and lower lows. In this case, higher highs, higher lows. So I know there's an uptrend intact. So that's step one. That's the market structure. All right. And then if we go to this candle here, and this is going to be on December 22nd. All right. Well, what do we notice? Well, we still put in we broke out of the consolidation, right? So we had prior 2 days were inside candles, but then we put in another higher high and another higher low. Okay. So uptrend is still intact at this point. All right. But on the very next trading day, this is going to be on the 23rd. Okay, and this probably will, let's see. Yeah, obviously the markets are closed Christmas, so this will complete before the market holiday. Okay, so on the 23rd, this is what I call the day that everything changes. Okay, why did everything change? Because we put in a lower high and a lower low. So there's a shift in supply and demand. Okay, the buyers were previously in control. The bulls were in control, and that sentiment is starting to shift. So we have a lower high and a lower low. Now we don't yet have a confirmed price action pivot, and I'll explain what that is. For now, I just want you to kind of visualize this. And again, I didn't pre-plan this, so I apologize. I picked a more complex one off the bat with the inside candles, but that's okay. We'll look at some more clean-cut ones. This is important. You're going to want to know how to identify these when they're not maybe as obvious, or there's chop in the market. So good example to start with anyway. So, okay, 23rd, we put in a lower high, lower low. Now here's where I want to start paying attention, okay? Because there's been a shift in supply and demand. All right, now on the next candle, we put in another lower high and lower low. Okay, so this is my confirmation that there's a more sustainable shift in supply and demand that's likely going to result in directional momentum. Now, obviously, we can see there's a big rotation lower in Tesla, but let's go back to the pattern before we get to that. So we now have a confirmed bearish price action pivot. I'm going to do the candlestick count for you so you can see this. So let me just clean this all up. And we'll start. Okay, so remember, 5 candlesticks, we ignore the inside candles. All right, so we're going to start here. This is candlestick number 1. Okay. Now remember, we have an uptrend intact. Next day, we put in a higher low. It's barely higher, but it's just slightly higher low and a higher high. So this is candlestick 2. Okay, we ignore the inside candles. And then we put in another higher high and higher low. So at this point in time, because just keep in mind, none of this has happened yet, right? We're obviously looking at this in hindsight. So none of from December 22nd forward has happened yet. So we don't know any of this information. So at this point in time, I just know on December 22nd, we put in another higher high and higher low. So technically that's candlestick 3. But on the 23rd, when we put in a lower high and lower low, this becomes my potential pivot candle. Okay, this big shooting star candle here. And this now becomes candlestick number 4. Okay, so we're just kind of back counting here and looking at the price action. So we have candle 1, candle 2, potential pivot, candle 4. Now, what would negate this from being my potential pivot? If the high of that candle is taken out to the upside. So if for whatever reason, Tesla resumed its uptrend and took out this high, this is then no longer a bearish pivot. Okay, so see how that can help you keep you out of the market, right? If you're looking for bearish setups, it helps keep you out of the market, right? So we need the full pattern to complete. So we have candle 1, candle 2, ignore the inside candles. Here's our potential pivot, and it's a potential pivot on the 4th candle when we get a lower high and lower low. And we're now looking for one final candle to make a lower high and lower low. Now, here's the key, not relative to candle 4. In this particular case, candlestick 5 did put in a lower high and lower low relative to candle 4, but that's not necessary. It could have, let's say, put a high in up here. As long as it doesn't take out the potential pivot high, that's okay. Okay. So these aren't going to be identical setups, right? You're going to find different scenarios, different price action, but the rules are the same. Okay, so candlestick 4 and 5 cannot take out the high of the potential pivot. All right, so we now have a confirmed price action pivot setup. And this one happened to be 7 candlesticks because we ignored the 2 days with inside candles. So this now becomes our confirmed pivot candle. Okay, so this shift in supply and demand has resulted in a much greater likelihood of downside follow through. And we can see that happen, right? So let's now cover our entry criteria if we want to actually trade this, how we define our risk, and our profit targets. Okay, so there are a couple different approaches I use here. One is to take the lowest low in the 5 candlestick pattern for a bearish price action pivot setup. Okay, that would be candlestick 1 in this case. it won't always be candlestick 1, right? It could be any of the 5 candlesticks. In this case, it happens to be candlestick 1 is our lowest low. Okay, so that's one entry approach. The other is to ignore the left side of the pivot candle and use the low to the right of it. That's not always, but I find probably about 70% of the time going to give you a better entry. And in this case, it does. So we could enter just below the low of candlestick. Oops, I drew it on the wrong one there. This is candlestick 5. Just below the low of candlestick 5. Okay. So we'll use that approach. All right. So if you're just trading the stock or a futures contract or a Forex pair, I use what's called a sell stop order. All right. And this is a powerful order type that is, I think, underutilized for directional trades. Most people enter with market or limit orders. By using a sell stop order, it's telling your broker that you only want to get short Tesla if it follows through in your forecasted direction. In this case, obviously to the downside. So we could take a look here at the low. 476.80 was the low on candlestick number 5. So we might want to put in a sell stop at like 476.70, or I usually just go a few ticks below the low of the candle. Okay, so 46.70. So we would tell our broker sell stop at, what did I say? 476.70. All right, and why is this such a powerful entry technique? Because if you just entered with a market or a limit order, what if we don't follow through to the downside? Okay, then it was a confirmed price action pivot, but it's not a triggered price action pivot. So there's a difference, and I'll show you that momentarily. But a triggered price action pivot actually follows through into the entry price level. Okay, and that in this setup would be 476.70. Okay. So that can keep you out of the market, right? If candlestick number 6 didn't follow through and the upside resumed, and we didn't take out candlestick 5's low, we put in a higher high and a higher low on the next day, it would have kept you out of the market. So it won't do it 100% of the time, but you will be surprised at how many times it keeps you out of what would otherwise be bad trades. Okay, so we use a sell stop order for entry. Okay, and we're using the lowest low of the candlesticks to the right of our pivot candle. Okay, that's simple. Now, one of the most important things with any trading methodology, right? Define your risk. So this is rather simple. I define my risk by placing my stop above the pivot candle. Okay, so entry goes here, stop goes here. Our entry. Okay. So we've got, I won't calculate it, we'll just eyeball it, right? But we've got our risk here from our entry to our stop. And here's where a little bit of discretion comes into play. It's up to you. I've traded this setup for many years, so I know what to expect, and I know what the general expectancy of the strategy is. Expectancy is your average wins times your percentage wins minus your average losses times your percentage losses. That's the trade expectancy formula, and it spits out a number if it's positive. If you adhere to that strategy, over time you should expect to make money from the strategy. That's what we call a positive expectancy. So I've found that this methodology has a positive expectancy if I use a 1-to-1 risk reward. So what I'm typically going to do, but a lot of these will exceed that. So you can use a 2-to-1, or what I like to do is scale out of half my position when I hit the 1-to-1 and leave the second half of the position open for a runner. And then I just adjust my stop to the entry price level. So I essentially have a risk-free trade on. All right. So again, I'm just eyeballing this so we don't take the time to look at the exact prices. But roughly here, I'm going to get out with my profits. Okay, for about a 1-to-1. So you can see we easily hit that. And interestingly, this creates a resistance level. So we get some downside follow through. We come up, retest, another leg lower, come up and retest, and another big leg lower. And look at all the opportunities that were in here. Here was another bearish pivot. Here was another bearish pivot. Okay, lots of opportunities to trade these. And I mentioned that there's already a completed, let me zoom out here a little bit, bearish pivot. And this one looks really close. Let me see. High is 436.35, 23. Okay, so yeah, this was a pivot. These were very close, but the high here on February 12th was, it looks like, about 12 ticks lower than the 11th. Okay, so here's a pivot. Okay, we have, remember, identify market structure. We have a well-defined downtrend. So we're making a series of lower highs and lower lows. Okay, and here was a great pivot. I mean, this was a great trade setup. Probably hit a 3-to-1 on that one. All right, so that's step one. What's the market structure? So I look for pivots that are, that coincide with the market structure. So in a downtrend, I'm looking for bearish pivots. And if I take a bullish pivot, because there was one here, right? I'm not expecting as much of a directional move. Okay, so that helps me kind of set realistic profit target goals, and so on and so forth. So if I'm, and it tells me, am I trading counter trend or am I trading with the trend? So any bullish pivots, because there were a couple in here, are counter trend. Okay, I wouldn't expect them to run as far. So if I want to trade with the broader trend, I'm looking for bearish pivots. So that context is a downtrend. All right. So on upside retracements like we had here in early February, what are we doing? And this one's a clean setup. This is not as messy. We don't have inside candles. Okay, we're making a very clean, well-defined series of higher highs and higher lows. All right, and then on the, I think I said this is the 11th, we make another higher high, higher low. Okay, but then on the 12th, we make a lower high and lower low. This is the day everything changed. Okay, so shift in supply and demand, and this becomes our potential pivot. So we just need one more candle that has a lower high than the potential pivot candle. Okay, not candle 4. People sometimes get confused by that. Okay, so I do my candlestick count. We have candle 1, candle 2, potential pivot, candle 4, and sure enough, the next day we get a lower high, and there's candle 5. There's my entry, and there's the triggered entry. Okay, Tesla's pulled back up a little bit. So this one's not completed. It hasn't hit the stop or the profit target. Stop would go up here. Profit target looks like would go somewhere down near this pivot low. Okay, so that's actually an active one that just triggered on Tesla. Okay, let's look at a bullish one. Okay, so all the same rules apply, just with different metrics, right? We're using, so like, this is actually kind of an interesting one because we technically had, if I'm looking at this correctly, 2 bullish pivots very close together. All right, so let's look at this example real quick. And it looks like this one also would have helped keep us out of a couple of bad trades. All right, so market structure, we have lower highs, lower lows. And I didn't mention, but with a bearish pivot, you really only need to be concerned with the highs, not so much the lows. And with a bullish pivot, you really are only concerned with the lows. Okay, so we're making lower lows. Okay, well, on the following day here, we put in a higher low. Okay, and then candlestick 5, same thing. Now here we didn't put in a higher high, so this is a good example. Okay, we put in a higher low, but not a higher high, and that's okay. That's why I was mentioning, really with bullish pivots, you just need to be concerned with the lows. Okay, so this one looks kind of messy, but this is a confirmed pivot candle. Okay, now if we use the high in the pattern for our entry, we wouldn't enter till all the way up here, and that's fine. It looks like we probably would have hit a 1-to-1 there. If we used just to the right of the pivot, our entry's here. Okay, so no trigger, like we didn't reach that entry on the next day, but on the following day we did. And we actually got a bearish reversal. Okay, and then we put in a lower high and lower low. Now this high, or this low, I should say, is still higher than our pivot low. Okay, so if we had an entry, our stop would have been down here. Okay, we didn't hit it. But we still want to pay attention, right? Because we put in a lower high. But we didn't follow through with another, well, actually, yeah, we did. We did put in another lower high. So this is a bearish price action pivot. It's a confirmed one. So that qualifies as a bearish. So entry goes where? Down here, right near our stop. But we get a trend reversal. So it keeps us out of what would have been a bad bearish entry to the downside, keeps us in our original bullish price action pivot, and then it goes on to create a second bullish pivot, which is a especially powerful pattern when you get two bullish pivots or two bearish pivots in close proximity. So keeps us out of what would have been a bad bearish trade, gives us two bullish pivots. So if we missed this first one back here, we had a second opportunity. But if we got into this one, we stayed in it because we didn't take out the pivot low, and we got a full trend reversal here. But let's clean this up a little bit and just take a look at this one, right? So we have lower lows. We put in a higher low. We ignore the inside candle. And then we put in another higher low. So this is candle 5. So our entry would have been here. And it looks like it would have been pretty close to the entry from the prior pivot, which was back here, just maybe a little bit higher. Okay, but here we have 1, 2, pivot candle, 4, and ignore the inside candle, 5. Okay, so we had 2 entry opportunities here. And we define our risk, stop goes below the pivot, and we look for a 1-to-1. Easily hit it. Till we put on our next pivot, which happens to be a bearish pivot. Okay. And there was even more. I mean, you'll find as you get familiar with this and kind of practice it, you'll spot these all over the place. There's embedded pivots everywhere. There's another one. There was another entry opportunity here, right? Here we have, and this is also kind of a unique one. So this would be candle 1, this would be candle 2, but candle 2 actually put in a higher low. But here we have, oops, my pen just kind of went wonky there. Here we have a pivot, right? We have 2 lower highs to the left, and we have 2 lower two higher lows to the left and 2 higher lows to the right. This is a confirmed pivot. Entries here, stops here. There's our risk. There's our reward. So there are actually a few opportunities to get in here. And again, once you train your eye to see these, it takes time. It takes practice. You'll spot these all over the place. They're embedded all over. Okay. All right. So that's the price action pivot methodology, and the rules that go behind it. And again, it just takes a lot of practice, right? And there's obvious ones. Like this is an obvious bullish pivot. Okay. Lower lows. Okay, we put in a higher low. This becomes our potential pivot. We have an inside day, we ignore it. We put in another higher low. This now is candle 1, candle 2, confirmed pivot. Ignore the inside day. Candle 4 and candle 5. Entry here. Stopped there. Easily hit the 1-to-1. Could have probably hit a 2 or 3-to-1 here. All right. And I didn't mention when I started the session, I am going to leave time for questions. So I'll open it up to questions here momentarily. But first, I want to let you know something very important, because obviously this takes some fairly significant legwork and practice and being able to identify these pivot patterns. And it takes some manual labor, right? You have to sit in front of your screen and wait for these to play out. And we didn't even look at intraday timeframes. In fact, let's just quickly go down to like a 5-minute chart. Okay, nothing's going to change. All the rules are the same. It's just going to be on a different time horizon, right? You're going to be doing, the trades are going to play out much more quickly, but you can see pivots all over the place. Okay, and you can see how without using any lagging information, they can help you identify major trend reversals in real time. Okay, there's this in today's session, really nice bearish price action pivot here. And you could have hit this one probably for easily a 2-to-1. Okay, there's another bearish price action pivot that just formed right here. I can see it without even doing the candlestick counts. It hasn't triggered. Oh, looks like it's about to trigger. Okay, because entry would be right down in this vicinity. So it looks like it's coming down into where we'd probably put our sell stop order. Okay, so yeah, the time frame doesn't matter. But I will open it up to questions here in just a minute. But first, I want to let you know something exciting, and that is that we've developed an indicator around this methodology in partnership with MetaStock. So it will do all this legwork for you, so you don't have to do all the candlestick counts, calculate your entry price levels, your stop levels, your profit target levels. The indicator does that all for you with zero lag. So it's going to give you accurate buy and sell signals with zero lag. Okay, so you can throw your MACDs, your RSIs, your stochastics out the window. Those are all looking back, often days or weeks in hindsight. Okay, and they do absolutely nothing to tell you what's going to happen in the future. It's just it's a trap that people fall into, right? They think that it's actually giving them information, forward-looking information, but it is not. It's not giving you any forward-looking information. Okay, so it does this with a proprietary pivot algorithm using the methodology that we just walked through, reads the market in real time. It includes exact entry, profit target, and stop loss levels. So you never are guessing, where should I get in, where should I take my profits, and how should I define my risk? And it forecasts short-term and long-term trends with astounding accuracy. It can be applied to any asset class, equities, ETFs, futures, Forex, crypto, whatever you trade on any time frame. I love using this indicator to supercharge my option strategies. So when I trade directional option strategies, for any of you who do that, you know they're very time critical, right? You've got to be spot on your timing before you hit expiration. So if you get into a trend too late, it's going to be very difficult to make money on that trade. Okay, so throw the lagging stuff out the window. Just use price action. That's all you need. It does not repaint. So once you get a confirmed pivot, it's set in stone. Repainting means that the indicator or the signals that you see on your chart can change. Okay, and that's often why you look at signals from an indicator in hindsight on a chart and it looks great, and then you go to use it in live market conditions and it fails miserably. Okay, so you want to make sure you have an indicator that does not repaint. It has built-in protection to avoid whipsaws. We just looked at an example where we got into some choppy market conditions on Tesla and it kept us on the right side of the trade. Captures most of the trend before it reverses. It's designed to limit losses and let profits run. Okay, we talked about one of my techniques for scaling out, taking off half the position at a 1-to-1 and keeping the other half open. It can be used with any other indicator or system for added confirmation and help you remove all the guesswork from your trading decisions. Okay, there's no guesswork involved. You know exactly when there's a confirmed bullish or bearish pivot, and it's all with zero lag, all based on price action. Okay, so again, we developed this indicator in partnership with MetaStock. It's available on the MetaStock platform, and it's designed to help you cut the learning curve and start trading with more confidence and more consistency. But beyond just the indicator, we developed a robust package of not just tools, but education to help you use the tools. So not only do you get 12 months of the price action pivot premium indicator, we do have two versions of this. We have a basic version that basically requires that you use the preset inputs. The premium version allows you to define your inputs, so you can change the risk reward and things like that. You're also going to get weekly live sessions with me every Tuesday evening. We meet with our members at Altos at 7 p.m. every Tuesday, and we do general market overviews, go over the current market structure, market environment, and then we cover a new strategy each week, like we did today with the price action pivots. And you get coaching from me on those sessions on a weekly basis. So my personal coaching typically starts at $19.97 and goes up from there. But you're going to be with me once a week. And we do record these. So if you're not able to attend, you get access to all the recordings. You also get access to our private invitation-only Facebook group. And you're going to get additional training covering some of our best equities and option strategies and our professional trading series online course. This is over 10 hours of content. And again, kind of like we did on today's session, imagine that times 10 or 12. Okay, I cover a whole lot more and go into more depth with other strategies as well. You're also going to get access to our pre-recorded private 2-day price action pivot workshop. So we only get about an hour together today. We held a 2-day workshop where I go into this in a whole lot more depth. We look at different techniques for trading the price action pivot methodology, and we go through some actual chart examples. And then on day 2, I trade it live in the live market with real money. So you can watch me actually trade this in front of your own eyes and see how I do it. Okay, so you're going to get access to that 2-day workshop. And then you're also going to get access to my latest ebook, How to Create Risk-Free Trades. This is a money management ebook that walks through different tactics to mitigate risk and in some cases eliminate it from your trades. All right, so the total retail value on the MetaStock package today is over $5,000, and we're knocking 80% off the retail price. So you can literally get this entire package, including an entire year of the price action pivot indicator on the MetaStock platform for what breaks down to just a few bucks a day. Okay, we do limit the discounted package to 25 seats. You can still get any of these things, but it will be back up at the retail price. The indicator alone retails for $14.99 for the year. Okay, so you're already just even not considering everything else in the package, getting a huge discount relative to the actual indicator itself. So if you'd like to claim one of those 25 spots, the link is metastock.com/PAP for price action pivot. All right, and you can go over there and lock in that 80% discount. We do have a guarantee. So if you're not convinced this is the right indicator for you, we offer a full 30-day money-back guarantee. Okay, so we want to make sure that you are happy with this new tool that you'll be adding to your trading arsenal and make sure that it fits into your process, right? So we give you a full 30 days to do that. All right. And then again, you get the 2 powerful bonuses, my 2-day price action pivot workshop and my latest ebook. Okay. I want to make sure I save time for questions, so I won't go through testimonials, but we do get thousands of testimonials from our members who use our indicators like the price action pivot indicator and our strategies. Okay, again, that link is metastock.com/PAP. And I'm going to go ahead and open it up to questions in just a second. But before I do, I want to give you a little quick insight into what this looks like on MetaStock. So I'm just going to stay on the same chart of Tesla. I'll just go over to a new tab, and I have the indicator plotted here on the chart. This is what it will look like. And it's very simple. I'll just quickly walk you through the symbology. And there's a couple important things I want to point out here, because as we walk through this process, you can get a pivot that is confirmed but not triggered, meaning that you would have never gotten into a trade. So if we just start on the left of the chart here and back in October, right, we have a couple bearish pivots. Those are going to be indicated by a slanted or diagonal down red arrow. Okay, so this means that we have a confirmed pivot. Okay, we have two lower lows to the right of the pivot. We have two lower lows to the left. Okay, so you can see like this is a pivot. There was one prior to that. All right, and this one reached its entry, and it also hit its profit target. All right, then we get a bullish pivot. Okay, there's our slanted or diagonal green up arrow. This one's kind of messy. It's kind of hard to spot that, right? This looks like just a lot of slop. Let's see how the indicator clearly identified there was a bullish pivot. It was this candle here. Okay. And I didn't point this out on the bear signal. I should have done that. A straight down red arrow means that we hit the trigger. So it's a triggered pivot. Straight green up arrow means we hit the entry price level. Okay. And there was a bearish pivot here. It was confirmed. We had two lower highs to the left, two lower highs to the right. Entry would have been down here. We never reached it. So notice there's not a straight down red arrow because we didn't get a triggered entry. Kept us out of the market and kept us in the bullish pivot. Here was another bearish pivot. That qualified. Two lower highs to the left, two lower highs to the right. Entry would have been down here. Kept us in the bullish pivot. And we hit our profit target. It's hard to see, but there's a little thing here. It says exit. That means we hit our profit target. Okay, there was another one. Now we're bearish. See how accurately these can identify tops and bottoms in the market? Okay, and you'll also notice up at the top here, there's something called PAP trade status. All right, this is going to tell us, it just gives us a nice visualization of whether we're in bullish, bearish, or neutral pivot conditions. So like here, there was just no pivot. And that's often an indicator that the trend is stalling out and might be reversing. So notice if we go down below this to the chart, sure enough, it's right near the top of this uptrend. We go down here, sure enough, it's right near the bottom of this uptrend before we get a pullback. Okay. Same thing here. We go straight down, it aligns with the pivot, and then we get a bullish pivot. Here we have a bullish triggered entry. All right, so that's the PAP status. And then one last thing I'll show you, and I'll open it up to questions. If you're wondering, well, where do I get in? Where do I place my stop loss? Where do I place my profit target? All right, that's all going to be found under view and expert commentary. Okay, so if you pull this up, it's going to give you all the exact instructions. Okay, like we just looked at the current bearish pivot on Tesla, right? So it shows that an open short position exists. The profit target's 382.19. The position should be closed if price trades above 439, our stop. There's currently no active long positions. Okay, so the expert commentary gives you all the exact instructions you need if you want to trade one of these pivot signals. All right, so I'm going to go ahead and open it up to questions. I'm also going to give you our contact information. If you are like me and you think of a question after we wrap up, you can always reach us at support@altostrading.com. Our website is just altostrading.com. And I'll go ahead and take any questions. So if you guys want to put those in the Q&A box, I'm happy to take those. Let's see. So let me just kind of scroll through here. We have a nice big audience today. I got some nice thank yous to MetaStock for holding the event. I echo that. Let's see. Yeah, so got a question. I'm trying to see if these are current for me because the time is different. Let me go.
Do
There
you
we
want
go.
me to help you?
Yeah,
Doug?
could you? I just
Yeah.
realized I was at the bottom of them.
Yeah, that'll help.
And I'm like, why does it say 8:30 a.m.? Yeah, if you could relay those to me, that'd be great. I haven't been monitoring that. So.
Whitney has a really good question. She wants to know what the pricing is after the first year. Thank you for the question, Whitney.
Yep. So, you're grandfathered in at the 80% discount. So we never raise the price on you. It won't go back up to the retail price of $14.99 for the indicator or over $5,000 for the whole package. So as long as you remain a member, you get full access to everything you see on your screen, including the indicator at the 80% discount.
Sir wants to know what if the price reverses after the stop for order entry is hit and before the price bar closes?
Let's see. What if the price reverses after the stop for order? I don't understand the stop for order entry. Oh, a sell stop for order entry. Got it. Yeah, so that occasionally that will happen. We're not going to win every single trade, and not 100% of pivots are going to hit the 1-to-1. So that's why it's important that you have your stop in place. But it's a good question because what I'd be looking for there, so like if we hit our triggered entry, let's just say on a bearish price action pivot, we get filled on our sell stop order, and we get a little, so the nice thing about using buy stop and sell stop orders is you have to get some degree of follow through in your forecasted direction or you won't get filled on the trade. So by default, you would have had to get some downside follow through, but maybe it didn't go all the way to the 1-to-1. And then instead it reversed. And so what I'm looking for there, and this is why it's such a good question, is I'm looking to see if a confirmed bullish price action pivot is then in place. So if I get early in the trade, I get an adverse directional move, it goes the other way. That can happen, but then it can then go on to follow through to the downside. But if a confirmed 5-candlestick bullish price action pivot then happens, and I haven't hit my stop loss level, I'll place my stop above where the entry would be on the bullish price action pivot. So the nice thing, that might sound confusing, the nice thing, the indicator will do all this for you. But then I would just look for an entry in the opposite direction. And in some cases, there won't, markets might move really fast and there might be, you might be in a high vol environment. It's very unusual, but you may not even form another pivot and you hit your stop. It would be unlikely to not form an opposing pivot. Like if you're in a bearish setup and then you get a bullish pivot before hitting your stop. Very unlikely, but it can happen. And so that's why you want to have that stop in place.
Ricky wants to know any market, any time frame, question mark?
Exactly, yep. Yeah, as we looked at early in the session, and I spent most of the time on the daily chart of Tesla, but then we went down into a 5-minute chart. The time frame doesn't matter. You can apply the indicator, obviously, to any time frame you like, right? So like I'm on a daily, we could go down to an hourly, all right? And so the indicator obviously will adapt to your selected time frame. You don't need to do anything to change the indicator. And I've got a lot of applications running right now, so it's bogging it down a little bit. There we go. All right, so you can see, I just went down to an hourly chart and you can see all the pivots and whether it was a confirmed pivot or it was just a pivot that didn't follow through into the entry. But you can see that it's gonna, regardless of the time frame, identify these major shifts in trend. And it does so with 0 lag. So yeah, in any time frame that it's totally up to your preference. And say any asset class. It doesn't matter whether it's a stock, an ETF, a currency pair, a futures contract. I trade all of those. So that's your discretion.
Let's see. Erik wants to say. Erik said earlier you want a bullish entry. I think he was answering a question during the conversation, but I did want to reiterate. You can scan for these entries as well, and you can use them on any marketplace. If you're looking for an international exchange, like maybe India, you can use that as well. Erik, I'm not sure that was the question exactly, but I figured I'd use it as an opportunity. Ricky says, is hourly the lowest time frame you could use?
Nope. You can go down to as low as your time frame allows. You go down to a tick chart, 1 minute chart.
With MetaStock, you could do even a multiple tick chart if you wanted to. I don't think you're definitely going to not get any real good results probably with a single tick chart. But if you did like a 50 tick chart, probably play with it, see how it works for you.
Yeah. I don't trade off tick charts, but I know many of our members do, and they use the indicator for tick charts as well, or a 1 minute or 2 minute chart. I don't trade time frames that short. I'm a higher time frame trader, but yeah, we have a lot of members who do use it on very short time frames, and that's again totally your discretion. I'm glad that question came through about the scanner though, because I did forget to mention that. So you do have the indicator does come with a scanner. So if you go over to the Power Console and go over to the Explore tab, you can select the price action pivot indicator and you can run scans, so you don't have to actively sit in front of your screen and monitor the charts constantly. You can just run scans for your selected time frame, so you can scan in any time frame that you're trading, and it will tell you whether there's a bullish or bearish pivot.
And it does a great job with it, just like you just did a great job for us, Jeff.
Oh, thanks. It's always a pleasure. It's one of the things I enjoy doing. I love teaching, obviously, and trading's a pretty lonely endeavor, so I always enjoy being here.
Awesome. Well, I appreciate you being here. I'm looking for my PowerPoint. Okay. Thank you very much, Jeff. Appreciate you. You can get that if you go to metastock.com/PAP. And I'm going to go ahead and share my screen. And hopefully I can find my PowerPoint in just a second. Thanks again, Jeff.
Thank you. Great to be here.
Okay, I'm gonna go ahead and turn on my camera. I swear I was back here somewhere. Oh, here it is. It's just a dark screen. Okay. All right. Jeff did a really good job of talking about the add-on, showing the commentary and how well it kind of helps explain everything, talking about scanning. He did a very, very thorough job about it. We did record a little bit of a boot camp that's available instantly as part of it. He is including all of those bonuses. We do back it, as we do with all of our one-time products, with a money-back guarantee. Give it a go. metastock.com/PAP. If you have questions, if you want to see more charts, if you want to do stuff along those lines, get in touch with us. You can do that. If you call us at 800-882-3040, toll free in the US and Canada, you can give us a call. We'd be happy to talk to you. We'd be happy to chat with you as well. metastock.com/sales chat. I don't think we missed any questions there, but I'm sorry if we did. As we transition to our next guest, we're going to do prizes real quick, but I also want to say thank you to Stocks and Commodities Magazine. Stocks and Commodities Magazine has been a great sponsor of the MetaStock events and the Traders Conferences and the Traders Summits and all those crazy events that we do like this one, and we appreciate all of them. Traders.com, you can get a magazine that's sent to you once a month. With that subscription, you have access to all of their archives. And you're here Wednesday afternoon. We're 20-something hours into this thing, and you're watching and learning. And I think education is important in this business. You're getting better or you're falling behind. And I think a subscription to Stocks and Commodities is a good way to ensure that you're kind of at least learning something new every month. So with that being said, let's do a prize real quick. Mr. Lewis, if you're available, let's do one.
Yes, Mr. Gibby. Are you getting ahead or falling behind?
Well, if you're looking at the time, we're falling behind, but we're going to do this real quick. So what the next prize that we're going to give away is 30 days of the Trading Winds membership service. We had Rahul and Vince Vora yesterday, and they do you're pretty familiar with this service. I know that you kind of was going to a lot of, at one point, I don't know if you still are, but you were going to a lot of the meetings that they do.
I was, and now I'm mostly taking advantage of their very informative news by email they send out weekly.
Let's give away a membership. So this is $97 value. I have actually everything right here. What I need from you is just a number between 1 and 6,489.
Okay, that number is, according to the Google random number generator, I swear we saw this number earlier today, but can't be possible. 4920, 4,920.
We definitely didn't do Patel R before. Patel R is the winner. I'm going to go ahead and make a note of that in the US. So congratulations. I'll get your information over to Trading Winds today, actually in just a minute, and we'll ask them to get there. metastock.com/PAP if you want to get Jeff Tompkins' offer, or you can go to metastock.com/conf promo. You can give us a call, 800-882-3040, metastock.com/sales chat for any of the offers that we're talking about this week. And where did my GoToWebinar go? Thank you very much for the assist, Greg. I really appreciate it. Our next guest, our next speaker is Silas Peters. Silas is going to talk about a very popular pattern that has been used for a number of years in the market. He's going to teach it completely to you. He does a great job, and he's here. So with all those things said, I actually really like this 3S pattern that he uses. It's something that you'll want to pay attention to. If you're new to the 3S pattern, grab a notepad and a pen. You can take some notes. Silas, let's go ahead and get you started.
What's going on, Jeff? Can you hear me okay?
I can, yeah. As a matter of fact, I can.
All right, good deal. I'll try to get you guys back on track here.
Oh, I'm not. Well, okay. We'll end it sometime today. It's all good.
Yeah, we've got 24 hours in a day, right?
Right.
So this is the first time I'm using the web version. For some reason, I couldn't get into the normal go-to, but I guess we're.
Yeah. Sometimes if you have your own go-to account, it's been conflicting with people, and they have to do the web version. So there is that. But if you see the share button below me, there we go. Yeah. We can see it. I'm going to get out of the way, Silas. It's all you.
All right. Well, thank you so much, Mr. Gibby and the MetaStock team. Let me find the chat window. Just like to do a quick audio visual. Can you guys type a Y or a 1 or a hello, anything in the chat? Just let me know that you guys can hear me okay and see my screen, since it's kind of the first time I'm using this web-based version. Everything looks to be good on this end. I was just talking with Mr. Gibby, so I think we are all set. But I appreciate that.
Okay, I will confirm I can see everything and I can hear you. So everything is good here.
All right, cool. Well, let's go ahead and get started. Again, I want to give a big shout out to the MetaStock team for having me on. I really do appreciate coming into these events. They're fun. I know you've got many days of learning here, so take some notes. I hope you're learning something amongst all these very smart presenters. My name is Silas Peters with 22 Markets, and as Jeffrey said, this is we're spending 45 minutes, an hour together or so. And this is a time that you will want to get a pen and a piece of paper, because I'm going to teach you a full-blown mechanical strategy with entries, exits, all the rules that you need to actually go start applying this immediately. And this is one of my bread and butter strategies that I cannot believe I'm going to say this, but started using maybe 15 plus 20 years ago. And so if we're still talking about it, still using it, then obviously it works. Okay. So we're not here to blow hot air. Just listen to me talk about some whiz bang gizmo gadget. We're going to teach a real mechanical strategy that works across all markets and time frames. So you are here, you're in the right place. If you're sick of losing money, tired of just confusing strategies, you want something real, something that works. And by the end, you're going to see a way to trade with confidence, mechanical rules, and high probability setups without any guesswork. Now, we must quickly cover the risk disclaimer. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading. Only risk capital should be used to trade. So it's very important that you understand the risk. Trading is risky. All right. Now, let's talk about what we're going to learn today. We're going to talk about why price action patterns beat indicators. We're going to talk about this 3-point setup. You're going to get step-by-step entry and exit rules. And we're going to go through real trade examples and how you can literally start using this today if you wish. And my goal for you is this. Now, I'm going to prove to you that this works in any market or time frame. But this is the real benefit of listening to this workshop, is that by the end, you're going to be done chasing hot stock tips. You're not going to need dozens of indicators cluttering your charts. You're going to have all the rules necessary for entry, exits, and targets. And these are some of the examples that we'll work through. I'm going to give you the exact rules on how to do this your own. But these moves here, like in GE, this one here in Barnes Group, ticker symbol B, Bank of America, all of these start to add up, right? And you're going to be able to literally kind of point, click, and scan for these, and they're going to be hand delivered to you on a virtual silver platter every single day. This is a 4-hour chart of gold futures. This is $1,800 a contract. This is $900 a contract. This is for those that like to day trade, 5-minute chart of the even S&P, 8 points, 2.5, 6, 4 points. And this is all in a single day. So I imagine you're starting to already kind of see the potential and the opportunities here for you. And because we're trading pure price action, we do have opportunities every single day, regardless of the markets or time frame that you are trading. Now, you are in the right place if you want simplicity and consistency. If you are one of those that have tested dozens of indicators and subscription services out there, you've been frustrated by emotion-driven trades, you just want something simple and mechanical. All right. Now, if you are a retail trader or even a pro who's fed up with overcomplicated systems and the endless noise of indicators, then pay close attention, because what I'm about to show you is different. You're going to finally get something that you can rely on, no guessing. And before we get into the meat and potatoes of all this, let me quickly introduce myself, who I am. I'm the founder of T2 Markets. I'm a co-founder and partner of Blue Marlin Advisors. I'm an entrepreneur, risk taker, full-time trader. I'm also a speaker, author, educator. Started my career at the Chicago Board of Trade. But this right here is really what makes it all worth it. Okay, I'm a husband, I'm a father to 2 girls, and I'm a mentor to thousands of students around the globe. Now, I've spent years in the trenches, stocks, options, futures. I've tried everything, indicators that claim to predict the market, flashy newsletters, elaborate strategies that really cost more in frustration than they've ever paid off. And I've taken losses, right? I've taken losses and I found what works. And now I build tools so you don't have to bleed your account dry by experimenting. And what I want to address is kind of my struggle initially. Probably exactly what many of you here are going through or have at some point. Overcomplicating systems, chasing lagging indicators, making emotional decisions, and really just trading without a repeatable edge. Okay, you have to have an edge if you're going to be trading in these markets. Now, before I discovered this pattern, I was right where you are. My charts look like spaghetti, indicators everywhere, chasing hot stock picks, and just overcomplicating the process. Looking at all these options Greeks, robot trading and expert advisors, black box systems, just way overly complex strategies. Or, the drill of, hey, we need some more damn indicators on our charts, right, where we can't even see the screen. And what that really led to was emotional hesitation, entering too late, exiting too early, and risking more than I should. And I got burned again and again. I lost money, I lost confidence, and I got, felt trapped in a cycle of kind of hoping and second guessing. So does that resonate with anybody in here? And let's be honest, does that resonate? Yeah, I mean, of course it does. We've all been there. done that, got the t-shirt at some point. And so it kind of led me to what I call this big discovery. I discovered something very powerful, and it's really the basis of this 3-point reversal pattern that we're going to be discussing shortly. It's been around forever, but most traders ignore it or overcomplicate it. And I thought, you know, what if you could build something completely mechanical around it with exact rules, precise targets, and no emotional guessing? So start with that, back it up with test. I mean, I was already doing this manually, so I knew the power of it and that it had already worked. And I already gave you the hint is that it consists of only 3 steps. Step 1, where we are looking to spot the reversal structure, we're going to define the exact entry, exit, and targets. And then 3 is we're going to trade only when the rules align. Okay, and if you do these, your trading becomes cleaner. Okay, if you skip them, then you're back to the noise. And because we are trading price action, we have a strategy that produces repeatable setups that work across all markets and that are easy to spot in real time. Now, that may not mean a hill of beans to you right now, but these are the exact patterns that we are going to be locating here that I'm going to be teaching you that lead to repeatable setups, okay? And trust me, these patterns that you see here that lead to very important tops and bottoms are going to be popping out of the charts for you, and they're going to become your favorite charts. And so you look at this, and right now we are spotting a 3-point reversal pattern. We are spotting a 3-point reversal pattern in real time, okay? Clean, clear charts, just like we saw in GE, Barnes, Bank of America, gold futures, and the 5-minute chart of the E-mini S&P. Or perhaps it's the Aussie yen and the Forex markets, okay? We are going to locate the exact entry and immediately know where our targets go and where our stop or risk levels go, okay? Now, with all these examples I just showed you, can it really be that simple? I'm going to tell you right now, simplicity beats complexity almost every single time. How smooth, how clean were those setups? Very clean. And what we're going to do now is we're going to get into the actual rules, okay? Now, this is what we call the 3-point strategy, and it is a widely used trading trick that helps traders identify trend reversals and continuation patterns with high accuracy. So step 1 is identifying when the trend is about to shift. Step 2 is spotting the pullback, and then we're going to confirm the breakout trigger with step 3. All right, so whether you are a day trader, a swing trader, or a position trader, understanding this pattern will significantly enhance your ability to spot profitable setups in the markets. So let's start with point number 1, which is what we call the trend peak or bottom. This is the highest point in an uptrend or the lowest low in a downtrend within the current price movement. So let me show you a quick example. So here, what we're looking for is we're looking for the potential shift in trend. So as we make higher highs, this is our number 1 point, okay? So that's our number 1 point, but then we make higher highs, that becomes our new number 1 point. Now, when we're moving in a downtrend, each lowest low is our number 1 point, okay? So this is our number 1, but then we make a lower low, that's our number 1 point. Point 2 is where we're looking to spot the pullback or the retracement. It's the first retracement from point 1 that's forming a higher high in a downtrend or a lower low in an uptrend. So let me show you an example of this. Point 2, we're in an uptrend, right? So here is our highest high. That's our number 1 point. Once we get that first pullback or retracement, that becomes our number 2. In a downtrend, this is our number 1 point because this is our lowest low. When we retrace higher or make this lower high, that becomes our number 2 point, okay? And then point 3, as the name implies, is our third leg. It's either the second low point or a higher low for a long or bullish formation, or the second high point or a lower high for a bearish formation. Now you can see here that we have a 1 and we have a 2 and then we have a number 3. This is the lower high. It's lower than our number 1 starting point. In a downtrend for a bullish setup, we're looking for the higher low. We have our 1, we have our 2, and then we have our 3. That's our 1, 2, 3 bullish pattern. All right. So now what? Well, this is your 3-point profit pattern, but what are we missing here? Yeah, how do we enter? Does anybody want to take a wild guess on where or how we enter? We are simply waiting for a break above or below the number 2 point, and that's it. Okay, so in this bullish example, means that we're looking to go long, expecting it to go higher. We are simply waiting for the market to do what? Yes, trade above and through the number 2 point. So we've got our pattern located. We are waiting to trade up and through the number 2 point. And as we can see, price did exactly that. We can all agree on that, correct? 100%, all right? So flipping to the short side, we are bearish. We are looking to sell this market, expecting it to go lower. We're looking for what? We're waiting for price to trade through the number 2 point. So we have our 1, we have our 2, and we have our 3. We're waiting for price to trade below the number 2 point. And that is exactly what we get here on that next bar. So can everybody agree on that? We should all be seeing the exact same thing because it is 100% mechanical. Do you see how this is not or near 100% mechanical? We're seeing the same thing, and that's rules-based, and that is mechanical. So once the price breaks through point 2 after forming that point 3, that signals our trade entry. Okay, and there we go. That is our 3-point pattern. Very straightforward, right? All right, perfect. Now, what about stop losses to manage risk? Okay, what about stop losses to manage risk? Because every trade that we place needs a stop loss to manage our risk and also a profit target or limit order to take profits. And then just general trade management, okay? Once we're actually in the trade, what are we doing? Okay, because this is where a lot of people will stop, they'll panic, they'll get frozen because they don't have a plan. Well, this mechanical strategy eliminates that part of the equation. And these are all very important questions. Okay, we must always use a stop loss to protect our capital and always know where we should look to take profit, as this is why we are in the market in the first place. Now, let's first cover stop losses. This simply means that sometimes Mr. Market does not do what we want to do and goes in the opposite direction. And that's okay because we're not going to be right 100% of the time. So we put a stop order in to protect our capital in case we are wrong. So for a bullish setup, we're going to put a stop below the number 1 point, okay? Our stop or risk is going to be below the number 1 point. So here is our bullish setup. Our stop is going to go below the number 1. For a bearish setup, it's just the same, but opposite. It's going to go above the number 1 point. So we have our 1, we have our 2, we have our 3. We know we're looking to get short here. Our stop is going to go above the high of the number 1, okay? Now, we must place the stop once we get in to protect ourselves against adverse price movements. Now let's cover the fun part, and that is profit taking. All right, so we know that we must use stop losses to protect capital, but we also need to know where we should look to take profits, okay? Because that is why we are trading in the markets. Now, our profit taking is quite simple. It's going to be the difference between the number 1 and 2 points, and specifically, it's the low of the 1 measured to the high of the 2 measured up in equal distance. So whatever this low is and whatever this high is, we're going to take that difference and then measure up, and it's $1.98 in this example, okay? So we're going to take that $1.98 distance, we're going to measure up, and this is where we're going to put our limit order to take profits off of the table. Now for a bearish setup, it's going to be the distance between the 1 and 2, just like the bullish setup, but this time we're going to measure down, okay? So we're going to measure the high of the 1 down to the low of the 2. We're going to take whatever this range is, and then we're going to measure it lower. Well, it's $3.68 in this example. All right, so we measure from here to here. We take that measurement in equal distance. That is our profit target, okay? Everybody follow. Everybody follow. Okay, so let's recap. For a bullish 3-point strategy, we're looking for the trend to become established at price heading lower, okay? So price is heading lower, and then we're looking for that retracement higher, okay? So there's our 1 and there's our 2, and then we're looking for a higher low, okay? That's our number 3. And we are now looking to get long on breaks above the number 2 point for a bullish trade to the upside. For the bearish setup, the bearish 3-point strategy, we're looking for price to be heading higher. We are looking for a retracement lower. So there's our 1, there's our 2. And then we're looking for the price to retrace higher, making a lower high, not taking out that 1. And we know that we are looking to get short or take bearish positions on a break or close below the number 2. Now, let's walk through some additional examples here, guys, because it's just about repetition. So this is a monthly chart, and I on purpose left off the ticker and the symbol because it doesn't matter, guys. We could be looking at the Canadian dollar, we could be looking at live cattle, we could be looking at Caterpillar. It's all a price action base at the end of the day, okay? So we have our 1, we have our 2, we have our 3. We know, I mean, basically months in advance that we are looking to get short on breaks or closes below the number 2. We know that if and when we get triggered into the trade, our stops are going to go above the high of the 1, and our targets are going to go the distance between the high of the 1 and low of the 2, measured down in equal distance, okay? And this is what that would look like. Weekly chart, same thing here. We have our 1, a 2, and our 3 pattern. We know we're looking to get long on breaks above the number 2. So we know all the rules to the strategy and the key ingredients of what we need for a trade, while everybody else out there is scratching their head wondering what to do, okay? We know days, if not weeks, or if trading a monthly chart, sometimes months in advance, our exact plan of execution. Okay, we know that we are looking to get long on breaks or closes above the number 2. And when we get into the trade, we can place what's called an OCO order, an OSO order, which is order sends order. So we get filled on the trade. An OCO would then send a limit order to the upside and a stop order to the downside. And then this order right here would go in as an OCO, order cancels order. So if price comes up and hits your limit order, it cancels your stop because you don't want to have a naked order out there. Or if price reverse and stops out, it's going to cancel the limit order. Okay, so it's literally a set and forget process. And this is what it looked like. Okay, you get triggered into the trade, your limit order goes in, your stop order goes in. OCO, if you get hit on your limit order, it cancels your stop. All right, so this is a daily chart. Same process here. Remember, guys, price action is price action. We are just trading the ebbs and flows, okay? We're going to take this short. We're going to take this long to the upside. Hourly chart, there's a short, there's a long, there's a short, there's another short. Another hourly chart here. Here's our 13-point profit objective 1. There's profit objective 2, profit objective 1. profit objective 2. All right, and the lower you go in terms of time frame, the more setups are you going to get, right? Because price is fractal. The higher time frame you're on, the less setups you're going to get, and you can trade this all the way down to the tick charts. Okay, so what these lines represent are, the blue line is your entry or breakout level, red line is stop or risk, green line is target 1. Okay, there's your short or breakout level, target 1, target 2, risk, and then here you can see this is one that just set up. Now this is a 1 minute chart. It works great on 1 minute, 2 minute charts, and we teach exactly how we do this, taking the A+ high probability sets. And I even know people that use this on 15-second charts. Okay, so perfect for those that want to scalp all day long. You can obviously do what you wish that meets whatever your personal style is. Now, what this does, or hopefully that what you see is that we are not forcing or chasing entries. We only trade when all of the rules are met. Okay, no forcing trades, no guessing, no fudging criteria just because you feel like the market should move up or move down. We are simply waiting for our 3-step criteria to be met. All right, and so by doing this, by waiting for the setup to meet our rules, this is really what separates hobby traders, emotional traders that are second guessing, chart hopping, chasing entries, to those that follow a systematic process, okay, a mechanical plan. It's either there or it's not, okay, just like these here. It's either there or it's not. If you look at this daily chart of crude oil, the platform automatically plotting out your 1, 2, 3 for you, plotting out your entry level, plotting out your risk level, plotting out target 1 and target 2. And what I love about this is that you get a nice little smiley face when you hit your first target. Okay, gold futures. Again, 1, 2, 3. And how can we take advantage of a trade setup like this? It's very easy. Again, you trade whatever fits your account or trading style. We could sell gold futures here. We could sell minis, micros. We could buy GLD put options. We could sell bear call spreads. There are many, many ways to take advantage of these kind of moves. Delta Airlines, I know that it's kind of becoming redundant by now. I'm just trying to show you that it's just a process that we repeat, okay? I don't care if we're looking at Delta Airlines. I don't care if we're looking at Japanese yen. I don't care if we're looking at soybeans. We are just trading these simple ebbs and flows, okay? How could we do this? Well, we could buy call options or sell bull puts, buy call options or sell bull puts, buy call options, sell bull puts, buy put options or sell bear calls, or just trade this stock, the underlying stock, in and out, all right? Here we are in Cardinal Health. Cardinal Health, again, we're buying, we're selling. Daily chart of Google, okay? How would I play this one? How would I play this one? I like to trade credit spreads because that way it doesn't rely on quick movement or even need to be so super directional. We're expecting the market to break down, but if it went sideways or even slightly against us, I can sell bear call spreads and still collect premium, even if I'm not 100% right on direction, okay? So you do what fits your style and your knowledge base in the markets, all right? So let's talk about what we've learned so far. A very simple step 1, step 2, step 3 pattern, okay? Is everybody here up to this point feel confident in what I've shown you? Something you can say, yeah, I can follow this. Yes, I think I can do this. Step 1 is spotting the pattern. All right. Well, the market's heading lower. The market's heading lower, so I am looking for a potential reversal buy. I'm waiting for that last low to form to start my number 1 count. I get the retracement higher, which is my number 2, and when we pull back, I get my number 3. and we immediately know our entry, our stop loss levels, as well as our targets. Okay, so we know that we have this pattern. We know that we're looking to get long on a break or close above that number 2. We know that if and when we get long, that our stop is going to go below the number 1, and we know that our target to take profits is the distance between the high of the number 2 and the low of the number 1 measured up. A very mechanical process. And then all we do is we put the trade on, right? We execute. So a break above the number 2 confirms entry. Now here's what we can do. Bullish, we can buy the stock, we can buy futures, we can buy call options, or we can sell put options, okay? There's no fudging any of this criteria because it's super mechanical. Now, let me tell you, I used to do all of this by hand for years, okay? I'd say, all right, well, you know, XYZ stock here, this is $32.59. Well, the low here is $18.61. I'm going to subtract that from that. Okay, that's $9.31. I'm going to add that to that, and that's going to give me $41.98. No, nobody has time to do all that, right? Especially if you're trading futures on an intraday basis, okay? Everything is done for you, all right? Bearish, for bearish, what do? We're looking to sell stock, sell futures, buy put options, sell bear call spreads, okay? Now, you've got to stop trying to do all this yourself, okay? You're probably wondering, how do I do this all by myself? How do I find these patterns on my own? Well, at this point, you already know what it takes. You see the setups, you see the steps, but you might be thinking, great, now I've got to learn charts, multiple indicators, spend hours back testing, buying expensive tools. No, that's what this strategy is built to eliminate. You get a system that does the pattern spotting, the plotting of entries, exits, targets, daily setups across multiple markets and timeframes. So you can literally start trading with clarity. Now, what if you had a tool that locates the pattern for you, automatically plotted your entries and exits for you, and could scan multiple markets and timeframes for you? Would that help you find high probability trades on a daily basis? Of course it would. That's exactly what we did, is we built a tool that does just that. So do you remember our examples from earlier, which basically replaces the need to hunt and manually hand draw the pattern? Okay, 1, 2, 3. Look, you can hand draw this until the cows come home. But why would you hand draw this or scour through dozens or hundreds of tickers and markets and symbols trying to find these patterns? I used to do that. But now, thankfully, with technology, it's not required. Okay, we can spot these patterns where we spot the pattern forming, had to map out the 1, 2, 3 points, and then get the calculadora out and define our range for targets. Okay, this is $32.63. This is $15.41. Okay, let's see that. I'm gonna subtract that from that. Okay, that's $4.19. Okay, that's gonna be a target. No, we're not doing that anymore. Okay, with the powers of technology, we've done all of the heavy lifting done for you. Okay, you can see here's our 1, 2, 3 pattern. Here's the breakout or entry level, target 1, target 2, and risk. 1, 2, 3 pattern. There's a breakout or entry level, risk, target 1, target 2. Absolutely no guessing on where you should be putting your orders. And it looks beautiful, looks absolutely beautiful on MetaStock here, giving you very clear, clean 1, 2, 3 patterns, entry, risk, target 1, target 2, entry, risk, target 1, target 2, entry, risk, target 1, and target 2. And not only does it just plot these patterns for you, it also scans these patterns for you, okay? So if you want to run a scanner across your favorite basket of stocks, you want to scan across the S&P 500, you want to scan across futures markets, Forex markets, crypto markets, whatever it is you trade in whatever time frame you choose to trade, you can scan for these patterns, okay? And what that scan is going to look like is you're going to get a basket of symbols, X, Y, Z, A, B, C, and it's going to give you, hey, it's a market that is gearing to set up. Okay, so when that market decides to go higher or when that market decides to go lower, you are going to be ready to pounce on that with your entry preference. Okay, and it is uncanny at calling tops and bottoms in key markets such as what we see here, the S&P 500 through the lens of the SPY ETF. Here in Meta, META, a 1 and a 2 and a 3. This is a daily chart here. There is the break below the number 2 that's plotting that entry level for you, your stop and your targets. And once you get to target, you get that nice little happy smiley face saying, good job. You follow the rules and you were rewarded. All right, let's look at this one, GE. Again, I am totally agnostic of any market that's trading. I don't care. Give me the markets that are setting up to possibly short or the markets that are getting ready to possibly get long. Okay, and teach exactly how we do this so we can avoid we're not going to avoid losing trades. It's just not possible in trading, but to avoid what we would consider maybe a B or B minus setup and really only focus on the A and A plus setups. All right, so here GLD with current volatility that we've been seeing in precious metals, we've been identifying some really tremendous swings using this exact pattern and strategy. Same thing with crude oil, on the move, 30-year bonds, and even the indices. Now, we've obviously and are currently looking at MetaStock charts, right? And you can see how clean and how beautiful these are and how it could speed up your process of finding high quality, high odd ideas on a daily basis. We've also built this for Thinkorswim, where you can see the pattern here for you, TradeStation, where you can see the pattern for you, NinjaTrader 8, where you can see the pattern, TradingView that plots the 3S pattern, and even MetaTrader 4. This is the Euro Kiwi. You see the longs, the shorts, and the longs. And then even on wealth charts here, you can see that the pattern forming longs with all of the criteria that you need to make a logical and educational decision. So why is this different? Why is this different from everything else that you might be consuming or have consumed? Is that what you've noticed is how clean our charts are. Okay, I have logged in. I've met many of you at our live physical in-person events. I've done remote sessions with you guys over the years, and it's unbelievable all of the crap and junk you guys got on your screens. I say that jokingly, but also in seriousness, is that some of your charts and computer screens are clogged up and cluttered with so much junk you can't even read price action. And so you can see that we don't need dozens of indicators, right? We don't need to be chart hopping, all right? We do not need to be second guessing anything, okay? And listen, I know that many of you here, whether you want to admit it or not, have tried it all. 20 plus indicators, 10 subscriptions, loads of strategy experts or whatever they're called. And all it does is it clutters your mind, drains you mentally and financially, and still leaves you lost. Okay. Well, this is different. This is different because what you see is a clear, clean set of simple mechanical rules that anybody can follow. Okay. And the benefits here are this. It's providing you mechanical consistency. So you know exactly what to do next. And what that does when you approach the markets and you come in and attack the markets every day, it reduces your stress because you're not trading emotionally. You're going to have high probability setups every day. And when you implement what you learned today, this is what your new trading day looks like. Confidence. You wake up, you glance at your scanner, you see value reversals, and you actually sit down at your computer, your desk, your computer screens, and you're confident. You're excited about taking on the day. You know exactly what the setup looks like, what your entry looks like, what your exit, what your target is, and it means no more emotional guessing, less stress, better decision making, and less margin for error. Now, I'm going to tell you right now is that results matter, okay? Using this as one of my primary entry method techniques, we get results, okay? We're not trading for fun. We're not trading for kicks and giggles, or feel free to replace kicks with your preferred term, but we actually get results, okay? This is one of the primary entry method techniques that I've been using for 15 plus years, and it's not changing. Okay, I would not continue to be using nor talking about this 20, nearly damn near 20 years later if I did not believe in it and it did not work, plain and simple. We've got people that have been trading for years still trying to figure this thing out, and just using this basic methodology and these basic mechanical principles, it has changed their trading. Okay, and so why do I still use this every day? Well, I can show you, result after result, but mostly because it's simple and repeatable. It's pattern based, it's not lagging, and it works across all markets and time frames. And now, with the beauty of technology, we've been able to automate the pattern for you onto your chart. And I've built a step-by-step program that you can use to master this strategy. Automate, execute, and repeat. That's all we do is we automate the process, we execute the trades, and then we repeat. Okay, there's no chasing fancy, blinking, flashing gizmos, looking for the holy grail. We are trading simple price action patterns. Okay, we do it with what's called the 3S code. So what is this 3S code package? Well, it includes full on-demand trading. Watch whenever you want at your speed. You're going to get the full indicator and scanner suite, the tools that you'll have daily. You're going to get access to our members only Telegram room, an ongoing support in the community. You're never alone. And you're going to also get access to our weekly live trading sessions. We have these every single week. They are recorded for your viewing convenience and pleasure should you miss out on an episode. They're every Tuesdays at 11 a.m. Eastern, and then the archived and uploaded into the members area. This is where we walk through our strategies. We walk you through real trades. We do full-blown market analysis, and so you can leave there with a plan, and you can leave there with some fresh trade ideas. And it's all through what we call the 3S code. So you can start profiting from these predictable patterns. Now, let me ask you this. Let's do some math here. How many losing trades have you taken because your system was unclear? How many indicator subscriptions cost you, I don't know, $50, $100, $200 a month? How many hot tip newsletters promised the moon and delivered scraps? If you added up the time, the stress, mistakes, pain, You've already paid way more in losses and wasted effort than what this is going to cost you today. If you tried to build what I'm giving you here, the scanner, indicator, rules, training, live sessions, community, you spend thousands of dollars. You'd lose time figuring this out, what works. You've made mistakes, costing you money, feel stressed out. But here's the package proven ready. We're not charging $3 grand. We're not charging $2,000. We're not even going to charge $1,000. In fact, nothing even near that. With this package, you're getting access to the 3S code indicator, the 3S code scanner, access to our weekly strategy and scan sessions, and access to our private Telegram room. Okay, you can get started today. Included with this package, 3 bonuses: my 25 top option strategy, my chart pattern principle trading guide, and all of our quick start guides and manuals. And you can get started for a one-time lifetime payment of $397. And the offer link is metastock.com/code, or you can also call 1-800-882-3040, and the MetaStock team will be glad to answer any questions. Now, imagine being able to spot high probability setups every day without hesitation. Imagine having mechanical clarity. You know exactly where to enter, where to exit, and where your target is. Imagine trading both swing and day without the chaos, without worrying if that newsletter or indicator you saw just now is going to suck you in. 3S code eliminates all of this. The platforms that we have built this for include the following. Of course, MetaStock, Thinkorswim, TradeStation, NinjaTrader 8, TradingView, MT4, and Wealth Charts. And you're going to get access to each of these if you use more than one. You're also going to get access to our weekly strategy and scan sessions. Again, this is where we are covering our top setups, day and swing trading strategies using the 3S code, using options, trading minis, micros, ETFs, and so much more every single week. You're going to get access immediately. The indicator and scanner, I want to be clear on what this includes. You're going to get a visual plot of the 1, 2, 3 top and bottom reversal areas, include the entry, exit, stop, and target levels, all color coded for easy reference. Customizable settings. If you don't want red, you want hot magenta, you don't like yellow, you want orange, whatever it is, you can change those colors there. You can scan for setups only, trigger only, or both. Scan for tops, bottoms, or both. Intraday setups, swing setups, and across any instrument or time frame. All right, now what includes some additional bonuses here? The first one is my chart pattern principle trading manual and guide. This will help jumpstart you by teaching you how the market works, why markets move the way they do, who the players are, and how to look at and understand the market the proper way. Bonus setups, how we use the power of seasonality to trade this pattern, and so much more. Number 2 is my 25 top option strategy guide. This is great regardless of your knowledge of options. And I include this guide because I believe options are a very powerful trading instrument if you know how to use them properly. So it's important for me to include this so everybody can take advantage of options if they wish to do so and do it the right way using the 3S code strategy. And then lastly is access to our private Telegram channel. Okay, each and every day I'm posting ideas and setups. Could be stocks, could be futures, currencies, intraday setups, daily, weekly, and more. So basically handing you fish while you're learning to fish on your own. And look, it's not just me, right? Students come to me all the time. I've tried indicators before, they didn't work. Well, this one is mechanical, this one's proven. They say, I'm new, I don't have time. This works in all time frames. Training included, so you can work it around your schedule. Markets may change. Well, the strategy is based on price action, and so that means it's timeless, okay? Now I'm going to tackle what's probably on your mind right now. You say, hey, I bought indicators before and I've gotten burned. I get it. That's why this isn't some secret sauce black box indicator. I've given you all the rules. It's mechanical. You follow the rules and it leaves no room for guessing. I'm not experienced or I don't have hours. Great news is you don't have to spend all day staring at charts. This works across all time frames, day or swing. Look at charts at the end of the day, in the morning, in the afternoon, at night. What if the market changes? Well, that's why we focus on price action at T2 Markets. This is why we are trading price action reversals, because again, it is timeless. When emotions flare and mega indicators are lagging, price action is speaking to us very clearly. So here is your offer, guys. You're going to get access to the 3S code indicator, the 3S code scanner, weekly strategy and scan sessions, and our private Telegram room. You can go to metastock.com/code. Guys, this is a one-time lifetime payment. This is not a subscription. This is not a surprise renewal after a year. This is lifetime access. It is one of the best and most classic ways to time your entries regardless of what strategy you may be using. And with that being said, I've got a couple minutes here. I'm going to answer some questions, and then I'll turn it back over to the MetaStock team and get them back on track. Peggy, yes, the same distance as the stop. So you'll see that with this pattern, 1, 2, 3 pattern, it is an equal distance. So let's say here's our target and here's our stop. And let's just say that this was $1. So your stop would be $1, your target's $1. So yes, it's a 1-to-1 risk reward right off the bat. And we can typically do better, but it's very important that you let the market materialize in its anticipated direction, and then get ourselves quickly into a risk-free position. Kevin, it will run on multiple platforms. I think I may have already answered that. We've got this built for like 6 or 7 platforms right now. As you can see, let me see if I can find that. There we go. There are the platforms. Steven says, what about bonus number 2? Bonus number 2 is 25 top option strategy guide. Oh yeah, it's absolutely incredible, Ken. Thank you for the nice comments. Yes, you can run both concurrently, Kevin. You can run both concurrently. Good question. So the question was, can I run on multiple platforms at the same time? Can I run it on MetaStock and TOS at the same time? 100%. We do have, as far as support and installation and things like that, we've got training tutorials. If you know how to turn on your computer and you are familiar with your trading platform, you'll be up and running in less than 90 seconds. We do have videos, we do have guides, but we also do have a support team, and we do take care of our students and customers. One last thing, our email is support@T2, and I'm sorry for the chicken scratch, T2markets.com. Support@T2markets.com. That's how you can get a hold of our team, guys. And it should, because it's just plotting action. Never used it on options chart, but that's interesting. Tony, if you want to email me, email support@T2markets.com. Email me, and I will plug that in and confirm that for you. All right, well, I think we're down to the wire with a couple minutes to spare. Guys, I really appreciate everybody tuning in. I get very excited, very fired up. I love this stuff. I love this strategy. It works. And we trade this setup every single day, right? Every single day. We swing trade, we day trade with it, and it's just a really awesome tool. So I'll go ahead and give it back to the MetaStock team. Thanks again for having me on, guys. Good luck in the market. Stay safe out there, and we'll see you on the flip side.
All right. Thank you, Silas. Appreciate it. Very good. And yes, I can confirm you can use that on an options chart. At least in MetaStock, you can apply it to an open options chart. Kevin asks, can the scanner be set to run automatically or only manually? In MetaStock, it's a manual run, but you can run it anytime during the day. I just finished looking at the results of a scan, looked at all the stocks that I wanted, bought a stock. You can run it anytime during the day. And I like to do all of my execution right either at the start of the day or right at the end of the day, actually kind of a little bit of both. So you can scan this, you can scan it anytime during the day. And I do hear a live mic, just so you're aware. Take advantage of this. Not only is it $397 today as a conference special, not only does it have all those bonuses that Silas has talked about, we'll also back it with a 30-day money-back guarantee. You can try it, see how well you like it. If you don't like it, you can get a refund. So metastock.com/code, metastock.com/saleschat, 800-882-3040. Kevin, thank you for all of the questions. All right, where is that microphone on? let me look over here.
Jeff, Steve Primo is on as a panelist.
That's okay.
I don't know. Can he go ahead and when it's his turn, do a presentation as a panelist rather than organizer?
Yeah, the reason that happens is we've added so many organizers that we run out of slots for them.
Oh, okay.
So everybody from here on out will be a panelist, and we can't actually upgrade them and so that they can see the questions and stuff like that. But that's the reason we don't have any more room for organizers.
His mic was on and I muted it, so that was
okay. Very cool. As we move on, I want to invite everybody to join the community. I had tons of people join in this week. It's a great community. You can chat with other traders. We're in there looking at stocks all the time. They share their ideas. We talk about indicators. We do sessions where we kind of do like little interview sessions. It's a great community. TheTradersForum.com. Come and join us. We'd love to have you there, and we'd love to see you in the chat as well. All of the offers, including 3S Code, and all of the MetaStock-based offers that we talked about today, you can get at metastock.com/conf promo. You can also visit metastock.com/saleschat or give us a call, 800-882-3040. We're kind of sounding like a little bit of a broken record, but man, the ability MetaStock has to go in and find opportunities in the market through the scanning is amazing. And it's not a tool that you see with the same functionality in a lot of places. So give it a go. If you buy a month, we'll give you the second and third month for free, and you can do it right there. Great. Let's do a prize real quick. I know we are 1 minute over, but there's always time for a prize.
There is always time. And apologies to Steve. I didn't mean to rat him out. You asked, and I
figured it was somebody. In any case. All right, so the next one that we're going to give away, the next prize is a Theta Trader membership. The Theta Trader membership actually is an algo-driven option strategies. It's very, very cool. Erik's going to be on a little bit later to talk about it, but we're going to give away one of these right now. It's a $597 value. Greg, let's make somebody random. What I needed from you is a number between 2 and 6,489.
Yeah, that number is 2770, 2,770, 2770, as it were.
That is Ravi. So let me go ahead and copy this out. I'll make a note of that. I'll send that over to Erik in just a minute, and that way we can get him set up. Okay.
Congratulations, Ravi.
Okay. Okay, gotta find where I'm at. Thank you very much, Steve. Greg, what's you? You right there. All right, very cool. Again, all of the you can try out the award-winning MetaStock for yourself. It's been rated #1 in its price category for 32 years in a row. You might find this surprising, but the next guest, oops, cancel. I almost left the session. The next guest I consider a friend of mine. Yeah, I know, weird, right? Steve Primo is somebody that's been working with MetaStock for a number of years, decades now. He used to trade on the floor of the Pacific Trading Exchange, which turned into a gym later, actually, and a restaurant. The San Francisco one was a restaurant. I actually ate there. Steve is a very skilled trader. He's going to be talking about well, I don't know. Actually, I thought he's going to be talking about something today. I don't think it was what I was going to tell you he's speaking about. But I will say this about Steve. He's very thorough. He's been using some of the same methodologies for decades. And I really enjoy having him on. And that's why every time we do one of these events, we invite him. Steve, let's go ahead and get you started. What are you going to be talking about today?
Okay, Jeff. First of all, I apologize. I've had so many technical difficulties. I had to go rush and use my wife's laptop. So I hope everything's coming through okay.
You sound great. You sound fine.
Great. Can you see my screen or?
Okay, what I'm going to do now is just click on the share button at the bottom.
Okay, it's asking me to be a presenter, an organizer.
Oh, okay. Well, let me see it, but that might be something we need to do. Let me make you the presenter. Yes.
Oh.
Now will it let you do that?
Just here. Let me check out. It's asking me for a number of things. Don't see my screen here though. Let me look and see the window. Okay, here we go. I'm going to try it real quick. Let's see if this works. How's that?
All right. Very
I
good.
apologize. I'm in a totally different area of my house, and I hope this comes through okay.
No, it looks great. And I think a little bit of it was me. I didn't know I had to make you an organizer for you to be able to do that. So we're learning. It's a new interface. Steve, I can hear you and I can see your screen, and I'm going to get out of the way. It's your turn. Go.
Okay, great. Thanks, everyone. And thanks to coming today. This promises to be a great educational presentation. And I know you probably have listened to a lot of great ones today. And this one will really help you with your exits, because I'm going to talk today about 3 exit strategies that I firmly believe will change the way you trade. And the best thing about these exit strategies, you're going to learn all the rules and know exactly how to apply them today. But on top of that, you are going to be able to apply them as early as tomorrow if you'd like. So they're really great, and they're going to fit a number of different market environments. And let me share with you what I mean here, just by starting out with this older chart in Google. Now get used to this chart, because we're going to be using this mainly to show you how these 3 exit strategies can be transferred onto any market environment. Let's say, for example, we're looking at this chart and you say to yourself, well, my strategy just generated a buy signal right here. Okay, all well and good. Well, what we're going to be doing today is share with you how most traders trade. For example, you'll get a really nice trade right here, and it's going in your direction. The only trouble is you don't have any idea how to get out. You've always said to yourself, well, I focus so much on getting in and where to place my stop, but it's going in my direction. That guy in the trading room says it's going to go much higher. That guy in the blog and on TV says this stands to make a ton more money. So maybe you stay in there, and then this is what happens. And in a matter of days, you've given back all your profit, and now you turn into a long-term investor, right? Because you're holding on to your position, hoping and praying for it to come back so you can get out with a nice little profit. Well, with one of the strategies I'll be sharing with you today, you could have exited right here and gotten out at or near the very high before the market decided to go down. So this is what we're going to be talking about today. 3 exit strategies that I believe will change the way you trade. And once again, you can start applying them as early as tomorrow if you'd like. So welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading. I've been trading now for 49 years. I started my career on the floor of the Pacific Stock Exchange. I was on the trading floor for 16 years, and 9 of those years I was a specialist. If you're not familiar with what a specialist is or does, there aren't a lot of them around anymore with the advent of electronic trading. In the old days, if you wanted to buy or sell a stock, let's say IBM, which was one of the stocks that I actually made a market in, you would call up your stockbroker. The stockbroker would take an order and say, okay, my client wants to buy 100 shares of IBM. He would call the floor trader on the floor of the exchange. The floor trader would take down the order, buy 100 shares of IBM, and then walk over to the trader who specialized in making a market. These were specialists that were behind those large wooden podiums. If you ever Google those pictures of the trading floors with lots of paper on the floor, the specialists were the ones behind those large wooden podiums, and they made markets. I made markets roughly about 50 or 60 stocks. I made markets during the crash of '87 and the bull market that followed. I left the floor in the mid 90s to manage money and trade my own account. And about 15 years ago, I teamed up with Pro Trader Strategies with one goal in mind, and that was simply to educate traders around the world. All the tips, techniques, and methods that I've accumulated in my nearly 5 decades, teach them to traders around the world. I'm happy to say I have students in over 115 countries around the world and in every state in the United States. And so that's what we're really a little bit different. Our only purpose is to educate you so that you can ultimately put the power back in your hands and make your own trading decisions. If there's one thing I've learned in nearly 5 decades of trading, the traders that are still around, the ones that just didn't have a couple of maybe good months or a couple of good years, but a couple of good decades, are the ones that make their own trading decisions. So that's the service we provide. We give you all the tips and techniques that have stood the test of time so that you'll feel comfortable in making your own trading decisions. And you'll see that in today's educational class. Now, before I begin, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these 3 techniques, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, another way to get more education from us on a daily basis is to follow us on X. There's our handle right there, if you may want to copy that down, at SPCLSTTRADG. Every day I post anywhere from 3 to 5 different snapshots of signals our methods have generated. Also lots of financial wisdom, little bits of financial wisdom there as well. So lots of great free education on a daily basis. So please feel free to follow us on X. Okay, with that stated, let's begin today's educational class. And I'd like to start out with a theme, something that my mentors taught me. And they said, Steve, having an exit strategy can avoid unnecessary pain. One of the worst things in the world, one of the worst feelings in the world is to be in a trade, especially a profitable one, but only on paper, and that not having a proper exit strategy, either giving away a good portion of that profit or having that profit turn into a loss. So what we want to do is avoid this unnecessary pain. Now, here are the main problems traders have with exits. This is what causes that pain. Firstly, they exit trades too early. Most of us have done this in our trading careers. We've gotten out, we've had a nice little profit, and we say, that's great, boy, I'm going to get out. And then it just keeps going and going and going, right? It's a terrible feeling knowing that you left a lot of profit on the table. Or the opposite, you exit trades too late. As we showed in the example there, you stay in a little bit too long and give away a good portion of your profit. And now you're either just breaking even, or now that once profitable trade on paper turns into a loss. Or a lot of traders want different exits for different market environments. We all know that when there's a choppy market, you can't get as much profit or get as much gain because the market is whipsawing back and forth. So you need a different exit plan for that, as opposed to one where there's a really strong trending market. And then lastly, a lot of traders have an adequate strategy. They feel comfortable with the strategy they're trading, but they need help in just fine-tuning their exit. They just want to fine-tune it and just make it a little bit more advantageous to what they're trading. Now, here's what we want to talk about today. Most people, most traders don't know this, but there are only 2 types of exits. I know I'm going to be sharing with you 3 different exit strategies, but when we break it down into the categories, there are really only 2 types of exits, and here's what they are. The first type is what we call a fixed exit. Now, this is for the trader who likes to know in advance where I'm getting out. You usually know before the trade even takes place where you're exiting. That's what a fixed exit is. Now, the order type you usually use to exit using a fixed exit is a limit order. Okay, so a fixed exit is just that. It's fixed. You know in advance where you're getting out. It's fixed, and you just simply, once you're in the trade, you wait and hope that it'll get to this level. Now, the second type is the exact opposite. It's called a dynamic exit. This really means that it's moving with the ebb and flow of the market. Therefore, the market tells you where you're going to get out. You don't have any say in actuality. The market tells you by either a series of indicators or different adjustments where to get out of the trade. The advantage to this is sometimes you can get more gains than with a fixed exit, because if the market keeps going up and up, let's say, and you're long and it hasn't issued an exit yet, you can capture a lot more gains. The only disadvantages to dynamic exits are that you don't know where you're getting out. And this causes a lot of worry and anxiety for a lot of traders. They say, listen, I want to know in advance where I'm getting out. So if I have a dynamic exit, I'm kind of at the mercy of the market. So there's nothing wrong with either one of these. These are both valid ways of exiting. But the only thing wrong is when you're the type of trader who likes a fixed exit and you're trading a strategy that employs a dynamic exit, and vice versa. So this is what we mean as an educator. We want to provide you with these different variables and let you decide. You'll only be profitable or successful in a strategy with one that makes you feel comfortable. So you have to know which type of trader you are. Are you the type of trader that likes fixed exits, or are you the type of trader that likes dynamic exits? Once again, there's absolutely nothing wrong with either two. The only thing wrong is when you're trading out of sync with who you are. So we're going to give you 3 different exit strategies that encompass those different styles. And we'll start with exit strategy number 1. We call this previous high, previous low. Okay, so who is this technique exactly for? Well, it's for traders who want a fixed exit. So if you fall under that category, you're going to want to trade this technique. But let me share with you what it is first. All right, let's look once again at our old friend Google. Okay, this older chart. And just for educational purposes, it doesn't matter what time frame, if this was current or what time frame. All that matters is you understand the concept of exiting. Let's say you're watching this and maybe some guy on TV or in a chat room says, this is overbought. It's gone up way too quickly, too soon. It's time for this to come back down a little bit. And then the next day, guess what? It looks like it's starting to break down. So you want to jump on board that. You decide to sell. You say to yourself, okay, I'll go short this. Maybe it is overbought. It's going to come down a little bit. But you have no idea where to get out. If you want to use technique number 1, if you're a fixed trader, here's what you would do. You would identify the previous low, okay? Now the low is usually a pivot low. It's formed by 3 bars. As we look here, we have bar number 1 has made a low, bar number 2 is a lower low, and then bar number 3 is a higher low. You have this kind of a pivot or V shape right here. This is the previous low. Now the reason why we use this is because oftentimes this previous low will act as a magnet, pulling price down to it. You see it over and over again. So let's say we went short. Okay, well, the first 3 days, it's looking pretty good. We're actually doing well. Whether we actually shorted the stock or whether we bought some puts, we're looking okay. But we start to go up here. Oops, we start to go up and we say to ourselves, well, is that over or is it finished? Well, sometimes it is, but oftentimes, as we said, price will act as if it's being pulled down by a magnet. And then ultimately it reached the previous low. Now, a lot of traders say, well, where exactly do I place my limit with this fixed exit technique? Well, once again, it's up to you. You are in charge. You can either put it right at the exact low that was previously made. Some traders like to put it a little bit above because oftentimes we'll get just close to there and then we'll move back up. Or oftentimes it'll get a little below, as you see right here. So it's up to you. All this technique is telling you is that price is gravitating towards this level. Now, it's not guaranteed 100% that it's going to exactly touch the low, but you'll see it oftentimes more than not, because look what happened right after that, okay? So you have a nice little profit there based off technique number 1, which is the previous high, previous low, but you're still involved in this stock. So you say to yourself, well, you know what? We just broke out of this short-term downtrend. And so I'm a technical trader and I say this is a buy signal. So you go long. Now, if you want to still employ exit technique number 1, you go to the most recent high, which would be right here, the previous high, right? As you see that 3-bar pattern, you have a high here, a higher high, and a lower high. So this is the most recent previous high. It's kind of an arrowhead approach if you connect all the lines there, okay? So let's see how the trade unfolded. You're long now, either maybe the stock or options, whatever you want. You're really caring what vehicle you're trading this with. And once again, price is gravitating towards that previous high. It acts like a magnet to pull price up towards it. And right there, it touched the previous high. Once again, it's your decision whether you want to use the exact previous high level. You could use it a little below or a little above, makes absolutely no difference. But it's up to you how you want to get there. And it traded right there and then went down. So you're feeling really good about yourself. You're feeling that you found a method that works. But let me share with you what happens with most of our students that use this, especially beginning students. Even though price will gravitate towards the previous low or the previous high, it does not necessarily mean that it's going to stay there. In other words, that it's going to go right up to that high and then stop. What happens is just that what it says, it will gravitate towards there, and sometimes it will go even higher because, as we see later on, it actually went and made new highs. But that's not the point of this technique. The point is just giving you a place in which to exit, whereas before you had no idea. So you'll see oftentimes, as we did before, price will get right down to this previous low and then bounce. And oftentimes it will get right up to the previous high and then go lower. But then oftentimes it'll continue. Either way, in this example, if you were getting upset that you got out too early, well, looking back in hindsight, how would you have liked to have stayed in this trade and given all your profit back? So let's review exit plan number 1. Remember, if you're long, you want to exit at or near the most recent short-term high. If you're short, you want to exit at or near the most recent short-term low. It's for traders who want to apply a fixed exit, meaning that we know where the exit is going to be even before we get into the trade. Let's move on now to exit strategy number 2, and we call this the 5-period simple moving average. All right, well, who exactly is this technique for? Well, it's for traders who want a dynamic exit. Remember, a dynamic exit is the exact opposite of a fixed exit, meaning that we often don't even know where we're getting out while we're in the trade. So you have to once again decide and do a little soul search and say, well, is this right for me? Do I actually know where to get in or where to get out? So if this is your cup of tea, then great. If it's not, well, then you may want to stay with a fixed exit. All right, so let's go back and look at our old friend Google once again. Let's take that buy signal that we looked at. If we're going to apply technique number 2, first thing we have to do is once we get into the trade is apply a 5-period simple moving average. And once again, it makes no difference if we're trading a 5-minute chart of the E-mini, a weekly chart of the British pound, a daily chart of crypto. It makes absolutely no difference, okay? This could be a monthly chart of Google for all we care. But you must apply a 5-period simple moving average. And the way this works is that as long as price closes above the 5-period simple moving average, you're still in the trade. Now, you notice I didn't say as long as price touches. No, it has to close above the 5-period simple moving average. Now, let's see how this trade unfolded while price was above the 5-period moving average. So we just got long. Let's say we bought on the close. And as we track the trade, well, it's going in our favor. And you see here, excuse me, we are closing above the 5-period simple moving average. Now, here's the first example of where students that are new to this method have a problem. They say, well, Steve, it touched and opened below the 5-period simple moving average, so I got out. Remember, the rules to this particular technique say, no, it has to close below there. So all we're doing is looking for it to close where it closes in relation to the 5-period simple moving average. And if it still closes above, even though we touched it and opened lower, that's okay. So you have to wait for the close of the bar, whether it's a 5-minute bar, a monthly bar, or a daily bar. So we're still in this trade according to the rules. And it's good news. It's good we did, because now it's making even higher highs and continues to close above. Here, once again, we opened lower. This is where students get worried and say, well, Steve, I've got to get out, right? No, we have to wait for the close. And it closed above. So therefore, you are still in the trade. And we went higher and closed a little lower. We closed near the low of the day, but we're still above the 5-period simple moving average. So we're still in this trade. Now, here's where we came to our first point of exiting. All right, here we have 2 actual choices in which to exit. You can use what we call plan A, okay, exit A. And that's basically saying, it's a more aggressive way, saying that if we close below the 5-period simple moving average, you'll sell at the market. Now, if you're lucky enough to be in front of your computer, if you're trading all day in front of your computer, well, 5 minutes before the close, just send a market order and just get out. Now, if you come home at night and you see that you close, well, you may want to at least, see if you can do something overnight to get the exact same price or exit on the opening of the next day. This is using exit A. Now, if we want to use a more conservative approach here, we'll use exit B. Now, this is calling for price to trade below the low of that day. Okay, so we closed below, and we're not going to exit unless price trades below the low of this first day. Okay, now we can be below the 5-period moving average for a week, but as long as we don't trade below, it's okay. We're not going to exit the trade. And once again, we're not calling for a close below. It just has to trade below, an intraday trade below. So let's see what happened. Let's say we chose exit B, the more conservative way. We want to see it trade 1 tick below. Well, guess what? We're still in the trade. Had we used exit A, we'd be out of the market and we'd probably be kicking ourselves, but that's okay. We still have a profit. This is what happens with dynamic exits. The market tells us what's going to happen. But if we used exit B, well, we're still in the trade. And now we start the count over again because we are now back up above closing. We are no longer going to use this exit. Okay. So let's track it again. So we see we would, no longer need this here anymore. And we're going higher and higher. So it's good we used exit B. And we're making new highs and we're still in the trade. Now we're touching the 5-period simple moving average. But remember, that has no bearing on whether we're exiting now. It's all where we close. But here we have another close. Okay. So now we're faced with the decision again. Are we going to use exit A, which calls for a more aggressive way of exiting? We're going to simply exit at the market on the close, or exit B, which would mean that we're not exiting yet. We're going to wait for it to trade 1 tick below, because for all we know, we could do the same thing we did back here. We could gap up again and keep going higher. This is what the definition is of a dynamic exit. We're letting the market tell us. So exit B would say we're exiting just 1 tick right below. And as we can see, the very next day, it traded right there, 1 tick below. Okay, and even though it closed higher, that's okay. So with both of these, we would have been exiting. If we exited at the market using exit A, we're out at the market. With exit B, we're also out. And we got a good profit because we entered down here and we grasped a good portion of this real nice up move up here before the stock fell out of bed. So this is the difference between a fixed and a dynamic. A fixed, we would have known right where we're getting out of the opening, and dynamic, we kind of have to wait and see where the market tells us where to get out. So let's review. If we're long and we're using exit A, we're going to exit at the market on the first price bar that closes below the 5-period simple moving average. If we are short and we're using exit A, we're going to exit at the market on the first price bar that closes above the 5-period simple moving average. All right. Now, let's say we wanted to use the more conservative exit number B, or exit B. Well, if we're long, we're going to exit when price trades below the first price bar to close below the 5-period simple moving average. I know it seems a little wordy and a little bit confusing at this point, but don't worry. I'm sure everyone is going to be getting a link to this recording of this presentation, as with all the presentations. You can watch this over and over again to have it make it a better understanding for it. And if we're using exit B and we're short, we're going to exit when price trades above the first price bar to close above the 5-period simple moving average. Okay, so those are the first 2 exit strategies. All right, let's move on now to the third, and this is probably our most popular way of exiting for our students at Specialist Trading and Pro Trader Strategies. And I have to say, this is one I use the most as well. This is what we call range extensions. So who exactly is this technique for? Well, it's for traders who want multiple fixed exits. This gives them the ability to increase their risk-reward ratios. So this, for all intents and purposes, is a fixed exit strategy. But what differs than the other fixed exit method we gave you is that it's going to give you multiple levels to exit using a fixed exit. All right, let's look at our friend here, Google. Let's look at that first signal we had, which was a sell signal. If we're going to be using the range extensions, you must do a few calculations. Firstly, you must go through a little bit of math here. It's not that difficult. It's very simple. But the thing you want to do is first identify what we call the signal bar or the setup bar, which would have been right here. In other words, this is the bar when it concludes, when it closes, whether it's a 5-minute bar or a monthly bar. When it closes, this is when you say, okay, this is a sell signal or a buy signal, regardless of the direction. That's what's the true definition of a signal bar, or another name is a setup bar. So what you want to do is whatever strategy, whatever method you're using, when it generates a signal or a setup bar, you want to measure the range of that bar from top to bottom. This is what's called 100%, okay? And when we say range, we don't mean the open to close. That's not really range. Range is the extreme high to the extreme low. If you're using candlesticks, as we are here, it would be from the high wick to the low wick, okay? Now let's just say this is, for all intents and purposes, let's say it's 10 points. I know it's not, but just to make math a lot easier, okay? So what you want to do is, once you know the amount of points that is, you simply want to subtract that same amount of points from the low of the bar, and this will give you the 200% level, okay? Now, if you want to subtract it again, this will give you, from this level, you subtract 10 points, and this will give you the 300% level, and you subtract one more time, and this will give you the 400% level. So what does this mean? Well, if you're the type of trader who likes to get in and out quickly, if you're the one that says, like, I don't want to tie my money a lot overnight, I just want to have a quick trade, maybe it'll last 1 day, maybe 1 or 2 days, then you would most likely exit at the 200% level. Okay. Now, this is not giving you that good of a risk reward ratio, because most likely if you had your stop somewhere just above the setup bar, it's a 1-to-1. You're basically making the same amount you're risking. But the point is, a lot of traders have strategies that have a lot of high winners. They have a high win ratio. So they don't care as long as they can get in and out quickly and move on to the next one. Now, if you're the type of trader that's more of a swing trader, all right, you stay in a matter of days, maybe weeks, then you would apply the 300% level. Now you're making double the amount of your risk. If your stop is somewhere around here, you're going to be making about twice that amount if it's a profitable trade. So you have a 2-to-1 risk reward ratio. Now, finally, if you're the type of trader that wants to get the most bang for your buck and really see if you can stretch the profit as much as possible, you will use the 400% level. Now you're making 3-to-1, 3 times the amount of what you're risking, okay? So you have to decide what you feel this trade is. If you want to get in and out quickly, you get out at the first level. If you want to be a swing trader, the second, and obviously if you want to get more, if you think it's really going to be a big move, you get out at the 400% level. There are multiple ways in which to apply this, though. A lot of our traders like to say, well, listen, if I have, like, let's say 300 shares I'm shorting, I'll cover my first 100 here, I'll cover my second here, and I'll get out of the position here. Still, other traders will say, well, you know what? What I'll do is maybe I'll get out of half my position at 300 and the other half here. Whereas other traders will say, you know what? I will wait and see if price gets to this first level, then I will move my stop, if it's somewhere up here, down to where I entered. So I'm just going to be breaking even. If it turns around and goes up, at least I break even. If price goes down to the 300% level, then I'll move it from the break even down to 200. And if price goes down to 400, I will exit the position entirely. Now, this is the one suggestion we want to make to all of you who are going to apply this. If price gets down to the 400% level, we recommend that you exit your position entirely, because we've seen in the past that at that 400% level, at or near, it's not a magic number, but sometimes when you get at or near that level, that's when the trend changes. So it's a good time to get out altogether. I'm not saying you're going to get out at the bottom or the top. It's just saying this is a good level to get out of. So let's say you decided to get out at the 400%. You thought this was going to be a pretty good move to the downside. So you'd place a fixed limit right here. And as we watched the trade unfold, we saw that you did have a nice profit. It went to that 400% level. And even though it went a little bit lower for the next 2 days, guess what happened? It started to move back up. So this is what we mean by, if you're going to be using these range extensions, always exit your position entirely at the 400% level. All right. There are a number of ways in which to apply this. You can always pick and choose back and forth, but that's always a good suggestion. Now, once again, we had another signal here. Let's use the same range extension exits using them on this buy level. So we go through the same process. This is our signal or setup bar. This is the bar where everything comes into play, either whether you're a fundamental trader or a technical trader, it doesn't matter. When that bar closes that you decide I've got to buy this, that's your signal or setup bar. So what you want to do is measure the range from extreme high to extreme low, not from open to close. That's not really the true range. The true range is from the top of the wick to the bottom of the wick. All right. This is 100%. Once again, I know it's not, but just to make things simple, let's say it's 10 points. Okay. All right. So 10 points. So once we've measured it, you take 10 points from the high of that wick and add it, and this will give you your 200% level. Now, at that level, you add another 10 points, and that will give you the 300. And lastly, another 10 points, and this will give you the 400. Okay, once again, if you're the type of trader that likes to get in and out quickly, you don't want to tie up your capital a lot, then you'd use the 200% level. If you are more of a swing trader, you don't mind hanging on to a trade for a number of days or possibly even weeks, then use the 300% level. And ultimately, if you're the type of trader that wants to get the most bang for your buck, if you really feel there's going to be a better than normal move, you use the 400% level. But as we always recommend, exit your trade entirely at the 400% level. There are no statistics to prove this. We're not a statistical company. We're just an educational company. But we've seen over years, our students have told us, as well as we've known this ourselves, that oftentimes the trend will change roughly at or around the 400% level. And as we said earlier, you can use this in a number of different ways. You can sell a portion of your position here, a portion of your position here, and get out altogether here. Or you can use this as a trailing stop. Once price gets up to this 200% level, you're not going to exit. You'll simply move your stop. If it's somewhere around here, you'll move it to unchanged. And if you get up to the 300, well, then you'll move your stop to the 200 and then ultimately exit at the 400. Remember, our goal is to provide you with these really high consistent techniques so that you can decide. Remember, what makes you feel comfortable is what's going to make you a consistent trader. So let's watch the trade unfold. Let's say you decided that it was going to go up to the 400% level and you'll exit everything there, okay? All right, so let's watch the trade unfold. Well, in a couple of weeks, we got right up there, right up to that 400% level before it fell out of bed. So you see how we really recommend that you exit your position entirely at the 400% level. Okay, let's review exit strategy number 3. If you're long, the first thing you want to do is measure the range of the setup bar. That's the bar where everything comes into play, all the rules have been met, and you decide that you're going to be either a buyer or well, in this case, yes, since you're long, you're going to be a buyer. So you add the range of that and then add it to the bar's high. These are the range extension exit levels. Now, if you're going short, measure the range of the setup bar where everything comes into play that you're going to go short, and then subtract the amount of points from the bar's low. These are the range extension exit levels. Now, I know a lot of people will say, well, Steve, what if I trade currency pairs? Okay, just measure the amount of pips. It makes no difference. Just whatever the unit of measurement is, just either add it if you're long or subtract it if you're short from that setup bar. Well, there you have it. Those are the 3 exit strategies that I firmly believe will change the way you trade. If you've been having difficulty trading, trust me, these will turn your trading around. Remember, a lot of students say, hey, my strategy is okay. I just can't seem to exit firmly. Well, a lot of students on top of that say, Steve, this is great, but you know what? I don't even have that much trading experience. I haven't been trading long enough to actually have a strategy or know what market to trade. Well, because of that, we have a great offer for all of you attending today, and comes with a great discount as well. This is what we call, our Trading Floor Edges course, okay? What this is a 10-video course which includes over 49 years of trading experience. This includes so many more things on top of what I just went into. And since it's a 10-video course, it goes into much more detail than just the 45 or 50 minutes I have today of explaining these 3 exits. I'll talk about many more high probability trading edges that I've accumulated in my 49 years. also talk about 2 techniques to elevate your trading. These techniques you can apply to any market, any time frame. Another great technique that we teach all of our students, whether they're beginners or been trading for 30 years, is how to be in sync with the overall trend. Think about it. You only lose money when you're out of sync with what the market wants to do. If you buy and the market goes lower, you're out of sync with the overall trend. And if you go short and the market goes higher, you are out of sync with the market overall trend. So what we want to do is the first step is to teach you how to be in sync with the overall trend. We'll also teach you 3 steps to a successful trade. We also go more into detail about how to fine tune your entries as well, more top exiting techniques. And here's the best thing I think about the trading floor edges, a superior candlestick trading edge. I would venture to say that the majority of you, if not all of you, are either trading with candlesticks right now or have at some point in the past applied candlesticks to your trading. And that's all well and good, but it's been my experience. In fact, when I first learned candlestick trading a good 45 years ago, I learned it from someone from Japan who actually where the candlesticks originated in their original form. And this was before they were even on trading platforms. And I learned it from looking at someone's scroll. And that's the way it was actually printed every day. And it's been my experience that most traders, though, aren't seeing the type of results they've often wanted with candlesticks. They're not seeing the type of results they were promised. Let me share with you an example here of this trading edge that we'll teach you. Now we're looking at an older chart of workday WDAY. Now the way traditional candlestick patterns work is that you look for a trend and then you look for a candlestick pattern, because a candlestick pattern, the majority of them are what we call reversal trends, or reversal patterns, I should say. So we're looking for either a top or a bottom, a reversal of that trend. Now it's safe to say we have higher highs, higher lows here, that we're in a nice uptrend, right? And then what do we see here, right? At the very top, we see what's called a bearish engulfing pattern. This is probably one of the most common as well as most lethal patterns that traders use, because this is supposed to signal, it's a 2-bar pattern that signals the reversal of trend. So since we have been going higher, this is telling us that we're most likely seeing the end of this trend and it's time for it to go lower. So what most students do using traditional candle patterns is they will sell. They'll say, okay, wow, this is a great signal and I'm going to be going short. Maybe you buy puts, maybe you sell short the stock, or maybe you were long and you just say, well, I'm going to use this to get out, okay? And if you did, you would have been kicking yourself because the next day it went up roughly about 30 or so points. So you're saying, well, once again, why didn't this work for me? I don't understand. Well, we have found a different way, a different approach, a non-traditional way in which to trade candlesticks. And we're going to share with you in the 10-video course how to use this edge, because you would not have sold right here at all. In fact, right there, you would have been buying and potentially been able to capture 35 points in the next 6 days, potentially. So this is what we teach you in the course, this superior candlestick trading edge that can be applied to all markets and all time frames. So you'll get that along with 49 years of trading experience, things that I've used, that I continue to use, and that I've accumulated, and you won't find anywhere else. These are things that I've accumulated from my days on the trading floor. You won't find them in any other class or any other educational presentation. So this is a great way to get acquainted with us. 49 years right there at your fingertips. Now, normally, this 10-video trading floor edges course costs close to $1,000. It's jam-packed with that much information and that many years of consistent product. But here's what we're going to do. We're going to slash that tremendously down from nearly $1,000 all the way down to only $19, okay? $19. That is a tremendous discount. But this is for a limited time only. So please, when I say a limited time only, I really mean a limited time only, most likely for the next less than a week. It's all up to my sister site, Pro Trader Strategies, who is in charge of the discounts and the tech support. So I would really take advantage of this. I don't even think you can go out to lunch by yourself for less than $20. But if you just wanted to spend less than that, $19, you're going to get close to 5 decades of tips and techniques that I continue to use and that my students around the world use as well, okay? But here's what we're going to do. we're going to take it up a notch and give you an extra bonus. Okay, we're not going to just stop there, because if you decide to become a member of that course, we're also going to throw in this extra bonus. Along with your purchase of the Trading Edges course, we will also include a 50% discount on any other product we sell. Any other tool, any indicator, any strategy, you will get a 50% discount on. So not only are you getting that tremendous slash down from nearly $1,000 down to 19, you'll get half off on any other method, any other indicator, any other tool we have. So this is a fantastic way, if you're not already a student of ours, to become acquainted with us for a low, low price. Also, it's a great way to pick up another product as well. Trust me, a year from today, you will have wished you became a member of this course. There's so much information in there, and you can start using it as early as today. So here's how to take advantage of this. Contact my sister site, Pro Trader Strategies. They're in charge of all the discounts and all the sales. I would highly recommend giving them a call at area code 310-598-6677. They have trading consultants manning the phones right now. They'd be more than happy to take your $19 order over the phone or answer any question that you may have as well. Okay. Now that link you see at the very bottom is the link that will take you to the info page, or if you'd like to sign up online, you can do that as well. It's not a live link, but I believe Jeff or Greg is going to post it, I believe, on the site, so you can just go there on the page. You can just go there and click it on. But either way, I would really recommend just giving them a call. They're very flexible. There's no obligation, even though this is such a low-priced offer of only $19. There's no obligation. If you don't want to spend any money right now, you don't have to. But I would venture to say that most of you have spent more than $19 on commissions this past month. So with this $19, you're getting close to 5 decades of information, of tools and tips, and a candlestick edge technique that you can't find anywhere else. Okay, so I'm going to leave this information up here. Jeff or Greg, I don't see access to any questions or anything. So if you wanted to read me any questions, if there are any, if not, we can move on to the next presenter. But this concludes this presentation for right now.
We have some questions.
Okay.
Let's see. Erik says, do you use fib range? Fib also is a range type.
No, I mean, that's also another technique, and I have nothing against it, but these are, we really don't use it that much. I haven't seen a lot of consistency with that. That's just me personally, and I only teach the things that I have seen through my trading or other traders I've known from the trading days on the floor. But if that works for you, we always say to students, listen, if something works for you that we don't teach or we don't promote, that's fine, then continue using it. We personally don't. Like, for example, we are, all of our methods or techniques are based off of market behavior. Okay, we don't look at fundamental news. We don't look at anything along that line. We don't look at support and resistance or overbought, oversold indicators. But if something along those lines work for you, then by all means, go ahead and use it. It's just been our experience that these techniques work really well, and we always tell our students that these are the first things you should be looking at.
Ro Williams says, finally something I can afford. How do I buy it? I give him the link.
Oh, great. Yeah. Or like I said, you can use that link or call 310-598-6677. And if you're interested in a strategy, that's a great short-term discount of half off of any strategy we have. It's just good to call them up. And like I said, don't feel there's no obligation. Don't feel intimidated. They'd be happy to work with you.
Ricky would say, Ricky asks, can these exits work with day trading?
Yeah, as I often state, because my background was on the trading floor, I would get in and out of trades in a matter of minutes, not days or weeks. And I use these. I continue to use these. My market of choice is intraday trading. I trade the E-mini futures, and I use these techniques. As I said, probably use the range extensions more than anything else. But it doesn't mean that, once again, I'm not trying to promote that's a better exit strategy and that's the one you should be using. That's just what makes me feel comfortable. I like that better. A lot of times, if I'm busy teaching a class, I like to use the range extensions because I don't have much time trading, and I'll just get out at the first exit level. Only because of that, I don't have time to be staying in the trade to see if it goes to the 400%. But if I do have time, other times I will use the 300 and the 400%. So it's all what makes you feel comfortable. A lot of our students swear by them. Other students say, no, I like the 5-period simple moving average. That works the best. So there is no right or wrong way. Whatever time frame, whatever market you want, whatever one makes you feel the most comfortable, I would paper trade and experiment with them first.
Neil would like to know how long he gets access to the course.
The course is yours. It's not something that disintegrates after a month or burns up. It's yours for life. So that 10 video course is yours. Now, this is not something that it's interim or is has a time limit to it. For $19, you're getting 49 years of tips and techniques that have taken me that long to accumulate. They're yours for that. But like I said, it's usually sold for close to 1,000 at Pro Trader Strategies. So I would take advantage of this right now.
All right, and a comment from chat. Steve Primo teaches simple but effective common sense strategies. The simpler the strategy is, the easier it is to maintain a high percentage win rate.
Yeah, I would totally agree with that. Thank you for that definition and that praise. I just, if I could just say something, I didn't graduate with a degree in economics or business. I left school and was basically just a walk-on as a summer job on the floor of the trading floor. I had no idea what stocks were or what the stock market was. I had to start at the bottom like everyone else nearly 5 decades ago. And when I was first starting out, I had to have everyone explain to me what a stock was, what a bid ask was, what the market was. I really didn't even know what it was. I had no training at all, no background in that. And the way people explained it to me was so convoluted, was so difficult and so complex. I suffered for months because I had no idea what they were talking about. They talked at such a higher level than what I was trained at. I had no idea, and I had to do a lot of research, and I made myself a promise. I said, if I ever get in a position where I can explain this to people, I'm going to make it so simple that they don't have to go through what I went through, because it's really not that difficult. It's not as difficult. We make it more difficult than it has to be. But trading is really simple. It's the trader who makes it more difficult than it has to be. And it's been my experience, it's that the simple things are more consistent than the real complicated things. So thank you for that compliment. And that's my goal, to make things as simple as possible. And we have students that have been trading for 30 years. We also have students that have been trading for 30 minutes. And they all get the same information and the same course assignments.
Dinesh wants to know if any of the exit strategies are ATR based, average true range based.
Well, I mean, the only thing closest to that would be the range extensions, if you wanted to look at that. But we don't. But we're only looking at the range, the average true range of the setup bar. I mean, that would be the closest thing to that. But no, we don't use an indicator, an average true range indicator, to decide this at all. We just look at the actual range, the true range of the setup bar. That's all that matters.
All right. Dinesh says, good insights, helpful discussions. Thank you very much, Steve. It was good to have you in here. If you'd like to kind of sign up, give them a call, 310-598-6677, or click the link in the chat box. Thank you very much, Steve.
Great. Thank you guys so much. Sorry about the technical issues in the beginning, but I'm glad it went through okay.
I think it was more you than us. I really didn't notice too much of a big deal getting you started. Okay. We've certainly done worse.
Okay, so, thanks everyone.
Thank you, Steve.
Bye-bye.
Bye. Okay, let's do this. Oops. Okay. All right, good things. All right. As we get there, we have a few extra minutes, so we're definitely going to give away a prize. I do want to take a little bit of time to say thank you again to our sponsors, since we do have a couple extra minutes. Stocks and Commodities Magazine, great sponsors, great supporters of the event. Certainly appreciated working with them over the years. And also the Traders Forum. The Traders Forum is a place you can come. You can spend a couple minutes right now, join, become a member. There you can chat with us about your trading ideas, learn about the markets, learn about indicators and candlestick patterns. Come to some of the podcasts where we kind of bring in people like Steve Primo. We just talk about what they're seeing going on in the market and kind of like what they think about things. It's a great community. It's all free. thetradersforum.com. You can go up there right now. I'll wait. Or I won't. Do want to just say that all of the offers that we're offering this week for MetaStock can be found at metastock.com/conf promo. I've talked ad nauseum about, how effective scanning can help you eliminate the noise that exists in trading and find the stocks that have an opportunity. We've talked about testing trading ideas and how you can identify what trading ideas work well. We've talked about the forecaster and the patented forecaster. Scott talked about that today. All in all, it's been a software that's been rated the best software in its price category by the readers of Stocks and Commodities magazine for 32 years in a row. If you pay for a month, we'll give you the second and third month for free. Pricing starts at only $75. So if you sign up today, you can pay $75. You'll be good until May 18th. Metastock.com/conf promo, 800-882-3040, or metastock.com/sales-chat. Greg, should we give away a prize?
I think that's a great idea. Let's do that.
We actually are running a little bit ahead of time, so we might even throw in your favorite joke.
I've got some poetry from college. I can pull that out of the.
Oh boy, is it a haiku?
No, it's not any.
It's not a haiku.
I lived in Japan for 5 years and I still don't know how to do a haiku.
Gemini can help you with that.
Okay.
Let's see. Let me go here. Let's grab to the prize list. Let's see, where are we at on here? John Seville talked today. He talked a little bit about his smart search system. We're going to give one of them away. So normally this is a $997 value. He talked all about the indicator, how it can kind of give you buy and sell signals. Now that you've said that, Greg, you are correct. I say kind of a lot.
Oh, yeah. No, now come on.
No, I appreciate you giving me something I could be self-conscious about, because you're always either getting better or worse. Thank you for that.
You're welcome.
So we're not kind of going to do anything. We're going to give away the smart search system by John Seville.
Give it for a little while and take it back.
Yes. Let's get a number. In order to win, if you're watching this on YouTube, you need to register. What you need to do is there's a hyperlink. There's a pinned comment at the very top of chat. If you click on that, it'll take you to registration form. You put in your name and your email address, and you're registered. You're on this list. We'll be giving away. There's one more prize today, the mega prize, and then we'll be giving away prizes all day tomorrow as well. So make sure you register. Greg, from you, what I need is a number, and anywhere between 1 and 6,489.
I have it, and it skews to the person who registered likely today. It's 6,354, 6354, according to the Google random number generator.
Okay, I'm going to kind of put in that number.
kind of should do that. Wow. So I have it's the time of day where I have employed my standing desk.
Oh, I've done that a couple times today.
It's adding a whole new. I'm realizing it's adding a whole new perspective to my.
Yeah. Or
my studio.
It's like the up the nostril shot we're getting from you.
Yep.
The winner of John's prize actually is from his native town his native country of Australia. Peter H. in Australia. Congratulations, you are the winner. I'll send your information over to the team over at Acorn and ask them to deliver that prize for you. Congratulations. Thank you for the assistance, Greg.
You are welcome. Appreciate it. Sure. I'm kind of glad I was here.
All right. Take care. All right. We'll see you in just a little bit. All right. Again, if you're interested in any of the offers, get in touch with us. You can find us at metastock.com/tradersconference or promo. You can sign up for the extended trial or any of the other add-ons we're talking about today. You can call us at 800-882-3040, and you can get in touch with us by chat at metastock.com/sales-chat. Big thank you for all of the speakers, all of the people that have come in and spent some time with us today. I hope it's been helpful for you. I hope you've learned something. That's really one of the big goals about this is I hope it's educational. I hope it gives you helps you learn a little bit more about what you're doing. Thank you for being here. If you're watching us on YouTube, make sure to like and subscribe. Comment when you feel it's appropriate. All that stuff helps with the algorithm, and we appreciate it. And I'm pretty sure, but not 100% sure, but I'm pretty sure you'll get good karma for it. So our next speaker today is Erik Gebhard. I have his picture right here. And Erik runs a company called TheoTrade. He is a co-founder of AltaVest, a registered intradosage brokerage firm. He's going to talk about his Theta Trader software, which actually has a really cool way of going in and doing a very unique spread strategy. It can be pretty automatic. I'm not going to put a lot of words in his mouth. He's shown it to us a few times before here in the room, and it's pretty cool. So we're going to have him come in and talk to you about it. Erik, let's go ahead and get you started. Let me come back into the GoToWebinar interface. I'm going to make you the presenter, and I guess I have to also make you the organizer. And you should be able to talk, and then you should also be able to share your screen as well.
Okay, let's do that.
Okay. Let's see. Let's see. At the bottom of the screen. Oh, you've got it. I don't need to. This isn't your first rodeo. You've got it.
Once in a while, I get it right.
I can see your screen. I can see everything. I'm going to get out of the way. It's your turn. Go.
Okay. Thank you, Jeff, and thanks again for having me. And it's a lot of fun. I always listen to as many others as I can. And Steve, just before me, mentioned trying to keep things simple, and that's sort of the motivation behind what we're going to talk about today. Something that can be overwhelmingly complicated and complex. And over the years, we've put together something to simplify matters, and we're going to do a demo of that. And you can see the title here, When Big Tech Disappoints, Which Strategy Can You Use? And what we're going to really talk about is diving into using automation and technology, looking at stock indexes and how to maneuver in any direction, also non-direction. How about that? And then we have probably the most unique trade alert technology you've seen. You receive an alert, you respond in one touch. And we're using these professional option style strategies. I should say professional strategies that money managers, hedge funds would be using. And among all that, and on top of all that, you have real people behind it all. So before we jump in, take a look at that risk disclosure. You can get a screenshot of that if you want to read every single word at your leisure, maybe for nighttime reading to put you to sleep. But really, I don't want to make too much light of that, because it is important to realize that when trading, you should be using risk capital. Past performance is never a guarantee of future results. So those are the main things to keep in mind. And we talked about big tech. Well, here's something that kind of influenced the title to this. Just looking at the results of the Mag 7, they're now negative year to date. So I know everyone in the world has obviously been on board the Mag 7 as they've been moving higher for a good period of time. But things have now shifted. The winds have shifted, and there's some headwinds in that space, and of course perhaps on the indexes too, even though we're flirting with all-time highs still. But what we're going to do is look at a demo on some alternate strategies and approaches. A little bit about AltaVest. We're from 1997. We became an introducing brokerage firm. We developed our proprietary options technology along the way, trading millions of contracts, futures, and options along the way, of course. We're registered with the CFTC. We're members of the NFA. We're located in California. A little bit about myself. I am Erik Gebhard. I have a BS in Business Administration from University of Southern California. I'm a co-founder of AltaVest. It's a few pictures there. In Miami a few months ago, we did a big conference there. That was a lot of fun. Was able to give a presentation that was actually very exciting. Great time. And in any case, I have various securities licenses in the past. Currently have my Series 3 for commodity futures and my Series 65 license, which is for investment advisors. And maybe you've seen a little bit of what we do before, maybe in some other events, some of the other presentations we've done, or perhaps you've seen us in some financial publications. Here's something just from a week or two ago. This happens to be Market Watch asking our opinion on think it happened to be interest rates and silver and gold at this particular article. So in any case, glad you're here. But let's look at the top 3 barriers to trading and what we're going to do to overcome those hurdles or barriers. And this is based on all of our experience with multiple thousands of clients over the years. And I think we're all human. We can all kind of relate to the same things. Information overload. You have a lot of conflicting opinions and targets and clickbait and a lot of noise. You get this information overload when you're trying to make decisions. And part of the problem is you have too many sources of information, or maybe the idea is things are too complex. And so how do you know what's truly important? You can end up with analysis paralysis with that overwhelming amounts of data and competing options. You lose focus on key factors. You can end up with mental fatigue. That's, I guess I can relate to that. I bet everybody listening can too. As well. So you want to avoid this. Like this guy here, his head's about to explode with too much info. So let's see what we can do to fine tune and really boil things down to what's really necessary. How about the other hurdle would be time? It takes sometimes a certain amount of time and discipline to be able to sit in front of a screen. And if you're doing this successfully, don't change a thing. But the reality is not many of us have the time and the ability to have a setup like this. And really, we have other things in our life to do, right? We've got family to attend to and responsibilities and jobs and so forth. So the practical reality is this type of situation really isn't available to most of us. But again, if you're making it work for yourself, keep doing it. Here's just a little comment I pulled off the internet. Day traders spending up to 10 hours a day when the market's open, 4 to 5 hours actively trading. So again, if you're making money doing that, you better keep doing it. But it's really not practical for most of us. I think you could probably agree with that. But the third barrier would be emotions. Well, as humans, we have a lot of fear and greed when it comes to trying to make money. We end up on that emotional roller coaster. You're making money, you feel like a genius. You start losing money, you have a big drawdown, you start to panic, wave a white flag, surrender, and then maybe things start looking better again. You get optimistic, and that whole cycle repeats itself. So we want to control our emotions. We're going to use some technology to help us do that. We're going to trade automated professional option strategies. I think that's a big solution to those 3 hurdles there. So that's what we're going to jump into, but just 1 minute brief review of some concepts on options. Most of you, I'm sure, know this, but keep in mind when you buy an option, you pay the premium to the seller. Okay, so conversely, if you're selling an option, you collect that premium. So it doesn't matter if it's for a put or a call. So, long option strategies, you're always paying a premium. That's called a debit. So you might want to, if in a bull market, you want to maybe buy some call options out of the money, or maybe in the money a little bit. Simple long option strategy. Or in a bear market, maybe you buy some out of the money puts, or perhaps they're in the money or something like that. And that also is a long option strategy where you pay premium. But you can also flip things around and you can be the seller of those options and actually collect the premium from the buyer. And you can do that in any market environment. There are non-directional strategies where the markets are chopping in a narrow range. And of course, in this example here, maybe the market's moving higher and you could sell out of the money puts or even in the money puts and collect the premium. Or maybe you're selling some out of the money calls here in a bear market and also collecting the premium. But here's an example of a non-directional approach. You got a beautiful MetaStock chart here, but you can see this here is the E-mini S&P 500. You can see the range it's been into for about 3 months now. And, what would you do, or what are you doing right now, actually, because this chart is current. So this being the case, we're going to look at some non-directional strategies. And you also notice here the indicator on the bottom here, the RSI, relative strength. And, obviously, MetaStock is a very powerful tool, but sometimes just looking at 1 or 2 things can simplify matters. And you'll see how It's really not overbought or oversold. It's really in the middle of its range, kind of suggesting, just like prices are here, that at the moment, at least, there's very little volatility to worry about, and prices are kind of sideways. So before we jump into the demo, let's look at some Greek letters from the Greek alphabet. Delta, helping us determine probabilities. And the definition here is, how much does the option value change with the change in the underlying asset? But as an option trader, we look at that as the approximate probability of an option expiring in the money. So if a delta is 0.25, that means there's a 25% chance it expires in the money, but also a 75% chance it would expire worthless or out of the money. And remember, delta is a number that's always moving, so it doesn't just sit there and it's not going to remain static. It's changing with price and time. It is also not the probability of a winning trade. So if you buy a option, in this case with a delta of 0.25, that doesn't mean you've got a 25% chance of actually making money on the trade. So keep that in mind. Now, the other letter here is theta. So remember, options always expire. They all have an expiration date. And so they really move as a function of time and price. So you refer to theta as a negative number. It equals 1 day of time decay. So this is basically what it looks like on a graph. You can see as you approach time 0, you lose time, and the value, the percent of that premium just drops and drops and drops, especially in the last 30 days or so of that option's lifespan. And here's a nice little article I found recently on selling options. Here's a few key points I want to pull out. Top 10 reasons why selling options is better than buying options. Well, we like to somewhat agree, not all the time, but certainly there's an argument to be made for that. Managing risk like a professional. The professional approach distinguishes option sellers from novice speculators. And it says the strategy often preferred by long-term investors who value consistency over high-risk speculation. So I agree with that. And also I asked AI, I asked, what about professionals? Why do they sell options instead of buying them? They talk about the time decay advantage, talk about how the seller receives premium up front. AI tells us that there's ways to profit in sideways markets using option selling. And it's a way as a preferred strategy for many professionals. So I think that's a pretty good summary actually from AI. And remember, the Wall Street pros are trading option spreads to collect premium. So we're not talking about selling naked options. And they're using theta decay to their advantage. So they're selling time and they're collecting premium from buyers to offset their costs. So they're trading spread. So this is what I'm talking about. Here's an example where you sell a directional credit spread to collect premium. In this case, you're selling an out of the money call spread. That's a bearish scenario. So the red line is the call you sell. The blue line is the one you buy as protection or as a hedge against the market moving against you. And then you can see the market starts trading and then it gets to this level here. And in this case, well, we're going to show you in the demo here, but you get a signal to close out the trade. So you sell it and collect the premium, and as time decay, theta decay works, you close it out by buying it back later for a lower price. And this is called the risk thermal indicator, and it's color coded. And you can automate this as well so that when you get a signal that says take profits or take a loss, whichever comes first, that can be automatically done for you in terms of placing that order. You don't have to monitor the screen to make that happen. Now here's a non-directional strategy, something called an iron condor. Simply a combination of selling an out-of-the-money call spread and out-of-the-money put spread simultaneously. But you see this wide margin of error. So essentially speaking, you want the market to stay between those two red lines. And you can see in this example, market kind of chopped around, it goes up, it goes down. And meanwhile, theta decay is working its magic. And so you've sold the spread here when you entered it, and then as time goes by, theta decay works, and then you buy back the spread for a lower price than what you sold it for. You can see the expiration date over here to the right. So you're getting this trade closed out well before maturity and the expiration date with another profit-taking signal here on that blue RTI indicator. Here's another strategy for non-directional environments, and it's called a dragonfly. So we gave it that name years ago. It's a variation of the iron condor strategy. And let's take a look here. So you can see the red line is the call, the red line below here is the put. And again, you've got that wide margin of error where you're looking for the market to trade. Again, you've got the expiration date here. And I'll show you the details, but you're doing 3 calls and 3 puts here. So a total of 6 different strike prices. And you can see the market chops around, goes down, goes up, but then theta decay has worked. Market's well within these ranges here with the red line on the top and bottom side there. And then you get a profit-taking signal here with 26 days till expiration before that trade expires. So again, that's another non-directional strategy, kind of our proprietary approach. And meanwhile, rookies mostly do this. This is a great little interview here from a few years ago, but I still like to refer to it, why this popular strategy is so risky. And they're talking about, let's read the quote here. Majority of small-time traders are buying the most basic call and put options, which have a much lower probability of profit versus advanced strategy like option spreads. And they talked to John Foley, CEO of Options AI, and says, everybody in the business knows that if you're only buying out of the money calls, you're likely to lose money over time. Okay, so we want to avoid being this rookie and these popular trading strategies. Most of the time, the professionals tell us they're not going to work, and that's been our experience too. So what do we do about that? We're going to trade option spreads the way professionals do. We sell options to collect premium, and we used an algorithm and technology to help manage this approach. We're going to look at Theta Trader. These are pre-built option strategies. Our proprietary algorithm will create these theta trades every day. One-touch responsive trade alerts. Any market condition and automation with risk and profit tracking. You saw that blue-colored RTI, risk thermal indicator. And we're going to jump into a quick demo. Let me go ahead and see if I can do this correctly. Okay, I think I succeeded. And if I didn't, someone will let me know. Okay, so this is the dashboard for Theta Trader. And this is a demo account that I use for presentations and so forth. And what I'll go ahead and do, let me just close this real quickly. So you'll see here, these are active trade alerts. This is from today. And these are the current theta trades for the day. And you'll notice there are bullish strategies, all pre-populated, bearish, and neutral or non-directional. And we're primarily looking at 3 markets here, the E-mini, S&P 500, Nasdaq 100, and Russell 2000. And the reason we're focused on those 3 markets is, quite frankly, that's where there's an enormous amount of liquidity and volume. And that's really the big reason why. And also there's less volatility compared to individual stocks. So it's, you know, if you're selling options on a stock that might move 20% in a day, that's probably, you're probably going to run out of luck rather than selling an index and, you know, that might move, a big move is 2% in a day. So you'll notice here also below here are open short or sold positions. And you'll notice the colors here, the RTI are green. You have open bought positions down here as well. But green means good. Do nothing, just let the trade mature. And we'll show you some of the different colors in a second. But these are just open positions, anywhere from 10 to 59 days till expiration remaining. And these are open bought positions. And on the right-hand side, you'll see your account information here. It's all integrated with your AltaVest trading account. And any of the current price quotes here as well. So we're going to jump here and look at an iron condor on the Nasdaq. So the first thing I like to do, and you notice it's pre-selected, the days till expiration, In this case here, the strike prices, everything is pre-selected for us. This is what it looks like on a graph. So here's the market right now. Here's the expiration date. You're selling this call spread and put spread simultaneously. You're not legging in. And you'll notice it's got 42 days till expiration. You'll see your settlement value, the premium, the put risk, call risk, commission, all of the details here, cash required. And you can hover your mouse over any of these acronyms and get all the data for that as well. But this is your potential profit, your maximum profit potential here. And this is the cash required for this particular trade on the Nasdaq. And it always defaults to a quantity of 1. So maybe you want to do, well, we'll do 6 of these just to be different. It always defaults to selling because you're selling the spread. You're trying to collect money. And the point value here is already predetermined for us. That's the price that you're trying to sell it at. But I want to point out something here. You're selling this 21,800 put. The delta is 9.6, so that's over a 90% probability this put that you're selling to someone else would eventually expire out of the money. And look at the call, the delta here. You've got the 27,100 call that you're selling to someone else. The delta is 6.77. So you've got over 93% probability that this option that you're selling to someone else is going to expire out of the money. So people might pick up on the idea that, well, I'm putting up 10,500 as my cash required to maintain the trade. It's not a cost. It's just really a deposit to maintain the trade. And my maximum potential is just over 1,400. That seems sort of skewed in an asymmetrical manner that's not favorable to you. But keep in mind, you've got this, according to the delta, a very high degree of probability that these options you sell to someone else are going to expire out of the money, allowing you to keep perhaps most of the premium. Okay, so we'll go ahead and for the sake of this demo, we'll just click place and the order is magically placed. So I want to go back and I want to show you a dragonfly trade. And then we'll show you how to monitor this and manage all the risk. And then also here, you've got these 3 trade alerts. And I'm going to show you that towards the end here. And then also we have another great tool. It's up here called a trade simulator. And it's taking a little while to refresh. So what I can do here is, let me just show you the trade simulator right now. I don't know why it's taking a while, but anyway, okay, so here we go. What you do here is you can go back in time, and I just chose December 10. So here is an end-of-month iron condor for the Nasdaq. And let me squeeze this down just a bit here. So who can tell me which way this market's going to move here? I think, you know, day by day that would be a tough thing to do, impossible thing to do, or even week by week. But you can use these buttons to go backward or forward in time. We can go all the way to the end at once or use the play button. So you can see as the day goes by, day by day, you can see the P&L of the trade, and you can see the green RTI, which means good, do nothing. And you can see the trade is now turning nice and profitable, has 36 days of time remaining. Just gonna keep watching. So there you go. So you get a profit taking signal here with 25 days till expiration. So this is kind of a typical iron condor that, you know, works out well. Maybe a little bit more than halfway through the lifespan of that trade, you get a profit taking signal, and then you can close it out, and you can automatically have this order placed for you. So you can see the expiration date here. So let's compare that to a dragonfly. Then we'll go back and look at another dragonfly example. So we'll go ahead and use the play button. So just to point out, this is the same exact market movement. It's just instead of placing a condor, you placed a dragonfly trade. And again, you get your profit taking signal on January 5 with 26 days till expiration. And you'll notice one thing, you had a profit taking signal here on January 6th. So sometimes the dragonfly will actually mature more quickly than a condor, allowing you to close out the trade earlier and move on and put your money and allocate your capital elsewhere. So that's a big benefit of a dragonfly. And I'm going to show you the structure of the dragonfly and why that works. But you can see here, generally speaking, you've got the 3 calls, the 3 puts. You're short these calls here, but you actually buy an additional call here as insurance, and you buy an additional put down here as insurance. So that insurance costs you a little extra money to buy, but it does sometimes benefit you versus an iron condor where you can close out a trade earlier, or an iron condor may have a loss when a dragonfly does not. All right, so let me see if we can refresh this again, and then I can show you. Of course, right during the webinar, somehow we might have like a data update going on behind the scenes that I forgot to cancel, but that's okay. If not, I can still run some simulations. I'll just give it another second here. Okay, let's see. I showed you. Oh, there we go. Okay, so we'll look at a dragonfly, and let me maximize this, make it easier for you to see. So this has 42 days till expiration. It's the March end of month expiration. You can see it's a dragonfly, has profit potential here listed, your targeted annualized return. And that number is there to really compare one trade to another. Some days you might have 3 or 4 trades listed, some days 1. It just depends on what the algorithm decides. But here is what it looks like. This might help you here. You sell 4 calls, you buy 3 further out of the money, and then again, I mentioned you buy that 1 closer to the money, and you have the same structure here where you sell 4, you buy 3 further out, and you buy 1 closer to the money. So you're always long an equal number versus the ones you're short. So none of these are uncovered or naked, but the one you buy here and the one you buy here, in the case if the market were to fall, this one that you buy is closer to the money compared to the 4 you've sold, and so the delta is higher, and it will act as an additional insurance buffer. Of course, the trade can still be a loser, but it can minimize the losses versus not having that option at all. And you'll see here the same kind of data, and you're looking here, your cash required, of course, is higher because you're doing in increments of 4. And if you wanted to do 2 of these, you can see it, the cash required doubles. So you'd be actually doing 8 puts and 8 calls. Or if you did 3 of them, it'd be 12 and so forth. So it's always that same ratio. So you're putting up 71.44 to make a maximum of 856. The reality is you're going to get out of this for a profit or a loss before expiration. So at least that's what we always recommend. And keep in mind too, all these numbers are net of all trading costs too. So that's a question we get sometimes, but Theta Trader automatically calculates that for you. So we'll go ahead and do 2 of these. We'll leave the point value there. If you wanted to move it up, if you wanted to try to get more or less, you could, but we'll just leave it there. But hopefully that makes sense. I think the visual really helps a lot to understand how the dragonfly works. Then we'll look at just selling 2 of these here. And there it is. But we'll go ahead and jump into, you saw the Iron Condor simulator here. Now let's look at the dragonfly simulator again with another example, an Iron Condor and a dragonfly. Let me shrink this down again so you can see more. So here's another one. You can see you get a profit taking signal here with 9 days till expiration, but you notice how the market drops and then it ramps back up, and like a typical market, right? Up and down, up and down. But that's the beauty of these condors. You've got this wide margin of error there. But remember here, with 9 days remaining, you get a profit taking signal. And now let's look at a dragonfly. Okay, so look at this. You get a profit-taking signal with 15 days remaining. So 6 days, almost a week earlier you could have closed out this dragonfly spread and had an order placed for you to take profits on that versus the condor. So that's what I mean. Sometimes you can get an earlier exit opportunity with a dragonfly versus a condor. And then here's a, I'm not even sure if I remember what happens here. Let's find out. Another condor, May into month. Okay, so you have different colors now. You're thinking, what is going on? Well, it's pretty clear. You get this sharp rally here, and it's really getting right on top of your short calls. So Theta Trader said, there's too much risk. You're going to have to take a loss and get out. So when you have a red RTI, just like a blue, you can have it automatically place an order for you to cover the loss on that trade. And you'll notice it went from yellow to orange to red. So just an increase in threat, increase in risk, elevated risk. You need to get out. Theta Trader says, and the algorithm says, too much risk. You don't want to be a bag holder. Okay, now, this is the May end of month dragonfly. So remember, we just looked at the May end of month condor. So instead of a condor, imagine you had a dragonfly placed that day. You see the market moving up again, just like it did. You get the green to the yellow to the orange RTI. So almost triggering an exit here, but still hanging on. And again, you own this call option right here. So the delta on that increases more rapidly versus the others that are further out of the money that you sold. So this is acting as additional protection or a hedge for you. And now you see the market pulling back, and the trade that was negative by quite a bit is now actually turning positive with its P&L, and you have a green RTI. Then it goes back to yellow, and then it goes to blue. So this is a really emotional, wild ride here, isn't it? So if you don't have any guidance or have something to follow, you're probably going to end up panicking and closing your position out here at the worst time. You see, you get a blue RTI, and that's for profit taking, and that can be automated. So just want to point that out. And now here's how you do it under your account. You go to your settings, and this is how you automate everything. Under the risk manager, you just check that box, and you can see you can choose the default level, or you can have an orange level or a custom level. And if you go lower than the default level, that's okay. If you want orange, for example, or maybe you want to go down to 25 or something, that's fine too. But just keep in mind, you will have more frequent losing trades, but they will be smaller in magnitude. So that's the trade-off. So I like to just leave it at the default level, and you'll save your settings right there. And the same thing with your profit directive. You just save your settings. And then once you do that, every time it turns blue or red, your orders will be automatically placed for you to close out your positions. So it's just that simple. And I want to point out too, there's other features in the account for Theta Trader as well. There's a daily research called TradeScope, something we do every day with some beautiful, there's a beautiful MetaStock chart. And you'll notice this is on the E-mini S&P 500. And this happens to be on the Russell 2000 right here. Then we give a little bit of, add a little bit of color on what's happening with the economic news of the day and what's up with the landscape ahead and economic data and so forth. But just like a 1 or 2 page thing, people love reading that. And here's a great help file. I mentioned all the color coding. It's all explained here. I'm not going to go into it all right now for sake of time, but all the details for the spreads and everything. And then also, I mentioned TradeScope already, but I mentioned, or I didn't mention at least, we have all these videos here for navigation, navigating through Theta Trader, I should say, but you saw how simple it is, and placing trade, but it's really intuitive and easy to follow. And there's an educational course here, kind of a master class in futures and options. I actually put this together, and it's very short and succinct and to the point. So these are all videos. It's all embedded in part of Theta Trader, and people enjoy using that to kind of brush up on things. Now I want to go back. We'll go back to the dashboard. I want to point out, you remember the trade alerts that were, well, let me do one other thing. under here, you can go to closed positions. So this is how you look at your closed positions, and you can filter for go back in time. You can filter for any market, whatever. But you can notice there's 20 on the page, and you'll notice 16 winners, 4 losers. Again, this is a demo account, so it might not be as good next time or in a month from now, or it might even be better. I don't know. But the key point, I think, is there are 15 short positions or premium collection trades on this page, 14 winners and 1 loser. And that's kind of that higher probability setup we talked about. Meanwhile, there are 5 bought positions or debit spreads, 2 winners and 3 losers. So that's kind of the ratio. Not that you should expect, but you shouldn't be surprised when you have more winning trades than losing trades in typical market environments. Of course, situations change all the time, but here's one. You've got 20 trades here, 15 out of 15 of the short positions are winners. And again, this is a demo account. Past performance is never a guarantee of future results, but just giving you an idea of how these higher probability outcomes are possible when you're selling premium that's deep out of the money, and when you have the tools to help you do it and manage that risk. Okay, so remember here you have these trade alerts. So I've opened these up here already. So here is, let me just start with this one here. So this is a Russell 2000 Dragonfly. So this should be familiar to you. And you can see it's pre-sized for you and your account. So Theta Trader does the calculation for you. It looks into your account and says, I don't see any other similar trades or any strike prices that are of the same nature or any similar expirations. So it's not going to just pile on the trade alerts and give you a level of concentration risk that is not manageable. And so you have the quantity pre-selected that's appropriate for you and whatever the account balance you might have in your account. So in this case, it's 12. And this is your entry price of 8. Trying to collect $3,700. This is the margin requirement. There's 40 days, 2 days till expiration. And maybe you want to just take the trade the way it is. You touch accept, or maybe you, for some reason, you think, well, I'll just do 9 of these, and so you can still just touch accept. So it's just that simple, and that's how that works. And before I get ahead, I wanted to point out too, we've looked at neutral strategies for the most part today, but keep in mind, you can do bullish and bearish strategies too. So there's something called a bear hedge. It's really just a combination trade. And in fact, I think there's one here. Yeah, right here. This is a bear hedge. And what that means is if you're bearish, what you can do is you can sell an out of the money call spread, collect that money, and then use it to buy an out of the money put spread. And you can usually do this at a credit, so it doesn't even cost you money. It's sort of like a free trade. Doesn't mean there's no risk, but the market goes in your favor. It didn't even cost you anything. So, and again, this is pre-sized of 16 here. You can see the premium being collected, cash required for the trade, 52 days till expiration. So essentially, if the market drops quickly enough, then this trade would work out very, very well, and it didn't really cost you anything in terms of your net premium being collected. And we'll go ahead and accept that. And here's another one. Here's a Dragonfly. Again, pre-selected, quantity of 8. This happens to be on the June E-mini S&P 500. You see the market kind of chopping around. Here's the expiration date. These are the calls and that are being sold and bought, and the puts that are being sold and bought. And we'll go ahead and accept that. So that's how easy it is, folks. And once you accept an alert, it disappears from your from your dashboard. So just want to point that out as well. All right, very good. So let me see about jumping over, and I want to show you one other thing about the alert. I think you're really going to enjoy taking a look at this. Let me switch gears with another screen here. Okay, so this is probably the most highly talked about feature within ThetaTrader, at least the feedback we get from clients. So you saw how easy it is to use the dashboard in ThetaTrader. But on the other hand, it can be even easier. And let me show you what I'm talking about, because the alerts come to your phone. And all you have to do is open the alert. And if you like what you see, you touch accept and the order is placed for you, or you can touch reject. So these alerts are live, meaning they're dynamic and they're integrated with your AltaVest trading account. So all you have to do is touch accept. Go ahead and play this here. This is what happens. You'll get a text message with a link, and it will open up the alert for you. You can see here. So you'll get a screen image of that alert, sort of basically the same thing we just saw on the dashboard. You have all of the details of the trade. You get a nice image and a picture. I think a picture is worth a million words sometimes when it comes to trading. Right, and then you'll see the quantity is pre-selected for your account. And again, the entry price and premium being collected, the cash required for the trade. You can change that quantity and lower it if you'd like. And if you like what you see, you just go ahead and you touch accept. And then the magic of technology handles the order for you. So it's just that simple. You know, I want to point out too, every E-mini S&P 500 iron condor trade, the margin, let's call it the margin or the capital required, is about $1,000. And any dragonfly would be closer to $5,000 on the E-mini S&P 500. So keep that in mind. And let me show you how to get started with ThetaTrader. So you've seen the software, what it can do. You've seen the trade alerts. You've seen the trade simulator. All of those interesting risk and profit management controls with the risk thermal indicator, that color-coded setup that we have within ThetaTrader. So you have the Theta trades, the RTI, and the trade simulator. That's valued at over $3,500. And I think the best feature of all really are these one-touch alerts that come right to your phone. So talk about convenience, saving time, and keeping you away from doing too much screen watching. This value here, over $4,400 on those trade alerts and that trade alert technology. So again, just to summarize, everything you just saw with ThetaTrader, including the alerts, valued over $8,000. But here's, I think, probably the key component is people. You have real people to talk to. Private coaching. You can work with us. We have our licenses. We are experienced with decades of experience here behind us. And we'll do one-on-one screen sharing sessions with you. So I think that's invaluable. Once you're a ThetaTrader member, we'll be able to kind of be your co-pilot, so to speak. So what's the value for that? Well, I just looked up, and I think this is off of, oh, it was a Forbes article. I couldn't remember if it was AI or not. But anyway, they talk about comprehensive packages with experienced trading mentors ranging from $5,000 to $15,000 for a 6 to 12 month training period. Well, what we're telling you is we provide you everything you need with your ThetaTrader membership, the coaching, the guidance, the tools, the technology, that's all part of it. So easily a $10,000 value to have someone beside you, figuratively, discussing your trades and reviewing your trade history, having a relationship with a licensed trader, sort of your co-pilot, as we talked about. So again, everything added up over $18,000 value with our ThetaTrader membership, the technology, the coaching, the one-on-one help. And then we have those extra bonuses that we sort of looked at briefly just a few minutes ago, such as our proprietary trade scope research. That's a real quick glance to keep you sort of in the loop on what's happening. Then I mentioned our futures and options masterclass. There are, I think, 6 chapters, or is it 7? I can't recall, but we'll find out. But you anywhere from the futures basics all the way to futures options and advanced futures options strategies. So a value of almost $2,000 as well. And that's all part of ThetaTrader, including the research and the masterclass education. Then we have those online tutorials in ThetaTrader. That's just part of ThetaTrader. So that's kind of your bonus there. So just to summarize, and I'll tell you how to become a member, you get ThetaTrader software, the trade alerts, the private coaching, the research and the education package, valued at over $21,000 for the professional trading package. But of course, we're going to do much better than that for you. And when we did these events in person before the pandemic, we would do seminars, and $4,000 would be the cost on this package. But we can do much better than this. In fact, this is our retail rate. So we're going to come way down from that. So this is your MetaStock discount. It's a one-time payment, one-time, lifetime membership, one time. It's only $597. So there is the link, cf.altivest.com/meta for MetaStock, not for the other Meta. And use the QR code here. Take a picture of the page and keep that with you. That's my direct number. If you call now, of course, it'll go somewhere else, but call anyway if you want to, and we'll get back to you. It's my direct email. But here's something too that people like. You can get a free membership if you have $100,000 or more with us. After becoming a member in the first month, we'll give you a 100% rebate. Or a $50,000 account, you get a 50% rebate. And as always, there's a 30-day money-back guarantee. So you don't have any risk on becoming a member and taking a look at us, a deeper look. But in terms of talking to us, signing up, maybe getting the familiar a little bit, more comfortable with the dashboard, and getting some alerts under your belt, using things without real money yet. So you can do that too, that's fine, but I think you're gonna love it. But anyway, you don't have any risk on your membership fee within the first 30 days. So use that to your advantage. And speaking of advantages, I'll briefly touch on the advantages on the E-mini options. I've got some time here, I guess, without panicking. Again, this is just a recent search I did. Some of the advantages on the E-minis: they're affordable, so they take less capital. They offer flexibility, and they are highly liquid. I think that's the key. And they are accessible, allowing traders to expand their trading strategies. And that's a key point, and I'll get to that in just a second. But the six-legged spread isn't really something you can do anywhere else other than in these E-minis and with ThetaTrader. So basically, the E-mini options offer liquidity and granularity across a wide array of maturities and strike prices. So this is what it kind of looks like. You see the market trading along, and you've got some short calls and puts here. I'm sorry, you start off with calls and puts here, and then time goes by, and there's another pair of calls and puts that are available. The algo can find them because they're liquid. These are deep out of the money calls and puts, and these are liquid. And again, you keep going, more puts, more calls. You can just see how, as you go by, time passes, the algorithm is always going to find the strike prices it needs and the options it needs to build those trades. So you can do a dragonfly at one price at one order. So you see how in the demo we just did, you saw these 6 different legs, and you don't have to break up the legs into two different trades and try to leg in and leg out. It's just one price, one order, and you really can't do that with the securities market. I've looked, I've tried, maybe someone will correct me at some point, but I've not seen it. And a big benefit is we're looking at just 3 markets. We're not tracking, I think there's more than 6,000 securities, ETFs, and whatnot. And the E-mini market is huge. The E-mini S&P 500 trades 2.5 times more in average daily dollar volume versus all global ETFs. That's according to the CME group. And the options here, I wish I had a recent, a 2025 data point. I've looked, I don't see it yet, but anyway, 1.5 million contracts, one of the most liquid markets in the world. CME group says it offers superior execution compared to SPX, a cost savings of $4 to $15 per contract. So you get those tight bid offer spreads. That's a big advantage. If you're trading multiple legs on a spread, you need to make sure that you're getting the best execution possible. So you need the most liquid markets possible. And That's what the E-mini delivers. And you get that wide margin of error with these spreads we talked about. Look at this here. This is just a trade yesterday or earlier today, I can't remember, but you got the 7,500 calls that the algorithm says to sell and the 5,925 puts as well. So you got almost 1,575 puts, S&P points. I'm sorry, I'm kind of tongue-tied. 1,575 points between these S&P 500 calls and puts. That's a really wide margin of error there. So that's why these can end up being higher probability outcomes. And then we talked about briefly only covered spread. So these are not unlimited with risk. There's no margin calls. You're not going to have that problem. The market won't be jerking you around because you've already put up the necessary margin to be able to place that trade. There's no pattern day trading restrictions. So if you're familiar with that in securities, you don't have that with futures options markets. If you're not familiar, just a little brief rundown on how that works. If you execute 4 or more day trades within 5 business days, then SEC says you're a pattern day trader. Then you have additional regulatory scrutiny, and you have to have at least 25,000 in your margin account. And if it drops below that, you're prohibited from making further day trades and so on and so forth. So that's all fine, but it's not the end of the world, but you don't have that hassle with futures. And also there's tax efficiency. E-mini options, in fact, all futures and futures options are tax efficient. And that's because the IRS treats these differently. It's called the 1256 contract, the way they treat the profits, 60% of the gains taxed at the capital gains rate versus 40% at your personal rate. And then there's no more itemizing. Each trade, you get a 1099 with your profit for the year. You get one number, and that's all you need. That's all you need. You don't have to be this guy here going through all your wash sales and itemizing each trade and whatnot with securities. So not to say you can't trade securities. I think we all do, but there's definitely some of the big advantages to simplify your life when you're trading futures and futures options. But always consult your tax attorney. And self-directed IRAs, people ask us about that all the time. So we work with Equity Trust. This is just from a few months ago. We did a presentation with them. They had 71 billion in assets under custody, and they've worked out a deal with us. So you have a sign up with us, you become a Theta Trader member, and you want to work with Equity Trust using your IRA, they will waive their setup fee. So keep that in mind. That's a nice big benefit. And so we're happy to have them on board with us and offering that to us. And remember too, we are full service, so we can trade any commodity futures and options market. Some of the, again, pictures are worth many words. So anything, that's a commodity market, futures market, whether it's traditional commodity or something like a currency or an index, that's what we do. Obviously gold, silver, copper, in the headlines of late. So I think the run in gold and silver and copper, by the way, is not over, but we can talk about that too. So we think it's important to diversify your portfolio with alternatives. So we looked at how things can be automated and non-correlated. So what that means is if you're doing some option strategies with us, they can move independently of what the direction of the stock market is actually headed or where it's headed. So you can also use these strategies to speculate or hedge your stock portfolio. So we think it makes sense to have, a slice of your portfolio in the alternative space, which is what we fall into. So to summarize the benefits of Theta Trader, these are flexible strategies for any market condition, professional premium strategies that are simplified. And then, of course, it's convenient to use with the automation and risk and profit controls. You can diversify your portfolio or hedge. We just talked about that. You get the tax efficiency, and as one-touch responsive trade alerts, and that technology really is a game changer for most people with us. There's no pattern day trading restrictions, and then no margin calls when you're trading just covered spreads. So big benefits there. So just to summarize, you have these amazing algo-driven option trades available every day. You get those one-touch responsive trade alerts. And again, these are customized to you, your account. They're pre-sized and they're directed to you based on what's in your account in terms of other positions and available capital. So you can always lower the quantity, but you cannot increase your risk. You get the education there. That's all part of the Theta Trader package. You get access to that time machine, we call it, the trade simulator. You can pick any date going backwards in time and have fun with that. There's how you just choose the date. So I know it's a lot of information, and I don't know if I can see questions or not. Maybe I can or can't under my status here. But
you should be able to, but I can also read them to you.
Let's see here. I looked earlier, but
there's just a couple of them. I can
oh, there you
them.
go. I
Oh,
do
you got
see.
it. Okay.
I do.
Yeah.
Someone mentioned the rules have changed recently for pattern day trading. Could be. Yeah. I think I found that maybe middle of last year in terms of the rules on that. But anyway, kind of a minor point. But yeah, I'll check into that. Thanks for mentioning that, Erik. And someone's asking about their brokerage firm. We are the brokerage firm, AltaVest. So this is our technology that we spent literally millions of dollars developing. So you have a Theta Trader membership and you have a trading account with AltaVest. So I hope that answers the question. Someone says, thank you, have a great evening. Anyway, okay, so
yeah, those were the two that we had.
Okay.
Yeah, the rest of them, like if you keep scrolling, it's going to go all day for you.
Oh, I see. I'll start answering everybody else's questions. I see.
Hey, we'll make sure we didn't miss any.
Yeah, that's funny.
Very cool.
I'm just trying to think if there's anything else commonly asked, if I have another minute or two. If you're overseas, give us a call or email. It's depending where you are. We may or may not be able to have an account with you. It's not because we don't love you. It's just because regulations are such that, there's protectionism in the world and certain countries want to keep money in their own country. So it has nothing to do with us. But give us an email. In fact, let's see here. Well, you can reach me at Erik at AltaVest, ERIK at altavest.com. But yeah, other than that, we'd love to have you sign up and give us a try. Again, you got that 30-day guarantee on your membership fee, and it's a lifetime fee. People say, well, is it every year or what's the monthly subscription? And there isn't any. So you want to get the deal while you can. It does go back up to the retail price, I think Friday night. So you have time to give me a call or email me, and we'll get back to you on that if you have any comments or questions. But I think it's pretty self-explanatory unless, I don't know, did you have any other comments or thoughts on that, Jeff?
Yeah, you have, Stan wants to know if you can accept Canadian customers.
The answer, Stan, is yes and no. Again, it depends where you are in Canada, believe it or not. Give us a ring and give me an email, whatever it might be, and we'll find out exactly how that works for you. And then another question people have is, what size of account do I need? And it's really, I guess, kind of a loaded question because it's really a matter of how much risk capital do you have. But to really get to the bottom line is, I think, again, if you're going to do dragonflies on the E-mini S&P, each dragonfly is about $5,000. So you need to take that into account. So I'd say, 20,000, 10,000 at a minimum. As a minimum, I don't want to, tell people what specific amount they should trade with. That's up to them, but that's kind of, I think, a bare minimum.
All right, and then Stephen wanted to know what the cost per option is.
Yeah, it's on the Theta Trader dashboard. The cost per option is 5.25, and that's all in, and that's round turn. So that's inclusive of all fees and round turn. So in fact, I just looked at Schwab, and I think they had it listed at 2.25. But if you read the fine print, that is half turn. So you pay again when you close the trade, and they don't list all the clearing and exchange fees. And when you dig deeper, it's actually more than what we charge. So our rate is definitely competitive in that regard because we're all in. Everything is inclusive in that rate.
Very cool. We've got the messages or the email address as well as the address in the chat.
Okay.
Erik, thank you so much for spending some time with us today. Great job. I appreciate your being in here.
Yeah, I'm glad to be invited, and have a great rest of the day. I always enjoy. I think I'll stick around and listen to whomever may be next.
Okay.
And thanks again, Jeff.
I won't kick you out then, but if you do leave, don't end the presentation for everybody.
Gosh, now you got me scared. If I check the red leave, does that ruin it for everyone or just me?
If you hit the red leave and then the green just leave and not the red button after that, you're fine.
Okay.
So,
all right.
We haven't shut down this session yet, but that doesn't mean there isn't a first. Actually, we haven't shut down the session.
We've shut down the session before a couple times.
I meant today.
Oh, yeah.
Or yesterday or the day before that. So in any case, a big thank you to Erik. As we kind of move on to our final speaker, I want to say thank you to both of our sponsors, Stocks and Commodities Magazine and the TradersForum.com. We'll talk a little bit more about them at the very, very end, but if you haven't joined the TradersForum.com, you might want to. It's free. You can chat with other traders. You can learn about technical analysis. It's a community of traders helping other traders. And Greg, let's do the MetaStock Mega Prize.
Oh, that's my favorite prize to do.
Yeah, it's kind of fun for me too. Let me go ahead and okay.
There's no better.
So we are going to, and I'm going to just for the sake of time, I'm going to just kind of explain everything, and I won't rely on you to kind of give a little bit of a spill. But we're going to give away 3 months of MetaStock, which is our award-winning software program. It's won the best software in its price category for 32 years in a row by the readers of Stocks and Commodities Magazine. It can help you scan the entire market and eliminate anything that you're not interested in, anything that doesn't have an opportunity. Probably the most useful thing for me that I use it every day. I ran a scan at 140 and decided on a couple of things to buy because of it. You can test trading ideas. You can forecast the market, probable price action based on probabilities. Scott talked a lot about that in his demo today. System testing, very helpful for you to learn about like different techniques. Anyway, it's normally $75 a month. Actually, the version we're going to give you is a full real time, which is $100 a month. And we're going to basically give that to you. We're also going to give you the premium news service that we call MetaStock Zenith. It was created at the expense of over $1 billion. And it is basically, it was built as a competitor to Bloomberg. It's supported by some of the best news in the industry. If you've heard of Reuters, that's where the news is coming from. It has over 3,000 reporters and 300 different news bureaus. If you're a bank and a hedge fund, you probably have a similar news service in your office, except for the version of that we have is a retail-friendly price. We call it MetaStock Zenith. It starts at $165 a month. We're going to give you 3 months of that. But wait, Greg, that's not all.
I'm very patient.
You'll also get 3 months of Learn MetaStock. Learn MetaStock, it was put together by the person that hired me to be at MetaStock. He moved on to run a company called LearnMetaStock.com, where he trains people how to use MetaStock. His training resources are so valuable at LearnMetaStock.com that we use him and his training videos to onboard our very own employees here. So those are the 3 things that we're going to get for you. Greg, do we like it when people chat and ask questions and stuff like that? Is that helpful?
It's extremely helpful, and it makes us think that perhaps somebody cares.
Yeah, it's very, very helpful. Very helpful. Yeah. We're happy. I don't think we missed any questions today. If we did, my apologies.
Yeah, I don't think so.
We got most of them. What I'm going to do, what we'd normally do for the MetaStock Mega Prize is we pick somebody that asked a question. And it doesn't have to be a good question. It could even just be a comment. But I basically just scroll through the comments until Greg tells me to stop. Whoever we stop for, as long as they didn't win already, will be the person that wins the prize. So I am actually at the very top of the questions. I'm going to begin my scrolling process right now, and I'm just going to let you tell me when to stop.
Stop.
Now, you'd be interested, that got us to about 11 a.m.
Mm-hmm.
And the winner is actually Neil Shaw, who's a MetaStock user. Neil,
Great.
I know
Congratulations, Neil.
A number of years. I'm going to go ahead and add 3 months to your account because I know you've got one. And if you want to learn MetaStock, let me know. I'd recommend even the most seasoned users of MetaStock use it because it is a huge toolbox. So,
yeah.
And like any toolbox, the better you understand how to work with it, the better it's going to work for you. So congrats, Neil. I'll drop you a message right now. Or in
also, Kevin, Learn MetaStock Guru, will be speaking Friday, tomorrow. I think, or tomorrow. Yeah.
Tomorrow, yeah. He thought he was speaking today, but he wasn't. He called me earlier, and I was like, I can't log in.
Well, that explains it. All right, I'll let you go.
Thank you, Greg. Appreciate that. If you want to get MetaStock yourself again, so good at helping you identify those trades, test trading ideas. There's a reason it's been rated so highly for so long. There's a reason we've had so many customers. I have MetaStock customers that I was working when I started in Inside Sales 30 years ago, 29 to be more precise. It's a great software program, but you can sign up for it at our extended trial where you buy a month and get 3. Metastock.com/conf promo, 800-882-3040, or metastock.com/sales chat. All right. Let me come over here. Let me just get a little bit more reignite. I'm actually I'm very excited. Not kind of excited. I'm very excited for our next speaker, who is Russell Barbour. Russell is actually here for the very first time, but he's going to talk about a subject that I'm very, very interested in, which is 0-day to expiration options. So Russell is an option trader. He has 12 years of market experience. He trades intraday SPY options and does them with 0-day to expiration. He's going to talk to us about it. So let's go ahead and give him a very warm welcome to the webinar. Welcome. Russell, let's go ahead and get you started. What I need to do, let me go back over here. I need to actually make you an organizer so you can see the questions. And then I need to make you the presenter. How you doing, Russell?
I'm here. Can you hear me okay?
I can hear you. Yeah.
Just looking to share my screen right now.
Okay. I'll let you know we can see it.
Yep.
All right. I can see your screen.
Just start the slideshow.
Yeah, do it. We're ready.
Yeah.
Yeah.
Well, thanks very much, Jeff. Yeah, I've been enjoying the conference so far. So thanks for organizing it. Thanks for inviting me to talk for the very first time. So I'm excited.
Well, you're welcome.
Yeah. Yeah. And so guys, my name is Russell Barbour, and I'm going to talk about how to trade 0 DTE options on the SPY for the next probably 40-45 minutes. It's a little shorter talk, so hopefully we can all get our dinner going on as well a little bit. So you guys have probably seen this risk disclaimer multiple times or something similar throughout the course of this conference, but just wanted to go through it really quick here. Basically, you'll know that the risk of loss can be substantial when you're trading.
Hey, Russell, just before you get going, I don't see a fully expanded PowerPoint. I just see kind of the presenter view.
Oh, you do?
Yeah.
Oh, that's weird. It should be full. It's full on my screen, so I'm not sure.
I think you might. Do you have
it? Not, yeah, I also don't see. I see the non-expanded.
So I exited there. Let's go back to the. Let's try again. So how about now? I read it, so hopefully it's.
Is it popping up on a different screen for you by any chance?
No, I don't think so. I can try sharing. Yeah, that's weird. I've never had that happen before.
Well, that is.
Let me try the in the browser. So I have it in the browser and on PowerPoint separately. So let me just try sharing it on the browser version.
Okay. Yeah, it's very weird. I haven't seen it.
Yeah. So I'll share that as a full screen and see.
Okay. I can see that you're pressing the right button. It's so weird.
There we go. So how's that? Please tell me that's worked.
Oh, I think I know. I think I know how to fix what's going on, because it really isn't changing our view. I'm going to take the presentation back, and then what I'm going to do, we'll share your picture again. And I'm going to make you the presenter again.
Okay.
When it's asked you to share, I want you to share the whole monitor, not just a
Whole screen. All right,
Yeah.
that sounds good. Okay.
And I think when we do that, we'll be able to see exactly what you're expecting us to
Yeah.
see.
All right, so I'll try going full screen now because let's see. How's that?
I feel like I was helpful today. That's perfect.
It worked.
Yep.
All right.
I'm gonna get out of your way. It's all you.
All right, perfect. All right, yeah. So just go through this risk disclaimer really quick here. You can lose money trading. We all know that. So you should be careful when you're trading, so that you basically don't lose more than you can afford. This webinar is supposed to teach you some stuff. Hopefully it does, but it's by no means meant to be advice whether to buy or sell. You're simply receiving information for educational purposes only. And any decisions concerning a trade are solely yours, and you should meet your own personal objectives and risk tolerances. Obviously, you're responsible for all your own trading. And particular importance to this particular presentation is that past performance doesn't always guarantee future results. So I'm going to be showing you some data from previous trades. And I just want to make sure everybody knows and is aware that not necessarily going to be the same going forward. So that's important. So what are we going to cover today? Well, first off, we're going to start with looking at some data from 2 consecutive years of trading 0 DTE SPY options, where we grew account 100+% each year. So for 2 years in a row, just trading 0 DTE SPY options with about an 80% win rate. We're going to talk about how timing, consistency, and position sizing play a huge role in 0 DTE option strategies, how a rule-based approach can reduce mistakes common in 0 DTE trading. And I also want to talk a little bit about the service that I run called SPY ATM Alerts. So we're going to talk about that stuff. So as I just promised, here's the first results from our service SPY ATM results. This is actual data taken in 2024. Along the x-axis, we have number of trades. So that's basically the whole of 2024. There's about 230 trades taken in that time. And you can see up the y-axis there is the amount of capital growth. So it was a $2,000 starting account, and it made $2,000 in 2024. So 124% gain in 2024. Just trading one trade at 10:30 a.m. Eastern time, most days of the week, just one trade. And you can see that this is a fairly linear up curve, right? You can see it goes from left to right. It's going up nicely. There's some drawdowns, like just around the 50 trade mark there. There's a kind of a drawdown period, but overall, it's a pretty nice linear growth over the whole of 2024. And this wasn't a fluke. We also did the same thing in 2025. So this is real data again from 2025. It's 102% growth just doing that one single trade that we're going to talk about later in the presentation at 10:30 a.m. Eastern time with a $2,000 account, and it started at $2,000. Up the x-axis here is the size of the account this time. So it grew from 2,000 to almost 4,300 over the course of 2025. Did a few more trades that year, so we did about 240 trades. So there's a few more trading days in 2025. The system does skip some trades, so there's trades most days, but it does skip sometimes. So obviously there was a few more opportunities in 2025 than in 2024. So just wanted to show that off the bat here to show what's possible if you're just doing one single SPY trade on 0 DTE options every day with the right strategy. So quick introduction about who I am and my trading journey so far. I started trading in Seattle, Washington at the University of Washington doing scientific research. As actually a physics PhD. So I was studying quantum mechanics and quantum computing, which was really fun and exciting. But unfortunately, although it was intellectually rewarding, it wasn't very financially rewarding. And so at the time I had just been married, had a lot of student loan debt. The idea was I was starting trading to try and make some extra money to make ends meet. Living in a little dank apartment in rainy, dreary Seattle, Washington, trading penny stocks at the market open. So getting up at 6:30 in the morning, absolutely exhausted, dark, wet climate of Seattle. And I quickly lost most of the capital I was trading with, trying to trade these penny stocks. They trade them at market open. And so I lost about 20,000 of a small $30,000 account just learning to trade. And I think that story is not too unfamiliar to a lot of people. So over the years, I spent years and years, like a lot of people, chasing strategies, over trading, oversizing positions, being really scared, being very anxious, especially getting up that early in Seattle with the rainy weather kind of freaking me out. And I was trading before I went to work, so I was exhausted by the time I got to work, and I do like 15 hours in a research lab and come back exhausted, wake up to the same thing every morning. And money was really tight. So it took me a long time chasing these strategies, and eventually I found a guy called Phil, and Phil's going to be featured in this presentation a little bit because he's kind of the mastermind behind the SPY ATM strategy that I'm going to be talking about. So Phil's an amazing guy. I consider him a genius. He's one of these guys who basically tests strategies until he's, red in the face and everything's perfect before he releases it to the public. He wants everything to be absolutely perfect, and he's really good at what he does. So he's actually the mastermind behind this, and I'm really excited to have him as a business partner and to have him show me how to trade these SPY 0 DTE options in a profitable and successful way. So that's really when my trading really turned around, is when I found Phil and the SPY ATM strategy. So it's been really amazing to me. I really like the consistency, the mechanical rules, and how we emphasize position sizing and all these things over just being right in terms of the direction of the underlying. So these days, needless to say, I'm solely focused on intraday 0 DTE SPY options with that one high quality trade at 10:30 a.m. On SPY. So yeah, I am the co-founder of the Trade Alert service. If you listen to the end of the presentation, it'll give you an opportunity to join us at the best possible price that we've ever offered. So I hope you guys consider that. And let's get going with the rest of the talk here. So you guys probably know about 0 DTE. I'm going to go through some of the basic stuff just for completeness. I'm going to go through the fact that 0 DTE can be a challenge. But basically, we're going to talk about what 0 DTE contracts are, why they're so popular. We're going to talk about the benefits and the risks and how to manage the trades. Talk about the key emotional aspects of 0 DTE, because that's so important. And why you might want to trade 0 DTE SPY in particular, and why the SPY ATM alerts work so well. So first off, what are 0 DTE options? Well, since the pandemic, a new type of trading strategy really caught the attention of many active investors. It's the 0 DTE options. And for anybody who doesn't know, and I'm guessing most people do, the 0, it means 0 days, and DTE is days to expiration, so pretty self-explanatory. They expire the same day, and you're looking at minute-to-minute performance, so you're not looking at the daily chart or even the hourly chart. You're looking at a 1-minute or a 5-minute chart in general. And this little graphic just kind of shows the extreme that we're at here. So on the right, you have your 365-day expirations plus, that's the leaps. Then you have your typical monthlies, and then right on the left here, you have 0 days where it's like the same day expiration. So it's pretty high stakes, as you'll see. So why are they so popular? So that's a good question. And the answer is, it's got multiple answers here. So the first one is they're much cheaper than longer dated options. So there's really no time value left. So the options cost a lot less than the longer term ones. And on SPY, the contracts can be as low as $100 for the 0 DTE contracts at the money, which really opens it up to people that have small accounts, being able to scale in and out with multiple positions. People love these because, the main attraction is people love them because they're so price sensitive. People are looking at 100, 200, 500% gains in minutes sometimes. And that's really the main attraction, right? Is that they're cheap and they change price really, really quickly. They can rise or fall in price really dramatically within minutes, especially near the market close hours where it gets really crazy. And the cool thing is there are daily trading opportunities on SPY. So they were introduced in 2022, and you can use 0 DTE strategies on SPY nearly every trading day, which is really cool. And obviously, because they expire the same day, there's really no overnight risk. So you're not worrying about the market gapping up or gapping down or doing anything crazy overnight. So that's the main benefits, really. What tickers have 0 DTE options? Well, it started off, it was SPY, the Qs, SPX, XSP, and NDX. But just recently, they actually added on January 26th this year, so less than a month ago, they introduced Monday and Wednesday 0 DTE options on the tickers that you can see on the right there. So NVIDIA, Tesla, Microsoft, Apple, Amazon, Meta, Avgo, Google, and IBIT. And so that is really exciting. That's really exciting for people that trade 0 DTE options. And the chances are here they'll add the other days, right? They're just starting off with Monday, Wednesday, and Friday expirations. They're most likely going to add the Tuesday and Thursday as well. And the amount of volume that these 0 DTE contracts get is really exciting. And the average daily volume on SPY quadrupled over the course of since the options, the 0 DTE options were introduced in 2022. And we're probably going to see something similar on these other tickers as well. So it's going to be pretty exciting. It's going to open up a new avenue of trading. So it's kind of a big deal. So I'm excited to see how that goes going forward. There are lots of zero DTE risks, the biggest one being, or one of the biggest ones, I guess they're all kind of important, time decay. So throughout the day, basically your premium gets gobbled up as the time goes on, and you can lose value very, very quickly. It's not uncommon to see contracts going to zero just from time decay very quickly. And the sensitivity gamma is also a huge risk, so it's a double-edged sword, right? You can get really nice price movement up or down with your calls and puts, and things go great. But then you can get it in the opposite direction just as easily, right? So you can see yourself at a loss just as quickly with the high sensitivity. So double-edged sword with that one. Execution challenges, because the price moves so fast, you can sometimes just not get the fill that you wanted. So if you're waiting for a fill at a support or resistance line, for example, you might find that the price has moved away so quickly, the options have changed the price too quickly to get an ideal fill. So it's definitely a challenge. It can move faster than you can actually. So really, in short, these zero DTE options are fast to move, they're cheap, they're risky, and that's something that appeals to a lot of people, but it's not suitable for a lot of people. Maybe if you have a nervous disposition like me, it can be quite intimidating to trade these short-term options. So with time decay, how do we manage this risk, right? So there's no time left, and of course the zero DTE options lose the remaining time extremely quickly. So the problem is, unless the market moves in your favorite direction, the direction that you profit from, the option premium is going to shrink, and it can shrink to zero, and it can do it faster than you can blink, especially in the last hour of the day. You have to be really, really careful. And I'm going to talk a little bit about that in a few slides, about when to trade these and when the best time we found to trade these zero DTE options is. And so the solution to this really, though, is a quick scalping strategy which has a high win rate. So you're not sitting there waiting all day for the market to move in that right direction. The worst thing is if you're sitting there and it's going slightly up and your calls are barely making any profit just because of the time decay is taken away from your premiums, or worse, it's going sideways and you're just churning and your premiums going down and things. So really the key that we found over substantial testing was a fast strategy with high win rate obviously is going to be something that works really well. So this is the typical theta decay curve that people are probably familiar with, but it's worth revisiting here. Is on the left there, if you have options that are, for example, out 90 days from expiration, the gradient of the theta decay curve is almost flat, so you're not going to get much time decay in a short period of time in there. But if you go to the right all the way to the zero for zero DTE here, you can see how steep that curve is. It's so steep compared to when you're 60 days or 90 days out that you start to lose the value very quickly. So that's one of the biggest threats that we face as zero DTE options traders, is that steep gradient of the time value just getting eaten away as time goes on there. So it's a big difference between 0, even 30 or 60, especially 90 days. The gradient changes pretty quickly on these. So it's definitely something to be aware of when you're trading these zero DTE options, and preferably have a strategy that can combat it, right? That can actually beat time decay. The gamma is also extremely important. So this is where the options respond to the underlying price changes. And the gamma for zero DTE options is much higher than for even 10 or 20 days out. So the orange curve is gamma for at the money options at 20 days to expiration. So these Gaussian distributions. And then the 10 day is the blue, so you can see the gamma starting to go up as you'd expect. And then the green is the zero DTE gamma, so much higher gamma for zero DTE. And this is what creates the rapid price swings that you can benefit from, or you can get destroyed from, depending on how you're trading today. It can work for or against you. So the emotional aspects of zero DTE trading aren't trivial. They're significant for sure. That's because these zero days to expiration options are really your emotional challenges that you have with trading anyway, are really amplified by the fact that you have this short time frame that you have to have things working, where you're always fighting and worrying that your options are going to get eaten by time decay or it's going to go against you. So the emotional challenges are pretty extreme, honestly. It's fast-paced, high pressure, and there is potential for rapid losses. And that can really change the way you trade, right? That can really affect you emotionally. So for example, the high stress and pressure can force you to make fast, rash decisions that really aren't in your best interest at all. Of course, things like the fear of loss, it's always going to be an emotion in trading that's hard to overcome. But the fact that you could lose your entire position tends to give you the fear of loss on steroids. So this can cause hesitation, early exits, panic. So you got to be really careful. And the opposite is greed and overconfidence, because these things can move 200, 300% in minutes sometimes. Early wins that make, you're making bucket loads of cash and you're just like, wow, this is amazing. Look at this, all my trades are winning. Start to get overconfident and think that you can't lose, and that you start over risking and holding things too long. And before you know it, you've lost the position or half the position, and things aren't going in your favor at all. And of course, you have things like impulsive trading, where these emotional decisions replace the plan. So I'm going to talk a little bit about how we avoid that too. And also the adrenaline trading, where, like I said, the huge 100% winners, thrill-seeking gambling mentality takes over, just kind of takes over and overrides risk management completely. So here's a good example of people with small accounts, why they might prefer these zero DTE options. So this is a simple example on the Q. So imagine the Qs are at 349.2 and you're playing the 350 calls. So zero DTE, the cost is only $110 for a contract. The 18 days, though, are $730 for the same contract at 350 strike. So that's 7 times more expensive just to go 18 days out. So you can see why people with small accounts would be excited about the zero DTE options, right? And if you go further out to 81 days, where theta decay is even less of a problem and you think you're good, the problem is it costs you $1,600. So somebody with a small account of, say, $2,000 can't play those 81 days to expirations, whereas they could play the zero DTE 350 calls for $110, or a couple of positions on those if they have, say, a $5,000 account or something. So for small account people, zero DTE options have been absolutely game changing, and I think that's probably part of why the volume is so high on these options, is you just have so many people that can access these contracts with small accounts. It's just huge. It's one of the reasons anyway. Here's the other reason, or a real life example of a reason that people love these. So imagine you bought an at the money call on the Qs. So the same idea as before. The Qs are at 350 and you buy a 350 call, so right at the money. And now imagine the Qs go up $1, so your calls start to go up. Well, if you bought the zero DTE calls for $110 or 1.1 here, then your at the money would be about a 50 delta. So you're talking about a 50-cent increase on the contracts for $1 increase in the Q's value. So your 110 goes to 160, which is a really nice 45% gain, and just from $1 move on the Q's. And so you've paid very little for it, and you're getting a 45% gain. It's the best of both worlds, right? It's fantastic. Compare that to the 18 days or the 81 days where you're paying $730 for one. You're only getting a 7% profit for a 50-cent move on the options contract when the Qs go up $1. And the same thing with the 81 days, is $16, but you're only getting a 3% profit on that. So this is a good example of why people really prefer zero DTE trading, because of this massive percentage moves that you can get compared to the longer dated options. So just to summarize that really quickly, the pros of these zero DTE options are you've got quick potential returns. It costs a lot less than longer dated options, and they're highly sensitive to price movements, which makes making profits larger and exciting. The cons obviously are rapid time decay. The extreme price sensitivity that helps you profit can also put you at horrible losses very quickly and really freak you out. And then there's the execution risks as well, because the price sensitivity makes things very difficult to execute. So that's why we trade zero DTE SPY options. And I just want to talk a little bit more about why we really like SPY for these zero DTE options. So basically, SPY is one of the most heavily traded securities in the world, right? And basically, that leads to really high liquidity and really tight bid-ask spread. So it makes this idea of execution a lot easier than just trading on some random ticker, which makes it really good. So we have that really high volume. And of course, with SPY, you can do this every day, which, like I talked about at the start of the presentation, many tickers don't have everyday zero DTE options on them. So you can trade it every day, which is really nice. So getting those narrow bid-ask spreads and efficient execution is awesome with SPY. And of course, the SPY options are much cheaper than something like SPX options. So you can use a small amount of capital, which is really nice for SPY as well. It's not popular by accident. It really matters that we have this high volume and liquidity, and this really makes it ideal for intraday 0DTE trading if you approach it correctly with a good strategy, that is. So I want to talk a little bit about why the SPY ATM strategy works when others fail. It's a really simple, fast strategy. It's very accurate, and the trades are done very mechanically. And so a lot of people make the mistake of trading too many individual tickers. That might even be the case when these 0DTE options are becoming more popular on the Magnificent Seven, some of those ones that we talked about at the start of the talk. There's a lot of work involved with trading, and sometimes it's nice just to focus on one solid ticker, right? And so you don't have to worry about things like earning surprises, halts, company-specific news that can really destroy your 0DTE positions, because they're so sensitive to these things that it's better to trade the overall market than one ticker. So focusing solely on SPY options is the solution to a lot of your 0DTE problems. With the development that we've done, at least, shows that to be really beneficial with a very mechanical approach, and that's the key, a very mechanical approach to these things. And so most people that do 0DTE SPY options trading, they lack a mechanical system. They fall prey to these to this idea of the emotionality that just really messes up most trading strategies a lot of the time. So we preach really a mechanical system where we put in an OCO order without fail, where you put in a predefined take profit and stop loss, and then you walk away. So there's no emotions involved whatsoever. So it's very mechanical. The position sizing is really important. We preach that. Absolutely, I learned that the hard way as an early trader, that you've got to make sure you're only using a small portion of your account, especially with 0DTE. You can't really use more than you are willing to lose half of or even all of. So it's very important to position properly. And so these mechanical rules really simplify the decision making, takes away all the problems like overthinking and all the emotions that we've talked about so far. So these rules are your edge, and with them we've been able to profit really nicely with 0DTE SPY trading. So let's talk a little bit about timing. So this is a kind of an interesting part here. So you can have the same setup as somebody else, but you can have two traders. You have the same setup, and you can get completely different results depending on how you manage the trade and how your emotions and things affect that. When you enter the trade, whether it's in the morning, first thing, middle of the day, or the afternoon, with 0DTE can really change the outcome as well. So entry timing really affects the risk reward, and the option pricing is obviously time sensitive from time decay as well. So two traders can be right on that direction and still have completely opposite outcomes because of things like volatility at the market open, if somebody entered early, for example, decay from time decay, and also execution quality. Maybe they got a really horrible fill and basically it barely hit the profit target and then reversed, and they never got filled at the profit target, for example, something like that. So that's really important. The timing is something that we researched in depth when we were developing the SPY ATM strategy. And this is kind of what we found, and it's pretty intuitive, but basically the intraday market structure has like these 4 phases, right? So you have chaos at the market open, and that's what I really did wrong back in the start when I was living in Seattle. As a new trader, it's absolutely nightmare to trade the market open, in my opinion. Maybe some people can deal with it. I certainly couldn't. But there's a lot of chaos. You have a lot of craziness, high implied volatility. Things haven't settled yet. It's just crazy. So I avoid that. Mid-morning is where we found the sweet spot to be. That's when the structure really starts to appear. If it's a trending day, you start to get some really nice structure going on there. And that's really where we base the SPY ATM alerts to be, mid-morning, just early mid-morning, just where the sweet spot is. Because at midday, obviously, you get lunchtime, you have these sideways actions that just compression that really just kills the 0DTE premiums from theta decay. And so we wanted to avoid that because it's very difficult to trade when things are going sideways and just chilling out. And the afternoon is crazy. So the last hour, for example, some people love trading power hour, but for 0DTE, it's almost like gambling from my experience. Maybe some people can do it, but certainly not me. 0DTE trading the last hours, if you're okay with your position going to zero to make 50% or 100% on the position. But it's not ideal for most people. So the idea is the market has this rhythm, and so understanding when to trade is often more important than how you're trading or what you're trading. So really important to pick the right time of day and down to within a few hours is really important. So, like I said, trading the market open for me was just crazy. High volatility means your option premiums could easily be inflated. So you buy your 0 DTE options premiums at market open, and as the volatility settles down, suddenly the price of your options falls dramatically without anything else happening, and that can turn you from a winning trader into a losing trader pretty quickly. And so they also often have wide spreads and false breakouts and a lot of retail emotion at market open as well. And that's something I couldn't deal with emotionally, was the chop, the crazy change of direction. It'd go down for a bit and then it would just suddenly reverse, go back up. And it would just shake everybody out. And that happens all over with retail traders, especially trying to trade the open. Not saying it can't be done, plenty of people do it, but I just find it an extremely hard thing to do. And so the first 30 minutes look exciting, right? You see these big moves, lots of volatility, lots of profit potential. Looks back, like if you look back in hindsight, it looks really good, but when you're actually trying to trade it, it's not so easy. So I call it a trap. Like it feels like a trap to me, at least. So price discovery is still happening and liquidity hasn't fully settled at that point. So that's the main reasons that we didn't design the SPY ATM alert service to do the 0 DTE alerts at the market open. We wait for it to settle down. Position sizing, we talk about this a lot in our Discord for the SPY ATM stuff. Like this is the #1 thing that we've seen people over the years have problems with. It's the same throughout most trading, but 0 DTE is extra important because of the gamma and everything else that we've talked about and so far. So the risk per trade really matters. You want to take these base hits. The back testing and the forward testing that we've done all shows that taking these 20% gains or so consistently over being confident and thinking you can get 100% or 200% has been the way to have a profitable 0 DTE strategy. And so sizing small and just taking small wins over and over and over again has been like the key to the success of the strategy. And typically it's less than 5% of the account into the trades. So quite small, certainly not gambling. Sometimes as low as like 2% is what we recommend, but up to 5% seems to be okay as well. And like I said, most blowups are from oversizing. That's what we've seen with 0 DTE trading. Not necessarily bad analysis. You really want to just stay in the game long enough, right, for your statistical edge to actually take effect and actually get you over the finish line to be a profitable trader. So without blowing up, that's the secret, right? So what have we discussed so far? Well, we talked about why 0 DTE is popular. I hope everybody understands that. And the risks with 0 DTE trading, there's substantial risks. Why most 0 DTE strategies fail, or they're just too much work compared to the SPY ATM alerts one. Talked about market timing, about trying to wait until the market settles down, not trading at lunchtime because you're just going to get killed by theta decay. Talked about position sizing, which also leads to risk mitigation as well. So I've talked about SPY ATM informally, but I really want to introduce it kind of formally now. So this is a system that has been, we've been working on this for years and years, and Phil even longer than that. So he's been working on it for a long time and testing this thing until he's blue in the face. So really, we asked ourselves, what if all you needed was a single trade alert at 10:30 a.m. every day, and you can make 100% or more in your account in a year? And obviously, it's not guaranteed. It worked for the last couple of years in a row, but who knows what 2026 will hold. So I just want to make that clear, as they're not promising any guaranteed 100% returns in a year or anything. It's just that's the data that we currently have. I'm showing that. So if there's a system where all you had to do was place a trade, you get the alert, you get everything you need just to go in there and place a 0 DTE trade without any emotions and get things just going perfectly. That sounds like a pretty good system, right? So the SPY ATM alerts solves many of the 0 DTE problems that we're just talking about. So first of all, it is a fast trade. I call it 20% in 20 minutes, because that's the average. But often it's 20% in 5 minutes. So we're just going for that base hit. We're not looking for 100% or anything. We're just looking for a 20% profit, which is still really nice. And that speed is what minimizes the theta decay. It's rare that it goes much over 20 minutes. I've seen some run to 30 or 40 minutes, but often they're done by 10 or 15 minutes in. So roughly 20 minutes, plus the name sounds cool, right? 20% in 20 minutes has a nice ring to it. So the trade is entered at the same time mid-morning, so we get that market stability where trends are starting to form, and you're avoiding all that chaos at market open and the quietness in the middle of the day, and then the craziness at the market close. So mid-morning, 10:30 a.m. Eastern time for that market stability. And then we really preach this like mechanical execution with these well-defined rules, and you'll see that in the next few slides. I'll show you some examples of trades. And so we have a really high win rate with this strategy. It's about 80% over 500 trades, so significant data set. That's what we're really looking for. So the trade direction is determined by predefined proprietary logic, which was developed by Phil over years and years. And it's fully algorithmic, not discretionary in any way. It's statistically profitable over a large sample size, like years of trade data. And it's very emotion proof if you do it properly, like we preach. So you can just imagine kind of not guessing, not chasing, not letting your emotions go crazy like I did in Seattle when I was a new trader, not hesitating, just executing that predefined plan with complete calmness and confidence. So here's an example of a SPY ATM trade alert. So on the left there, you can see this is from our Discord group. And so at the top, SPY ATM, it was alerted at 10:30 Eastern time. It was this particular day in January, it looks like. It was a call alert. So SPY was at 693, so you get told what SPY is at, which is not that helpful, but it's on there. And then you have the orders that you're supposed to put in here. So you're buying the 693 call in this case with an entry of 119 or as close to that as you can get. And then you have a take profit of 143, which is a 20% increase in the price, with a stop loss at 0.72. The stop loss gives enough room for these to work out. It's been tested thoroughly and found to be the best, give the best results. So yeah, so it's as simple as that. You just put in an OCO order for those numbers, and you can literally walk away and just let this work out, which takes away all those emotions that cause all the problems, or a lot of the problems that I was talking about earlier. So it's an amazing system. It looks for alignment, not prediction. It looks at things like institutional money. It looks at price action, market participation, and when a set of predefined criteria are met and confirmed, it prints this alert out for us and is ready to go. So when the conditions are mixed, it doesn't do anything. It avoids forcing a bias in any way. So there are occasional skip days, but some weeks it's every day. Seems to, for some reason, we're not really sure why, it seems to skip Mondays a lot. So Mondays tend to be skip days in general. So what is SPY ATM alerts for? Well, it's for anybody who's been listening to this talk so far and thought to themselves, well, that sounds like a better way to trade than just than letting my emotions rule me and just losing money. A lot of people lose money trading 0 DTE SPY options. So if you want a mechanical rules-based approach with a high probability directional system, this is definitely for you. If you want something where you're around at 10:30 Eastern time, and rather than just randomly getting an alert throughout the day, like in the middle of the day when you're working or something, this could be for you. If you're a busy professional who doesn't want to be glued to the screen all the time, this is probably for you. Traders looking for just a single in and out trade instead of what I call crackhead day trading, where you're basically just scalping in and out all day and it's exhausting and you end up with a bit of profit, but not nearly enough for all the work you did. Just looking for a high probability single in and out trade. This is an amazing system for that. And so it really is for people who value that defined risk, clear exits, clear entries, and consistency over home runs. Sure. So if you only have about 20 minutes a day, you just want to do a focused, intentional process of trading, then this could be something that you might be interested in checking out. So here's some testimonials that we had recently. Zig Price is a beginner trader. He was struggling with a small account. He tried 0 DTE options before, hadn't had any luck. But he had to say this. He said, SPY ATM is easy enough to grasp, but open enough to tailor to your own strategy. I've actually told him not to do that because it's better if you execute it mechanically, but he does it anyway. If all you want is set and forget alert every day at the same time with a high success rate, this will fill that easily. If you want something that you can develop a strategy around to adjust to your own risk level and make your own, this can also definitely fill that role. It's scalable. It has 18 months of backtested proof. It's a lot more than 18 months, but I don't know where you got that from. And it just works, which is right. It does work. So he said he tried a dozen services over the past years. It's by far the most competitive and easy to implement and adjust to. So you show up, place the orders, and make money. Now, disclaimer there, that's not always going to be the case. It just was his experience when he wrote this testimonial last year. Lance has had a phenomenal time with the SPY ATM system. He grew his trading account 78% in 6 months. So this is what he had to say. SPY ATM has been a great service for me. I started with a $10,000 account in May last year. I've taken out profits of $1,811 and $3,000 already. Currently have a $12,950 account balance with a total profit of 7778 or 78%. I like the ease of entering the alerts, and I'm going to set time when the alerts come in. I highly recommend using the SPY ATM system to make 0 DTE profits. So he's had a great time. He actually sent me some data, which is right here. And this is really good when people send you data, because you're not just relying on your own data. You actually get data from subscribers and people involved with the system. So you can see this one again is time along the bottom axis that starts in May 2025. And you can see the profits on the left from his $10,000 accounts going up nicely with time. Little drawdown halfway through in August there. But overall, it's almost an exponential curve there. Looks like it, at least. So he's done an amazing job and followed the rules quite well. The plot looks similar, if not slightly better than the ones that we did with our small account test small accounts I showed earlier. But 80% since May 2025 until November, when he gave us this data, was just fantastic. Really, really fantastic to see that from somebody following the system. So like I said, 20% in 20 minutes is the motto. It's one alert window, 10:30 Eastern time, so you have to be available to do it then. It's a simple call or put, so there's no fancy strategies at all. There's no spreads or straddles or anything like that. It's just simple calls or puts. So it is directional. You get the entry and the stop and the target. You get sizing guidance on, from experienced traders that have traded this system and other systems for sometimes 20, 30 years. There's a lot of very experienced people in the chat room. So that's what subscribers receive: clear rule-based trade setups. There's no guessing and no overtrading. We really preach that, as you can probably tell from this talk. I mean, going through what we actually really think about a lot here. So I thought I'd show you today's SPY ATM trade. So I just added this earlier. We did a trade earlier today. So it was a call alert at 10:30 this morning Eastern. You see on the left here, it was a 687 call. Entry price was 202. Take profit was set to 242. So we all just put our OCO orders in for those and just set back. You can see on the right what actually happened. This candle here was when we entered the calls. There was a slight pull down. This is on a 1 minute chart. And so there was a slight pull down for 4 minutes, and then it just went straight up for 2, 4, 6 minutes. So this was a 10-minute trade, and we exited up here and it hit our profit target right up here. So we exited our 0 DTE calls right there. So really nice trade, really simple, and barely any drawdown. I mean, there was a little drawdown, but it didn't stop out. And this is a typical trade, I'd say. Sometimes it goes straight up, sometimes you get a little pullback like any trading, but this one was quite beautiful after the first few minutes. Worked out really, really nicely. So it's just a reminder of the tests, the results from the last couple of years, that 124% in 2024, the 102% in 2025, using this one trade every day. So you imagine if you were using a larger account. So I've mainly talked about small accounts up to this point because of the fact that 0 DTE is so good for small accounts. But you can just as much, use a large account. We have members that are using very large accounts, people using $10,000, $20,000, $30,000 per position. So if you're using $10,000 per position, on winning days, you're making $2,000 every day. So obviously there'll be losing days, but 80% of the time you're going to be making $2,000 a day on that $10,000 position, which is absolutely phenomenal. It's really nice. It's fantastic. And like I said, Lance doubled his account, nearly doubled his account in 5 months. So this makes the system, in my opinion, I actually review systems as well. So I help run SPY ATM alerts, but I also review other people's systems as well. And so I've had a long history of testing out systems and reviewing them. And this is by far the best I've ever come across in terms of value for money. I've seen people charging $2,000, $1,500, $2,000, $5,000, even $10,000 for systems like this that are actually inferior in a lot of ways and don't have the same data. A lot of times they don't even have a track record or just list a bunch of trades. They don't actually show real data over years like this. So to me, that transparency is absolutely important when I'm involved with a product like this. So that's been the benefit of working with Phil on this. So for today, and certainly we're not going to charge anything like that for the opportunity to come and join us. We're actually doing a very low cost monthly subscription, just $150 per month, or $300 per quarter, or at $999 annually. So with this, you get the active Discord community, and that's actually one of the best parts of it, I'd say, because you have people like Phil and Lance and myself and a bunch of other really experienced traders in there helping you to stay on track, to really help keep people on track with this. And that is, like I was talking about, can make all the difference. It can be the difference between being a losing trader and a winning trader. And so that is a really important part of the service. And so, of course, you get those daily alerts that are published on Discord, in the Discord channel, so you can get them push notifications to your phone. And they come out at 10:30 every day. And it's basically just something that people look forward to every day to go in there and take that trade. So if you want to join, all you need to do is scan that QR code that you can see on your screen. Hopefully it's shown properly. And just the link will come up to the landing page where we've got this special deal for you guys, for people that attend the MetaStock conference. The URL is also down the bottom there. So it's www.stockalertsreview.com/SPY-ATM. So hopefully you guys can check that out. And I really highly recommend this service a lot. Like I said, I've reviewed so many of these over the years, and this is by far the best and most consistent. It's also had some of the best reviews in terms of polls with subscribers. We poll subscribers regularly to make sure that they're actually making money and things, something that a lot of other services won't do. Because the truth is a lot of services aren't profitable in the long term. But this one actually is. So with that, that's really all I've got to say today. Hopefully you enjoyed the talk, and I'm open to taking any questions.
We do have a few questions. Rick wanted to know, the alert shows contract size. Is that based on your account size? Thanks for the question, Rick.
Yeah, so right here, so you take one this is just guidelines. Obviously, this isn't actual financial advice. This is just what like Phil and me and Lance would do in terms of our contract position sizes. But yeah, so we do give some advice because it is key. People always oversize with these things. So one contract per account if you have up to a $5,000 account. It might even be too aggressive if you have a $2,000 account, right? So I would say you've got to do what you think is right for your account. But that's really based on your own risk tolerance. You can try going more aggressive if you want. We've just found that these are numbers that work the best for zero DTE SPY trading. But it's up to the subscriber to do what they think is best.
A couple of questions around SPX as opposed to SPY. Stephen wants to know if you could use this on SPX so you can get the 1256 tax.
Yes, that's right. You can, and people do. So that's something I didn't really mention much in the presentation. People trade both SPX and ES and the futures. Basically, there's quite a few people that use this for prop firm challenges, things like that. So they'll trade the futures on it, and people do trade SPX on it as well. So they just change the orders to fit. So yeah, you can definitely do that.
Rahul wants to know if you can use it for other markets like the Qs.
Right now, I mean, because the Qs follow SPY, right? It's very closely correlated. You probably could, but we're not really advising that at this point because they don't always do it, right? So there can be discrepancies in the two. So we don't trade the Qs with it. I don't think anybody I know is doing that. But it's technically, I guess, it's possible to do it. But it's designed for SPY, and it's something that I should point out is the reason it's so specific is Phil and I really believe that focusing on one thing at a time. if somebody has an indicator that works for everything, it's not always a good sign, right? You want to be super focused on tickers, and so that's why it's just focused on SPY at the moment. Yeah, along with the other reasons I gave in the top.
Hugh is asking, what is your website? Is it stockalertreview.com?
Yeah, so that's the confusing part. So that's actually stockalertreview.com is actually my review website. So it's just the shortened URL that I put the landing page on. The Discord's called TradeLab. We really just have the landing page that you can get to if you scan that QR code or you go to that URL at the bottom of the page. That's a shortened link that I just use to fit everything nicely on the page from my own website. So the Discord's called TradeLab, and it's really just a single landing page at this point, just a simple ClickFunnels landing page for ease of use. We're building a new website at the moment, so we really just have our simple landing pages at the moment.
Sam asked a question, and we're not allowed to answer it, but he wants to know what broker you recommend. And we're not allowed to recommend a broker unless we're licensed. So I don't have a recommendation around that for you, Sam. Rahul wants to know, what type of a time frame do you want to use? 1 minute, 5 minute, 10 minute? What works best for this strategy?
The 1 minute generally tends to work the best. So it's based on 1 minute price action, and the 1 minute has to be used because sometimes these trades are 3 or 4 minutes long. So you won't get a full candle in a 5 minutes. So they can be quite quick. So yeah, 1 minute time frame.
All right, that's the end of the questions. So I've got the link linked in the chat, so you can just go and actually let me check YouTube just in case we have some over there. Don't want to miss those out. Elsler Peak, I'm sure that's his real name, wants to know how many funds do you need to trade this?
Yeah, so that's a good question. We recommend a minimum of $2,000 just so that you can position safely, given the price of the contracts. You can use less, but really the minimum we recommend is $2,000 minimum.
And then Rahul wants to know, and when will the discount deal be active until? How long do they have until they need to sign up for this?
I mean, we can keep this active till the end of the conference, right? So
okay,
yeah,
a couple days.
Yeah, sounds good.
All right, very good. That is, again, now I'm sure it's the end of the questions.
I think so. There's quite a lot of questions. That's good. All right, well, thanks, Jeff.
You're welcome. Thank you for spending some time with us. I'm going to go ahead and grab the camera or the control here and share my screen. Russell, thank you very much for spending some time with us. I thought that was really interesting. I'm interested to check out the alert service too now.
Great. Thank you, Jeff.
All right. Thank you. We'll go ahead and kind of wrap up, finish everything out right now. I do want to thank all of our presenters, up till now. I was going to say, I mean our sponsors, but I should thank our presenters too. They did a great job. I think the conference has been going great, and I hope you agree with me. I hope it's been beneficial. I hope you've learned some things, and I hope it's been helpful. I want to thank our sponsors. We've got Stocks and Commodities Magazine. You can find out more about them at thetraders.com. We've got the Traders Forum, thetradersforum.com. You can join that for free. You can come chat with us, learn about technical indicators, learn about technical analysis, all that kind of stuff. Thetradersforum.com. All the offers that we talked about throughout the event this week, you can find them all, including that extended trial at metastock.com/conf-promo. I'm looking at the slide like I need to remember the websites. You can give us a call, 800-882-3040, and you can chat with us at metastock.com/sales-chat. I'm confident if you try MetaStock, it's going to be helpful for you. I use it every single day, and I love scanning with it. I love the tools that are available. It's going to be helpful for you. That's why it's been rated #1 32 years in a row. I want to thank, while I'm thanking people, I want to thank you for being here. Again, I hope it's been valuable. I hope it's been helpful. I look forward to seeing you at 10 a.m. tomorrow, where we kick off with a good friend of mine, Rahul Mohinder. Thanks for being here, everybody. Stay healthy. Stay well. I'll see you tomorrow. Bye.